when you talk about the name is small dealers, but forget about the name. Technically, you don't have that chapter anywhere in your ICA material. We have merged two things. We have taken one part from your registration chapter, which is based on your threshold limit for registration, 40 lakhs, 20 lakhs, and 10 lakhs, basically section 22, read along with notification 10 bar 2019 CT. And second part is your composition scheme, section 10. Section 10. Now, understand when you talk about any of these concepts, be it your threshold limit for registration or composition scheme, one term will be highlighted for sure. Aggregate, and I bet the number of times ICA is asked questions on aggregate turnover. Even when you compare your RTP, MTP and exam paper, you will not find any such question otherwise. A lot of times questions just have been asked to calculate, only to calculate aggregate turnover, only and only to calculate. So one by one will go. I'll ask question, you have to tell whether included or not included. Right, one by one. Aggregate turnover. I am working in Tamil Nadu and Maharashtra. Now, whether aggregate turnover is only Tamil Nadu sales or Maharashtra sales or Tamil Nadu sales plus Maharashtra sales. Louder. Aggregate turnover is pan India. Aggregate turnover is, so your aggregate turnover is always worked out on the basis of pan India. So I have to add sales of Tamil Nadu plus sales of Maharashtra. Correct? Second, in Tamil Nadu, I have some exports. Will I count in aggregate turnover? Export is also a sale, I'll count. In Maharashtra, I have some exempt sales. Exempt, GST is not there. Will I count it? Yes. In Tamil Nadu as well as in Maharashtra, I am dealing with alcoholic liquor for human consumption. It is not inside GST, it is non-taxable supply. So will I include it? Louder. Emotion. I'll include it. Exempt supply includes non-taxable supply. Though I am not going to pay GST, but I will include in my, I am not going to pay GST. You are right. It is permanently outside GST. I have some petroleum products, 5 notified petroleum products. Will I include it? Will I include it? Yes. So I am going to include all the supplies, whether it is my export supplies, because it is also one of my interstate supplies, whether it is my local sales or interstate sales or export sales. There are only 3 sales possible. Tamil Nadu, outside Tamil Nadu, export, outside India. Everything I'll include it. And I'll also include whether the item is taxable or exempt or even, why? Exempt supply includes. So even I will count alcoholic liquor for human consumption, I'll count 5 notified petroleum products. 5 notified, right? 2 bouncer questions, which I see rarely asked, but they have tested it. I transfer a stock from Tamil Nadu to Tamil Nadu branch. One Tamil Nadu branch to another Tamil Nadu. Will I add it? Will I add it? Second question. I transfer a stock from Tamil Nadu branch to Maharashtra branch. Tamil Nadu to Tamil Nadu branch. Tamil Nadu to Maharashtra branch. Will I add branch transfers? Will I add branch transfers? Tamil Nadu, yes or no? Tamil Nadu, Maharashtra. Why? Deemed supply. Tamil Nadu, I will not add. Because it is not at all supplied delivery challan. But Tamil Nadu, Maharashtra? Yes. Because it is deemed supply. Because it is. So you are trying to find out value of all outward supplies. Value of supply includes deemed supply. Supply includes. So don't think emotionally, sir. Tamil Nadu, Maharashtra, then Maharashtra sale would have been there. This is already included. Let it be. From Maharashtra, when it has been sold, this is also part of turnover. Tamil Nadu, Maharashtra is also part of turnover. So branch transfer within the same state having same GST number, not counted because it is not supply. Neither actual supply nor deemed supply. But if it is Tamil Nadu to Maharashtra, should you add it? Final twist. This company is selling an item which is taxable at RCM, which means it will not pay, customer will pay. Will it be included in this company's turnover? Or will it be included in customer's turnover? I repeat, I am this company. I have presence in Tamil Nadu and Maharashtra, and you guys are my customer. I am supplying you something which is taxable under. So who will pay? I will pay or you will pay? The supplier will pay or recipient will pay? Whose turnover? Supplier or recipients? Supplier or recipients? Supplier or recipient? So it will be included in my turnover. Will it be included in your turnover? No. So it is clarified that it will not be included in your turnover. They have said it will not be included in your turnover. It is your inward supply. So indirectly it means it will be included in my turnover. It will be included in my. We are done with all the types of questions of aggregate turnover. What I did? I just gave two simple examples. Started with simple things. Completed with them. Started with what? Local sales included. Started with what? Whether you will take only Tamil Nadu sales or Maharashtra sales? Tamil Nadu plus Maharashtra. Local sales of Tamil Nadu? Local sales of Maharashtra? Yes. Interstate sales? Yes. Export sales? Yes. Taxable item? Yes. Exempt item? Yes. Non-taxable item? Yes. Actual supply? Yes. Deemed supply? Yes. RCM? Yes as well as no. If you're asking from the angle of supplier, if the question is from my angle, it is included in my turnover. If the question is from your angle, so you have to look. Just don't look at RCM and remove it. So you have to see. Assume it is a scenario where I am purchasing something which is taxable under RCM. Will it be added in my turnover? No. It will be added in my. So both. I may purchase something on which I am paying RCM, it is not included in my turnover. I am selling something which is taxable under RCM, it is included in my turnover. So look at the question from whose angle it is being asked. That's it. This aggregate turnover is used throughout GST. And why I have taken in this chapter is also using aggregate turnover. Whether it is threshold limit of 40 lakhs, 20 lakhs, 10 lakhs or composition scheme of 150 lakhs, 75 lakhs or 50 lakhs, you always go with aggregate turnover. You always go with aggregate turnover. Now when you talk about the threshold limit of registration, what is the limit for registration? What is the limit for registration? It may be 40 lakhs, it may be 20 lakhs, it may be, which should you see, state or pan India? No. Eligibility is pan India. When you are taking registration is state. Step number 1 is aggregate turnover, all states turnover. Step number 2 is, okay, have I crossed that limit? Then I have to take registration. When you are taking registration, it is for each state. Then it is separately. So step number 1 is not for each state. Step number 1 is all together, pan India. Supposing if I am working in 3 states, when I am checking my turnover limit of 40 lakhs, 20 lakhs, 10 lakhs, I will not see it independently. Totally, it should be up to 40, 20 or 10. If I am within it, I need not take registration in any of the 3 states. If I am crossing that, I have to take registration in all the 3 states separately. All the 3 states. Step number 1 is eligibility. That is not state based, it is pan India. Step number 2 is taking registration. That is each state. That is each state. So what is the limit? How to decide the limit? Now let us remember the story which you have taken it partially. Apni politics, number politics, our politics. Apni politics can be summarized. Sikkim, Apni politics is your Arunachal Pradesh, can be summarized. Sikkim, Uttarakhand and Meghalaya into 3 simple things. Tripura, what are the 3 simple things? Money, land and Ram. Manipur, Nagaland and Mizoram. And when you are a small person, when you are in your student's age, politics should be time pass for you. Politics should be time pass for you. Telangana and Puducherry. So how to remember the special states? Apni politics can be summarized. Apni politics, Arunachal Pradesh, summarized. Sikkim, Uttarakhand, Meghalaya into 3 things. Tripura. What are the 3 things? Money, land, Ram. Tripura, Manipur, Nagaland, Mizoram. And when you're small, politics should be time pass. Telangana, Puducherry. Now, what is the essence of politics in India? Tripura, that is three things, money, land, ram. So for Tripura, final summary is only these 3 points. Money, land, ram. Three things. Tripura, money, Manipur, land, Nagaland, Ram, Mizoram. For these 4 states, whether you're dealing only with goods or only with services or goods or services, the limit is 10 lakhs. Within the story, the main part was Tripura, Manipur, Nagaland, Mizoram. For them, answer is, what are the balance states left out? Arunachal Pradesh, Sikkim, Uttarakhand, Meghalaya, Telangana, Puducherry. For them, the answer is always whether they are dealing only with goods or services or both goods and services. Whatever is left out, you remove all these 10 states. Arunachal Pradesh, Sikkim, Uttarakhand, Meghalaya, Telangana, Puducherry, Tripura, Manipur, Mizoram, Nagaland. You remove all these 10 states. Any other state, including Andaman Nicobar Union Territory, any other state or union territory, if you're dealing only with goods, 40 lakhs. And if you're dealing with services, goods and services, goods and services. So now you need not remember a lot of things. Just a simple story will help you out. Tripura, Manipur, Mizoram, Nagaland. Anything you do, 10 lakhs. Arunachal Pradesh, Sikkim, Uttarakhand, Meghalaya, Telangana, Puducherry. Anything you do, 20 lakhs. Any other state, only services, 20 lakhs. Good services, 20 lakhs. Only goods. Any other state, only goods is. And when you see this 40 lakhs, there's one positive side and there's one negative side. What is positive side? If you're dealing with only goods plus only one service, which is interest on loans, which is interest on loan, which is exempt. So normally 40 lakhs is available for only goods. But if it is goods with interest on loans and deposits, which is exempt, still you can be at 40 lakhs. Still you can be at, see normally, if I tell goods plus service, what would have been your answer? But here, the service is not any other service. Service is interest on loans or deposits. That is allowed because everyone will be depositing in fixed deposit or bank. And everyone in India will have one income as interest on loans or deposits. So goods with interest on loans and deposits, still you can enjoy. Still you can enjoy. Got that? So normally only goods 40 lakhs. Goods plus service 20 lakhs. But if it is goods plus interest on loan, if it is goods plus interest on loan plus other service, 20 lakhs. Then no, you cannot have. Right? This is positive side. That's on negative side. Though if you're dealing only with goods, but if you're dealing with notified items, what are the notified items? Your pan masala, tobacco, ice cream, and certain building materials. Certain building materials. Pan masala, tobacco, ice cream, and certain, you not remember what are the building, certain building materials. Then, though you are dealing only with goods in balanced states or union territories, even then you cannot enjoy 40 lakhs. You will go down to 20 lakhs. You will go down to, you are understanding this? If what is the criteria for 40 lakhs? You should not be there in 10 states, plus you should be dealing only with goods. Now, what is the plus side of it? Normally, goods and service means 20 lakhs. But goods plus interest on loan, you can still be at 40 lakhs. Normally, only goods means 40 lakhs. But if you're dealing with specified goods, pan masala, tobacco, ice cream, building material, forget about 40 lakhs, you come down to 20 lakhs. Simple? Simple? This is all simple when you all talk about one state. When you all talk about one state. What if you talk about multiple states? I'll take an example and we'll wind this up because this has been repeatedly asked. Time and again this has been asked. So I'm taking an example which is easy to remember. TTT. Tamil Nadu, Telangana and Tripura. Right. I'll keep giving the details. You keep giving me the answers. If they're all dealing only with goods. Tamil Nadu is the state which has 40 lakhs limit. Telangana is a state which has 20 lakhs limit. Tripura is a state which has. I have given an extreme question which will take care of everything. So when you are talking about these three limits, which limit to take? No. When you have brothers and sisters and you are fighting, who will win? The elder brother or sister or the youngest one? Louder. Youngest one will always win. So what is the limit? What is the limit? So always first you have to decide the limit. Assume that their turnover is 5 lakh, 10 lakh and say 8 lakhs. So what is their actual turnover? What is your limit? What is your aggregate turnover limit? What is your threshold limit? What is your aggregate turnover threshold limit for registration? Louder. What is your actual aggregate turnover? Should you take registration? When you have to take registration, you have to take in Tamil Nadu, also in Telangana, also in. That is not together. That is separately. Clear? Clear? But if I change this and if I tell that Tripura is dealing only with exempt supply or non-taxable supply, then Tripura anyways is going to get zero revenue. Tripura tells you don't count down for me. Because of me, you have come down to 10 lakhs. Now please don't come down for me. So what will be the limit? What will be the limit now? So what is the actual aggregate turnover? 23? Should you take registration? Yes. Tamil Nadu, Telangana and Tripura. So you should take registration in all the three states as per section 22. But section 23 will come. Section 23 will come Tripura. Actually answer is right. You should take registration in all the three states. Tamil Nadu, Telangana and Tripura. This is the first answer which you have to explain. But then the later part you have to explain. Section 23 tells that if in a state you are dealing only with exempt supply or non-taxable supply, don't take registration. So step number 1, you have to take registration in all the three states because you have crossed the limit of 20 lakhs. Step number 2, in one state you are dealing only with exempt supply or non-taxable supply, don't take registration. Don't take, because you are not going to pay a single paisa GST to Tripura. So that is not as per section 22, that is as per section 23. That is as per section 22 answer is take registration in Tamil Nadu, Telangana and Tripura. Section 23 relaxes Tripura. Section 23 relaxes, and that's the logic because you are not going to pay any GST. So when you are explaining, you have to explain in two parts. So as per section 22, your threshold limit is 20 lakhs and your aggregate turnover is 23 lakhs. Therefore, you are required to take registration in Tamil Nadu, Telangana and Tripura. However, as per section 23, if in a state you are dealing only with exempt supply or non-taxable supply, you are not required to take registration. Therefore, in Tripura state, you need not take registration. Finally, you have to take registration only in Tamil Nadu and Telangana. Clear? If I change this question and if I tell in Telangana also you are dealing with only exempt supply and non-taxable supply. See, why have you come down to 10 lakhs? Because of Tripura. Tripura is telling that I am least bothered. So please go up 20 lakhs. Now Telangana is also telling that I am least bothered. Anyways, no one is going to pay me any revenue. No one is going to be giving me any revenue because I am dealing only with exempt supply, and even if I force them to take registration, I am not going to get a single paisa revenue. You please go up. You please. So what will be the limit now? What will be the limit now? 40 lakhs. Now what is the actual aggregate turnover? Should you take registration? No registration in Tamil Nadu, no registration in Telangana, no registration in Tripura, no registration in. But if I change this and if I tell that one of the items is pan masala, you're dealing with 100 items in Tamil Nadu, one of the items is, then again it is, what is your actual aggregate turnover? Should you take registration? So as per section 22, you have to take registration in Tamil Nadu, Telangana and Tripura. But 23 will tell that please don't take registration in Tripura and Telangana because you're not going to pay a single paisa revenue. Don't take registration. Don't take. But if I change this question and if I tell that it is not dealing with Pan Masala, it is having goods plus interest on loan. Again, the limit will go to, what is your actual aggregate turnover? Should you take registration? No registration in Tamil Nadu. No registration in? No registration in? Fine. Can I keep changing it? If I tell that along with interest on loan, there is other service, I can keep playing with it. Now, my job is over because I have made you go through the same question, starting with 10 lakhs, then 20 lakhs, then 40 lakhs, then again, I can keep changing it. Clear? Clear? You are prepared for any type of questions for registration by ICAI. Now you know how to deal with it. But step number 1 is 22. 23 will come later on. And for 23, okay, final thing. Right, you are dealing with goods plus interest on loan plus services, but all of them are exempt supply. You are dealing with goods, which is exempt. Interest on loan, by default it is exempt. Other services, which happens to be exempt. So what is the limit now? 20 lakhs, because goods plus interest on loan plus, so limit is 20 lakhs. But what is the actual aggregate turnover? What is the actual aggregate turnover? Should you take registration? Yes, in Tamil Nadu. Yes, in Telangana. Yes, in Tripura. But 23 will tell. You are not going to pay a single paisa revenue. Don't take registration in Tamil Nadu. Don't take registration in, because in any of the state you are not going to pay any revenue, because you are dealing only with exempt supply or non-taxable supply. Clear? Clear? This can keep changing. That's everything about your 20, 40 and 10 lakhs. Everything about your limit of registration with practical understanding, not just theoretical understanding of what is 40 and when it is 20 and when it is 10. No. Because you might remember 40, 20 and 10. But if you don't know how to apply it, it is of no use. All the questions of ICAI will be a bouncer for you. Now you are prepared for any type of question of ICAI, and you know ICAI keeps changing it. They'll give one question, then they'll ask what if. Then they'll ask, what if Mahadev Enterprises was doing so and so? What if Mahadev Enterprises was doing so and so? Now you are prepared for that. I also gave what if. Starting with one first question, then I changed. What if? What if? What if? So that what if will keep changing the answers. That what if will keep changing the answers. Right. So that is all about it. And please remember, this limit of 40 lakhs, 20 lakhs, 10 lakhs is relevant as long as you are not registered. Once registered, forget about it. Once registered, forget about it. I have started my business. For some reason, some foolish consultant has asked me to take registration. I have taken registration. Should I pay GST? Yes. Once registered, pay. Then what about that 40, 20, 10? Not relevant for you. Once registered, forget about it. The limit of 40, 20 lakhs and 10 lakhs is for registration, not for payment. Once you are registered, the significance of 40 lakhs, 20 lakhs, 10 lakhs is of no use. You have to pay GST. You have to pay. So a company, newly formed company has applied for GST number. It is not having no turnover. Can it take the benefit of 40, 20, 10 lakhs? No. It has registered. Please pay GST. Please pay. So once registered, this is of no use for you. One final question. Let us see that are you understanding what this concept is all about? This limit of 40 lakhs, 20 lakhs and lakhs, you should see of current year or previous year? Current year or previous year? Current year or previous year? Louder. Louder. There are few who said previous year. So the previous year answers were equally loud in the beginning. Previous year is not the right thing. It is current year. We saw previous year aggregate turnover when we saw your exemption and RCM. But for what? It is not for the person who's taking registration. It is for the other person. If you are my client and I have to decide whether you are a small business entity or a big business entity, I cannot have the data of your current year turnover because it is still running. I'll take the base as previous year turnover. It was not for you to take registration. It was for me to decide whether you are a small business entity or a. So all these turnovers are of what? Current year. They are all of what? Current year. Now talking about your composition scheme. When you talk about a composition scheme, there are two types of composition scheme. One normal, one special. Normal composition scheme is 150 lakhs and 75 lakhs, and special composition scheme is always 50 lakhs. So special composition scheme is addressed in section 10(2)(a), and the limit is always any state. The limit is always 50 lakhs. So special composition scheme, you go when you are not eligible for normal composition scheme. Normal composition scheme, the limit can be 150 lakhs and 75 lakhs. So normally the limit is 150 lakhs. When it will be 75 lakhs? Remember the same story. What was the story? Apni politics, Nama politics, that is Arunachal Pradesh, Apni politics can be summarized. Sikkim, Uttarakhand, Meghalaya into three things. Tripura, what is that? Money, land and Ram. Manipur, Nagaland and Mizoram. Now you are not very small person. You have grown up. For very small person, politics would have been time pass. Now so it is no more time pass. It is no more, which means Telangana and Puducherry will come back. Telangana and Puducherry will come in 150 lakhs. Now Telangana and Puducherry will not come here. Now you have grown up. So Telangana, Puducherry is 150 lakhs. But all the other states, Arunachal Pradesh, Sikkim, Uttarakhand, Meghalaya, Tripura, Manipur, Nagaland and Mizoram will all come in 75 lakhs. Will all come in 75 lakhs. Clear? Clear? TP. Now it is no more time pass. Very small person, it was time pass. You have grown up. So it is no more time pass. If I tell Telangana, what is the limit? Puducherry, Tripura, all these other states will be 75. But if I am working in Tamil Nadu and Tripura, 75. And here there is no going back. Answer is 75. Again, you cannot go up and down. Simple. Tamil Nadu, Tripura means it is, you will go with lower limit. 75 lakhs. Clear? Clear? When it is normal composition scheme. When it is, now you will ask a question, sir. Special composition scheme, you don't see the states. For any state, it is 50 lakhs. Normal, depending on the state. In that story, 75 lakhs. Apart from that story, 150 lakhs. Okay. But when normal and when special? When is normal? You go for normal composition scheme when you're dealing with goods, restaurant, outdoor catering and your service. You're dealing with goods, only two services are allowed. Restaurant and outdoor catering services. Restaurant and outdoor catering services plus other services can be there, and we have discussed the limit for other services. What is the limit for other services? Other services should be there up to 10% of previous year state turnover or 5 lakhs, whichever is higher. Whichever is higher. So if I am talking about a trader, normal composition scheme, special composition scheme. Normal or special? Trader. Trader of goods. Manufacturer of goods. Restaurant sector. Outdoor catering. Outdoor catering. Normal. Trader plus small services. Small means limit, within the limit. Louder. Manufacturer of goods plus small services. Restaurant, outdoor catering with small services. Only services. Chartered accountant. Special. Or it is goods plus services, but the service is not up to, it is more than the inner limit. When I tell it is more than the limit, it is more than 10% of previous year state turnover of 5 lakhs, whichever is higher. So we are talking about a chartered accountant, normal or special, engineer, a coaching class academy. Got that? If you are talking about a mechanic shop, mainly service, goods will be there, but whether service will be within the limit or more than the limit. What is the major portion for mechanic shop? Louder. புரியுதா? புரியுதா? Trader of goods, normal. Manufacturer, normal. Restaurant outdoor catering, normal. Trader, manufacturer, restaurant outdoor catering with services which is very small, normal. Only service, special. Goods plus service, where service is more. Service is not small, service is big. Services is, then it is special. Then it is special. Are we guys clear with this understanding? Are we guys clear with this understanding? Right. So when you go for normal and when you go for special. When you go for normal scheme, normal composition scheme, and when you go for special composition scheme. And the conditions are different because when you want to go for normal composition scheme, your previous year aggregate turnover should be up to 150 lakhs or 75 lakhs. When you want to go for special composition scheme, your previous year turnover should be rather it's all about exit. Sorry, here this is eligibility criteria. Your previous year aggregate turnover should be up to 50 lakhs. And one more thing that I have said you can go for special composition scheme only when you are not eligible for. So that point I have said at the beginning. So first you have to check if you are not eligible for normal, then think of special. Then think of special. Are we guys clear with this understanding? Are we guys clear with this understanding? Now, please understand there are certain conditions for entering the composition scheme and exiting the composition scheme. And people mix both entry and exit. People mix both entry and. Now, when I said for registration 40 lakhs, 20 lakhs, 10 lakhs, I said you have to see only previous current year. You are not required to see previous year. But when we are starting with composition scheme, what is the first criteria? I have to check. For entry, I have to check previous year. For entry, I have to check my previous year turnover should be within 150 lakhs or 75 lakhs or 50 lakhs. If so, I can enter the composition scheme. If it is more than that, I cannot even think of composition scheme. And in my previous year, I should not be manufacturing. Notified goods. I should not be manufacturing the same notified goods is listed as. One item will be extra. Pan masala, tobacco, ice cream, building materials, aerated water. Aerated water is extra. Aerated water is extra. There are two differences here. One, you have an extra item which is aerated water. Second, here the focus is only on a manufacturer, not on a trader. There it was both manufacturer, trader. Aerated water was not there. Here the focus is only on a manufacturer and aerated water, sir. So previous year I am a trader of pan masala. Can I go for composition scheme? Yes. Previous year I am a trader of aerated water. Can I go for composition scheme? Yes. Previous year I am a trader of ice cream. Can I go for composition scheme? Yes. Previous year I should not be manufacturing. Pan masala, tobacco, ice cream, building material, aerated water. I should not be manufacturing. I should not be trader. I can be trading with it. I should not be. If in previous year I am manufacturing any of these items, I cannot think of normal composition scheme. I cannot think of. This is equally. Whatever points I am now discussing is true for normal as well as special. Clear? So what are the entry points? My previous year turnover should be within 150, 75 or 50 lakhs. Plus previous year I should not be manufacturing notified goods. If that is the case, I can enter inside. So previous year I was dealing with alcoholic liquor for human consumption. Can I enter? Okay, let us see. Current year is all about exit. If in my current year my turnover crosses 150 lakhs, 75 lakhs or 50 lakhs, I have to exit. So I will be checking 150, 75, 50 also in current year, but that is not for entry. That is for telling Tata bye bye. I was inside composition scheme, now I am going outside. Difference is that if my previous year turnover is, supposing I am Tamil Nadu, if my previous year turnover is 160 lakhs, I cannot even think of composition scheme. If my previous year turnover is 140 lakhs, I can go for composition scheme. My current year turnover is 160 lakhs. At 150 lakhs, I will come outside composition scheme, and for the last 10 lakhs, I will be under regular scheme. I will be under difference Purida. Difference Purida. Previous year turnover 160 lakhs. Current year turnover 140 lakhs. Previous year turnover 140 lakhs. Current year turnover 160 lakhs. What is the difference? And by the way, we'll give a context. You're there in Tamil Nadu and you're dealing with goods. So limit is 150 lakhs. Here what will happen? I cannot even enter inside. I will pay only and only. Supposing regular tax is at 18%, I'll pay only and only regular tax at here. What will happen? I can enter inside because my previous year turnover is 140 lakhs. Current year, what will happen? I'll be going outside composition scheme in between. I entered it, but I'll be leaving, exit. So till 150 lakhs, I'll pay composition tax at 1%, and balance 10 lakhs I'll pay. So this entire 140 lakhs I paid 18%. Here 150 lakhs I'll pay composition tax 1%, and balance difference Purida. I'll be checking both previous year, but previous year is for entry, not for calculation. Current year is for exit and calculation. Clear? I have to check my previous year for entry, current year for exit. And in normal composition scheme, as discussed, I cannot have service more than 10% of the previous year state turnover of 5 lakhs, whichever is higher. So this is only applicable for normal composition scheme. In normal composition scheme, can I have small portion of service? Yes. But what is the limit of service that I can have? Within that 150 lakhs, 75 lakhs, I can have service. But that should not be more than 10% of previous year state turnover or 5 lakhs, whichever is higher. Actually, in normal composition scheme, I have two exit points. One, I am in Tamil Nadu. My turnover is only 130 lakhs. But my service has crossed this limit. of 10% of previous year turnover or 5 lakhs, which is I have to go outside. So this technically we call it as inner limit. Outer limit is 150 lakhs, 75 lakhs. Inner limit is service limit. 10% of previous year state turnover of 5 lakhs, whichever is. Anything I violate, I'll be going outside. Supposing my service is within the limit, but I have crossed 150 lakhs, go outside composition scheme. Supposing I am within 150 lakhs, but I have crossed my inner limit of services. My services have exceeded the 10% of previous year state turnover of 5 lakhs. Go outside. So yesterday when we had discussed that particular question, I was taking care of the outer limit. Also, I was within my inner limit. This point is only for normal composition scheme. All the other points that we are discussing are true for normal as well as special. So one exit point is crossing the limit of 150 lakhs, 75 lakhs, 50 lakhs in current year. And if at all it is normal composition scheme, service crosses the inner limit. And one very important thing to know, whenever you are talking about entry, focus was every time on, whenever it is all about exit, it is all on current financial year. So exit, there are a lot of points. Entry, there were only 2 points. One was 150, 75, 50 lakhs. Other was manufacture of notified goods. Exit, 150, 75 lakhs, 50 lakhs, along with that inner limit for normal composition scheme, and lot of other points. I should not be manufacturing. Sir, same point was there, same point is here. There's a difference. Previous year I did not manufacture pan masala. Can I go for composition scheme? Yes. Current year, in the month of November, I started manufacturing pan masala. Go out. The previous year I was manufacturing pan masala. You cannot even come inside. Purida. Second, I should not be a casual taxable person or NRTP. So previous year I was CTP, NRTP. No worries. Current year, the moment you are CTP, NRTP, Go outside. Go temporary station. Go outside. You're going to a state and doing temporary business and coming out. Go outside. Go outside composition scheme. You're manufacturing non-taxable. Not manufacturing. You're dealing with non-taxable supply. Alcoholic liquor for human consumption and fine notified petroleum products. Fine notified. I asked the question, but I did not give the answer. Few minutes back, I asked the question. Previous year, you were manufacturing liquor. Can you go for composition scheme in current year? Yes. And ICAI has asked not once but twice. They gave the data for previous year and they gave one of the item as alcoholic liquor for one human consumption. And you are required to calculate the turnover, aggregate turnover. The aggregate turnover say it came around 140 lakhs because aggregate turnover will include alcoholic liquor. So it came to 140 lakhs. And they asked, can you go for composition scheme in next year? Can you go? Yes. My previous year is 140 lakhs, I can go. What I did in previous year is of no use. 90% students said no. Why? Alcoholic liquor for human consumption. If you're dealing with non-taxable supply, you cannot go for composition. No one said that. If in previous year you're dealing with non-taxable supply, let it be. I can still come for composition scheme in current year. Current year I should not be dealing with. If I deal, I can be till that point of time. On that day, I'll be thrown outside. On that day, I'll be thrown outside. Difference Purida? Difference Purida? In the same question, there was a point where they were talking about interstate outward supply. Same question. And the 140 lakhs calculate panningla. They gave lot of data. Alcoholic liquor for human consumption, exports, interstate supply. When you summed up, you got the figure of 140 lakhs. Assume that it was Tamil Nadu and goods. So you got the figure of 140 lakhs. The question was, can you go for composition scheme in next year? The answer should have been yes. Why? The limit is up to 150 lakhs. And there was no manufacturing of notified goods. But students thought interstate outward supply. Exports is also interstate outward supply. Alcoholic liquor for all to confuse you. Why? In previous year, you can have alcoholic liquor for human consumption. In previous year, you can have interstate outward supply. Current year, you should not have. Current year, you should. So, previous year, your turnover can be anything. Your turnover can be anything. Not at all a worry. Current year, you should not have. The moment in current year having, you're going outside. You're going outside. You should not be supplying services through ECO, which is liable to TCS. Can you supply goods through ECO? Yes. Under composition scheme, you should not be supplying services through ECO where TCS is applicable. Can you supply goods through ECO where TCS is applicable? Allow. But service should not be supplied through ECO where TCS section 52 is applicable. Again in current year. Previous year, whatever you do is not. Previous year, only two things. 150, 75, 50 lakhs. Whatever is inside 150, 75, 50 lakhs, not a worry. You should not be manufacturing. That's it. You can have any turnover in previous year. Be it alcoholic liquor for human consumption or interstate outward supply including exports, anything can be the figure. These are all the condition, exit points. One more exit point. If at all you want to take the credit, can you be inside composition scheme? In composition scheme, you cannot take the input tax credit on inward supply. If you want input tax credit on inward supply, go outside composition scheme. Because if you are in composition scheme, you cannot take ITC on your purchases. If you want to take ITC on your purchases, go outside composition scheme. In composition scheme, you cannot collect output tax from the customers. On your purchase, no input tax credit. On your sale, you have to pay composition tax, but you cannot collect from the customers. If you want to collect tax from the customers, go outside. You go outside and go for regular scheme. Go for regular scheme. So these are all exit points. Crossing 150 lakhs, 75 lakhs, 50 lakhs, or crossing the inner limit for services when not for normal composition scheme. Then manufacturing notified goods, go outside. Dealing with your non-taxable supply, go outside. Dealing with services liable to TCS, go outside. Or your casual taxable person, non-resident taxable person, go outside. You want input tax credit, go outside. You want to collect tax from the customers, go outside. And the last point is not about go outside. Last point is the clarification that even under composition scheme, you have to pay RC. Even if you're under composition scheme, you cannot escape RCM. The difference is, normally when you talk about RCM, pay by cash, get in, credit. But for composition scheme, pay by cash, no input tax credit. No input tax credit. And please understand, I repeatedly ask question. I'm working in 2 states. Can I go for composition scheme in one state and regular scheme in other state? If I'm entering composition scheme, I have to enter composition scheme in all states. If I'm exiting composition scheme, I have to exit composition scheme from, I may be working in Tamil Nadu, Maharashtra. I may deal with alcoholic liquor only in Maharashtra. So I'm violating condition only in, but when I go out, I have to go out from Maharashtra as well as from Tamil Nadu. I violated the condition in Maharashtra, but I have to go out from Maharashtra as well as one state regular scheme, one state composition scheme, not possible. Rather, one state normal composition scheme, other state special composition scheme is also not possible. That is not possible. So this is all about your composition scheme. Rates. We have discussed just a cautioning point, what tax you have to pay. What tax you have to pay? If you are a trader, normal composition scheme. If you are a trader, normal composition scheme, you will pay only 1%. I am talking only about normal composition scheme. If you are a manufacturer, the difference is trader will also pay 1%, manufacturer will also pay, but trader will pay 1% only on taxable supply. So if I am dealing with taxable supply 10 lakhs and exempt supply 5 lakhs, trader will pay 1% only on 10 lakhs, but manufacturer will pay 1% on entire 15 lakhs, 10 lakhs plus 5 lakhs. Difference is clear? Difference is clear? Next, under normal composition scheme, you can have trader, manufacturer and restaurant, outdoor catering, correct? Restaurant and outdoor catering, any article for human consumption, that is restaurant and outdoor catering. Restaurant and outdoor catering will pay what? 5% will pay, and it will pay on taxable as well as exempt supply. So whenever I am telling 1%, it is technically 1%, it is 0.5 CGST, 0.5 SGST. If I am telling 5%, it is 2.5 CGST, 2.5. It can never have IGST. Why? You can never have interstate outward supply. Can you have interstate inward supply? I can purchase from other state, I can import from other country, but I cannot sell it to other state, I cannot sell it to other country. Rather, within the state, I cannot even sell to SEZ, because sale to SEZ is interstate outward supply. Interstate outward supply. Clear? But what if I am under special composition scheme? Under special composition scheme, which is only services or goods plus services, but services big. Services, you have to pay 6% on taxable supply as well as exempt supply. 6 means 3 plus 3. And please understand, this we have taken care yesterday, but still I am repeating. Supposing I am a trader, but I have small service. Yesterday's example, 10 lakhs includes 2 lakh services. Trader will pay how much percentage? 1% will not only be on 8 lakhs trading of goods, but also on 2 lakhs services. It is not that for 2 lakhs it will be 6% and all. No. If I am a restaurant and I am having small services within the limit, how much I will pay? 5% not only on my restaurant service, but also on that other small service. If I am a service provider, mechanic shop, I am also selling few items. I am a mechanic shop, mainly service, but small goods are also there, sold. Then I will pay what? Louder. 6% not only on my job work service, but also on sale of goods. So my rate will be decided by what I am doing primarily. That is all about your rates. Are you guys clear with this understanding? Composition scheme is a scheme where you use aggregate turnover as well as state turnover. Aggregate turnover of previous year for entry, aggregate turnover of current year for exit, state turnover of previous year for checking the inner limit of services, 10% of previous year state turnover of 5 lakhs, whichever is higher, and state turnover of current year for paying the taxes. I repeat, aggregate turnover of previous year, aggregate turnover of previous year for checking the entry, aggregate turnover is pan India turnover, aggregate turnover of current year for checking the exit, state turnover of previous year for checking the inner limit of services, which is also related to exit, and state turnover of current year for payment. Whatever percentage we have discussed, 1%, 5%, 6%, that is of what? So if I am there in Tamil Nadu, Maharashtra, I'll calculate taxes separately for Tamil Nadu, I'll calculate taxes separately for Maharashtra. I will not calculate it together. I will not calculate it. In Tamil Nadu, I will pay CGST plus Tamil Nadu. Supposing I have 40 lakhs turnover in Tamil Nadu and 50 lakhs turnover in Maharashtra, and it is all about payment of composition tax. How much composition tax I will pay in Tamil Nadu? 40 lakhs multiplied by 0.5% CGST, 40 lakhs multiplied by 0.5% Tamil Nadu SGST. How much composition tax I will pay in Maharashtra? 50 lakhs multiplied by 0.5% CGST, 50 lakhs multiplied by 0.5% Maharashtra. I will not pay together because my registration will be separate in Tamil Nadu and registration will be separate in. I'll make your life simple. GST, there's a big confusion when to use aggregate turnover, when to use state turnover. Whenever you're trying to find out concept, whether you're a big person or a small person, whether you're a big person means not allowed, small person means allowed, big person means get outside, small person means stay inside, you always go with aggregate turnover. You always go with throughout GST. There are 50 plus places, even we go to final 50 plus places, I will find turnover. Few places aggregate turnover, few places state turnover. I don't know when to use aggregate turnover, when to use aggregate turnover is always to decide whether you're a big person or a small person, whether you're allowed inside or not allowed, or whether you can stay inside or you'll be thrown outside. Checking big or small. State turnover is always used for calculating. When you want to calculate a number, what is the maximum service that you can have? State turnover. What is the tax that you have to pay? You're calculating a number. You're calculating a late fees. Will be based on aggregate turnover, state turnover. You're calculating a number. You're calculating a number. Clear? So that is all and all about your composition scheme. Now one theoretical point which is not covered here, but I'm telling you, which I've discussed, but I'll still tell this particular point. That is the procedural part. When you want to enter inside composition scheme, can you enter inside in between a year? No. You have to wait till 1st of April of next year. You have to give intimation before 1st April of new financial year. Only one exception is when you're taking new registration. When you're taking new registration in between a year, you can select composition scheme and you can directly enter composition scheme in between. But if you're already registered under regular scheme and you want to go to composition scheme, can you do in between of a year? No. It is 1st April of next financial year. You have to give intimation before that. But when you are taking new registration, can you select composition scheme and enter in between a year? Yes. This is the entry. Exit. Can you go outside composition scheme in between a year? Yes. Regular scheme to composition scheme, in between is not allowed. 1st April. Give intimation before new financial year starts. But composition scheme to regular scheme, can go outside composition scheme in between. For any reason. Either you are violating condition or you are not liking composition scheme. You're not even given the reason. I don't like composition scheme, I want to go outside. Yes, you can go outside composition scheme. You can go outside composition scheme. Are you guys clear with this understanding? So that is all and all about your composition scheme. And also we have discussed about your threshold limit for registration. Threshold limit for registration. Are you guys clear with this understanding? So when you talk about your next topic, payment, one important area is there in your payment chapter which repeatedly is tested by ICI, which is interest on delayed payment of taxes. Interest on delayed payment of taxes. So when you talk about interest on delayed payment of taxes, one thing you need to know, supposing your output taxes, say 100 lakhs and your ITC is say 70 lakhs. What is the payment that you're going to make by cash? This is your gross output tax. This is your ITC. You're going to pay by cash net output tax. What is the amount? This is 30 lakhs. Payment by credit is 70 lakhs. Your liability is 100 lakhs. Payment by credit ledger is 70 lakhs. Payment by cash ledger is, supposing you pay this amount late, interest will be on what? So your interest calculation, is it on 30 lakhs or your interest calculation, is it on 100 lakhs? Whether interest is on gross output tax or net output tax. Interest is on gross output tax or net output tax? Generally, it is on net output tax liability. That is, interest will be calculated only on 30 lakhs. Interest will be calculated only on, so interest will be computed only on your net output tax, which is to be paid by cash ledger, multiplied by what is the rate of tax? From which date? From the next day of due date of payment. From the next day of due date of payment of tax. Till which date? Till the actual payment of tax. So supposing it is April month liability that you have paid in July. April month liability that you paid in July. Interest will start from what? Interest will start from, see, amount you know, whether 100 lakhs or 30 lakhs, you said 30 lakhs. Rate of interest you know, 18%. Starting date, April month liability that you paid on 25th of July. Louder. End date is 25th July. Starting date. Starting date. April month liability means what is the due date for April month? Louder. So interest will start from May 21 to July 25. Number of days divided by 365. You get the interest. But. There can be one change. Interest may be on 100 lakhs. Everything else will remain the same. 18% is 18%. Period will be 21st May to 25th July. But interest may be on 100 lakhs. When I tell interest is on 30 lakhs, that is net output tax liability. It is with the condition. Supply should be of April month, reported in April month return, but after due date. Transaction is of April month, reported in April return, but after due date. So when I said 25th of July, you are still filing April return only, but you are filing on 25th of July. Supply is of April month, reported in April return, but after due date, and this should not have been found by the officer. This should not have been found by the officer. Officer should not have showed this under section 73, 74. That see, you have missed this liability. You yourself should have found out the mistake and you should have reported that month's transaction in the same return. April month transaction reported in April return, though it is filed late, without finding out by the officer, then interest is not on 100 lakhs gross output tax liability, interest is on 30 lakhs net output tax liability. What if your April month transaction is missed out in April and you report in May return? You report in May return, which you filed on 25th July. We'll take the same dates, which you filed on 25th July. Rate of interest, same. Interest will start from, you have filed April month transaction, but you have reported in May return. Interest will start from May 21 or June 21. It will still start from, why? It was which month's liability? What is the due date for April month's liability? Louder. May 20th. Interest will still start from 21st May till when you have paid that? 25th July. So, rate of interest remains the same. 18% is 18%. Period remains the same. Earlier question, April month liability reported in April return. Now, April month liability missed out in April return, reported in May return. Still, period will remain the same because it is which month's liability? April month liability. What is the due date? 20th May. Interest will start from 21st May. What is the change? Interest will not be on 30 lakhs. Interest will be on entire 100 lakhs. Your gross output tax liability, whether you are paid by credit or cash. Got that? Got that? So normally when ICAI asks the question, it is generally based on net output tax only. But there is a possibility of gross output tax liability when supplies of April month but reported in another month. Supply was of April month but reported in May return. Or one more possibility. This was found by the officer. You did not do it on your own. Officer gave you a notice under section 73, 74. Then you do it. You did not self do it. So what are the two cases where interest will be on gross output tax liability? Supplies of one month but reported in another return. Interest is not on net output tax liability paid by cash. It is on gross output tax liability whether paid by credit or paid by cash. Second, you did not found the mistake. You did not found that missing transaction. Who found that? In section 73, 74, that interest is on gross output tax liability. Clear? That is your interest calculation. Now, what is your due date of payment? Actually, strictly speaking, due date of payment is not given directly. Due date of payment is your due date of return. So, when I tell April month, why it is 20th May? Because return filing is on 20th May. So, payment should also be done before return filing. It's only after payment that you can file your return. So, 20th May. So, normally your due date of payment is equal to your due date of returns. But there are two exceptions. One, we have completed composition scheme now, right? In composition scheme, return filing will be yearly, but payment will be quarterly. So quarterly after the end of the quarter, 18 days. So here, due date of payment for your composition scheme is 18th after the end of the quarter. 18th after the April to June, 18 July. July to September, 18th October. October to December, 18th Jan. Jan to March, 18th April. Return filing will be yearly. What is the due date for return filing? 30th? After the year is over. 30th? April earlier was there, but now it is 30th June. Now it is 30th June, which means after the financial year gets over, you get almost about 3 months. Earlier it was 30th April, now it is 30th June. Clear? That is done. And another exception is that in QRMP scheme, which is a scheme for regular taxable person and casual taxable person, that you should pay on monthly basis, but return filing will be on quarterly basis. QR, quarterly return. MP, monthly payment. So in that, return filing will happen later, but payment is on monthly basis. So in QRMP scheme, normal scheme, what is the due date? For April, May, June, April, May, June. So you're talking about a regular taxable person or a casual taxable person. This is MRMP scheme. This is QRMP scheme. So for MRMP scheme, whether it is return filing or payment for April 20th May, for May 20th June, for June 20th July. Right, and this is for both payment and return, payment and return, payment and return. But if in your QRMP scheme, For April, it is 25th May, not 20th. It's only for payment. And for May, 25th June. It's only for payment. And for June, 22nd for the southern part of India, not South India. Better call it as southern part of India. Don't divide India. Right? Southern part of India, and 24th for the northern part of India, because we are more disciplined earlier, 22nd. And they are less disciplined, 24th. Right? So 22nd or 24th. This is only for payment. And return filing totally will happen for entire quarter, same, 22nd or 24th of July. Got that? So interest will start from where? For April month. QRMP scheme. 26th May. May month. 26th June. July month. Sorry, June month. Either interest will start from 23rd July or 25th July. Simple. Right? We have seen a part of return filing as well. Clear? Clear? So this will be the difference when you're talking about your payment. 99%. There are different types of returns. Whatever is the due date of return is your due date of payment. There are only two exceptions. Composition scheme and QRMP scheme. Composition scheme and both the due dates we have discussed. Why we are discussing due date of payment? Because interest will start only after that date. Interest will start only after that particular date. Now, there's an amendment which you can expect in your exam, because till now this question has not been asked. What if you are filing your return late, but the amount was there in your cash ledger earlier? So if at all there was an amount which was credited in cash ledger before your due date of filing return, but debited for payment after the due date, this will not be considered for calculating interest. Simple understanding, I'll explain you, and I'll explain the logic of the provision also. Supposing you're talking about April month return. What is the due date of payment? 20th May. You have deposited in your cash ledger on 18th May itself. But for some reason, you filed your return on 22nd May. 22nd? So finally, your cash ledger will be debited only on 22nd May. But the amount was there with the government right on 18th. 18th. Should interest be calculated? Earlier interest was calculated for 2 days. Now interest will not be calculated. But wait, I will make it more interesting. Supposing your April month liability in cash is 30 lakhs. Is 100 lakhs minus 100 lakhs is 20 lakhs you have deposited on 18th May. And balance 10 lakhs you have deposited on 21st May. Now tell me interest. You have filed your return on 22nd May. Your liability is 30 lakhs, out of which what has happened? 20 lakhs, 10 lakhs. 20 lakhs you have deposited on 18th May, and this 10 lakhs you have deposited on 21st May, and your return is filed on interest, whether it will be there on 20 lakhs. No, it won't be there because you already deposited it. Whether it will be there on 10 lakhs. Yes. For 1 day or 2 days? No, 2 days. This relaxation is given only in set criterias. If you have paid after the due date, no relaxation. So here, interest will be calculated on 10 lakhs multiplied by 18% for entire 2 days. For entire, though you have deposited on 21st May, but this relaxation will not be there. Why? What is this relaxation talking about? This relaxation tells that the amount should be there in your cash ledger before the due date, but debited after the due date. Only that will not be calculated from, only that area will not be calculated for interest, assuming that amount still remains. In between you have not used, assuming that amount is only used for filing your return. But it doesn't talk about amount which is deposited after the due date. Then you will not take only on Monday, it will be on, though you have deposited on 21st May, but now interest will be calculated for, because this relaxation is only for those cases where you have done the work earlier. See, why I am taking this example, otherwise, logically speaking, what you will do? So 20 lakhs mele interest illa. Because you have, though your return is filed on 22nd May, but you have deposited that before 20th May, so government had that amount earlier. Government had that amount earlier, no need to calculate interest. Only debiting, only a formality was done after 20th May, just a formality. But for 10 lakhs, they tell that this relaxation will not help because the provision does not support it. 10 lakhs was after due date or before due date. Then you treat it as normal case. Then when you have put inside, when it is debited, don't see. When you have put inside, when it is finally when return is filed, 22nd. So don't see when you have paid. So only 22nd. What is the delay? This will be calculated for entire 2 days. See, scope for ICAI is too much. If you remember yesterday, I said that ICAI never used its potential. It's used only 5-10% of the potential for all these years, except barring for 2-3 attempts. Now, when ICAI is using its potential, it is not using to the core. It has increased that 5-10% to 20-25%. There is still 75% potential which is untapped. I'm just giving you a few samples. I'm just giving you a few. If this was asked in here, this is a very simple question. ICAI can draft this. 3 lines la question modu 3 lines. I can easily draft the question and give it to you. You know how many varieties of answer I'll get? First variety, 30 lakhs multiplied by 18%, multiplied by 2 divided by 365. Second variety, 10 lakhs multiplied by 1 divided by 365 because it was paid on 21st. Third variety, 30 lakhs multiplied by 18% multiplied by 2 divided by 365. Fourth variety, I'll be few students still will say, oh, gross output tax liability is 100 lakhs. 100 lakhs multiplied by 18%. So many varieties are possible. Lot of varieties are possible. So this question, when this amendment is coming, I'm expecting this question to come. Because otherwise, how to test whether you have understood the amendment or not? So this question is a new question which is not there in any of the papers of ICAI, even in the mock test paper or revision paper, even the latest test papers, you cannot find out. But this is the potential of ICAI. So ICAI can use that particular potential. Second part of interest is, this is all about late payment of output tax. What if you have taken the wrong credit? What if you have taken the ITC wrong? So there is a block credit on car which you took and later on you reversed. Which you took, later on you, whether you will pay interest. Yes, you availed ITC, but you reversed, but reversal was done later on. What is the rate? See, for calculating interest, you require 3 things: amount, rate, period. And that is what we did in earlier case, correct? Amount, rate, period, amount, rate of interest and period. We are doing the same thing. We are doing the same thing, right? So, rate of interest for wrong availment of ITC and wrong utilization of ITC is maximum 24%, but for exam it is same 18. See, there in the previous point rate itself is 18, but here it is maximum. But what is there for your final calculations only? Final calculation is only 18. So remember 18%. Remember 18%. Now the question is amount. What is the amount? Amount is wrong ITC availed and utilized, correct? Amount is not at all a challenge. The amount of ITC which is wrongly availed is not important. Wrongly utilized. Wrongly utilized. The challenge is period. The challenge is period. The only challenge is period. For what period? I'll give a very simple example and we'll complete this calculation part. Assume while filing your April 25 return, you have taken wrong ITC of 10 lakhs. And this April 25 return, you have filed on say 22nd of May 25. But your ITC balance was always more than 50 lakhs for a long time. It's always more. You have more ITC balance always. Even when you filed April return, your ITC balance was say 25 lakhs, 30 lakhs, some higher amount, which is more than the wrong ITC that you have taken. And finally, when you're filing your Jan 2026 return, that wrongly availed ITC was utilized. This was wrong availment. This is wrong utilization. So this wrongly availed ITC was utilized, and suddenly when your Jan return was filed, your ITC balance suddenly became 3 lakhs. I'm giving an extreme case so that you can understand it fully. Extreme case. It did not become zero. It was always more than 10 lakhs till you filed Jan return. Now it became something less than 10 lakhs, but it is not zero. It is not. So I want you to understand rate is simple, 18%. You will never go wrong with the rate. Two areas that you will go wrong: amount and period. We are trying to understand both. How to calculate the amount and how to calculate the period. Assume you have filed your Jan 26 return on, say, late 25th of Feb 2026. Right. Now calculate interest. This is a very simple question. Please help me in calculating interest. Finally, you realize your mistake and you reversed your ITC. While filing your annual return, and you paid that amount on 25th of December 2026. See, one is wrong availment, one is wrong utilization, one is reversal. Finally, you realize the mistake that I took the credit wrong. Whatever credit I have taken, it was on motor vehicle, I should not have taken. While filing your annual return, your chartered accountant said that no, it is wrong credit, please pay it. And you paid it. So finally, you paid 10 lakhs when? 25th of December. So interest will go till 25th of December when you are reversing it. This is the last date. This is very simple thing. Last date for interest. Now calculate interest. So when you are reversing this 10 lakhs, you have to pay with interest, right? When you are reversing this 10 lakhs, you have to pay with. So interest will be on what? Interest will be on what? Wrong availment was 10 lakhs. Wrong availment was, but what was wrongly utilized? No, 7 lakhs. Because I had ITC balance still of 3 lakhs. I'm assuming that ITC balance is there more than 3 lakhs even till 25th December when I'm reversing it. That is an assumption that it is always there. My ITC, though it came down below 10 lakhs, now it is up to 3 lakhs. And then again it came up. That 3 lakhs became 5 lakhs, 5 lakhs became 15 lakhs. It is more. Once it comes down, you have to start calculating interest. Correct? No. Interest will be on what? I took credit of 10 lakhs. Wrong. But I used only to the extent of. So government has loss only of 7 lakhs. I should not have used it. Government doesn't have problem with your wrong availment. If you wrongly avail, if it is there in your credit ledger, there's no worry. You have not misused it. When is the problem? When you have used it. So interest will be on what? Interest will be on what? Why? My credit balance came down below 10 lakhs, but it was always above. So how much credit I have wrongly used? So government has loss only when I've wrongly used my ITC. Government got something less in cash. Government got something less in. So that is 7 lakhs multiplied by. What is the period? What is the from date? And what is the to date? 25th December 2026. What is the from date? It is not from the date of wrong availment. It is from the date of when did I wrongly use it? Jan return. What is the Jan return due date? 20th February. What is the actual date of Jan return? 25th February, whichever is earlier. So interest will start from 20th Feb till 25th December. Now you calculate. Feb will have how many days? If at all you want to calculate the period, Feb will have balance 8 days. Then March, April, May, June, July, August, September, October, November, and December 25. Oh, that you please calculate. Clear? Clear? So that will be the calculation. That will be the calculation. Interest is on wrong ITC availment or utilization. Now, I'm not working out, but I'm just giving you a hint. Just tell me the right answer. Supposing my credit balance came to 3 lakhs while filing Jan return, then while filing March return, it became 0. So, interest on 7 lakhs will be calculated, same answer. But 3 lakhs will be calculated from actual date of March return or due date of March return, whichever is earlier. It will be in parts. 2 interests will be there. You'll add both. You will add both. Clear? Clear? See, I use credit. 10 lakhs is my wrong availment. Supposing I use first 7 lakhs, then I use 3 lakhs. Interest will start for 7 lakhs on a different day. Interest will start for 3 lakhs on a simple. When I wrongly use is the question. Correct? So, interest will be a wrong availment of ITC or wrong utilization of ITC? Utilization. Therefore, 7 lakhs separate calculation, 3 lakhs separate calculation. Interest will be from the date of wrong availment or from the date of wrong utilization. What is the date of wrong utilization? Actual date of that month's return in which you used it or due date of that month's return in which you used it. Whichever is earlier. Clear? So, it is on wrong ITC availed from which date? From which date? Earlier of due date of the return or actual date of the return in which such ITC has been utilized. Such ITC has been utilized. Till date is always simple. Till you make the payment. Till you make the. But from date will go for a change. Assuming that I did not file any Jan return. I had some notice, old notice. And I paid the old notice payment on 25th of Feb. So it is not Jan return, it is payment of old notice. Payment for old. That was an old notice which I got. I saw that. Okay, I said that I have to pay it. I paid that amount. When I paid that amount, my credit ledger came below 10 lakhs and it was at 3 lakhs. So that payment was made on 25th. So interest will start from where? There cannot be any return. So there cannot be earlier of due date of return or actual date of return. Interest will directly start from simple. So here the number of days will change. See, it is from the date of wrong utilization of credit. I may use my credit wrongly for 2 reasons. While filing my return, while paying some old dues. While filing my return, while paying my old. If it is while filing my return, actual date of return or due date of that return, whichever is. If it is while paying my old dues or while applying for refund, etc., then from which date? When my credit balance actually reduces. So on 25th of February, I was paying my old dues and my credit balance came down from say 25 lakhs to 3 lakhs. So it is 25th of Feb. 25th of Feb. That is the date. Clear? Again, ICAI has not used the potential in this area. ICAI's questions always revolves around a very basic point. Gross liability 100 lakhs, ITC 70 lakhs, net liability 30 lakhs, calculate interest. Calculate. So you'll take 30 lakhs multiplied by 18%. from the next date of due date of return till the actual date of. So all the questions of ICA revolves only around one point, but there are other 3 points. There are other points also. So interest is a challenging area. Questions normally are asked only from one simple angle, but there are other 3 angles of calculating interest. Are you guys clear with this understanding? Are you guys clear with this understanding? That is your calculation of interest. Normally, when you talk about interest, it is again 50% chances that you will always get a question of interest. So out of 4 question papers, in 2 question papers, you will find something about calculating the interest. Are you guys clear with this understanding? Right. So that is all about your calculation of interest. See, first part of interest was your payment. Your payment means output tax minus input tax. Second was not about your payment. Second was about your wrong ITC. Wrong ITC. So there are 2 parts of interest, and both the parts has got 2 subparts. 2 subparts for calculating the interest, and how it is given in your book is actual calculation, how it will happen. 3 components: amount, rate, period. Amount, rate, period. So you get to know what exactly is to be used while calculating the interest. Now, are you guys clear with this understanding? Are you guys comfortable with calculation of interest? Right? So any question of interest, though ICA focuses only on one part, but you should be comfortable in even calculating the other areas if at all they are asked by ICA. Now, talking about your important area. Now, you get less questions on payment chapter because they focus on TDS TCS. Nowadays, we will see a lot of questions by ICA focusing on your TDS and TCS. Right. TDS is applicable when your TDS is applicable. When you are dealing with government or government related agencies. And a new addition is when you are dealing with a metal scrap item. When you are dealing with, basically TDS when it started, it was only for government contracts. Government contracts. Please understand, government is not the supplier, government is the recipient. Government is the, so if at all your recipient is government or government agencies or government undertakings, that is public sector undertakings, or now a new point is added when the recipient is registered metal scrap dealer. Registered metal scrap dealer. When the recipient is a registered metal scrap dealer. Earlier, recipient can be government, government agencies, government undertakings means it is not only public sector undertakings, it is also governmental society, it is also governmental body or authority where 50%, 51% or more is controlled by government. So everything, central government, state government, local authority, government, agencies, public sector, undertakings, governmental society, governmental authority. So every form of government is covered. Normally when you talk about government, I tell you it's only government. But here it is government, government companies and government agencies, everything. Everything is that. Plus one new addition, recipient is a registered metal scrap dealer. This metal scrap we have discussed elsewhere, RCM. Discussed elsewhere, RCM. We'll differentiate that. Right? It is discussed, already discussed in your notified goods, section 9.3, RCM. Section 9.3, RCM. It is already there. But there is another condition. If at all your total value under a single contract. So yesterday while solving a problem, we discussed that TDS is not based on invoice value, it is based on, recall that the 11 point some lakhs divided by 5. I said no, 2.3 lakhs is not the answer. 2.3 lakhs will be one invoice value. But what is the contract value? It should be more than. And I said one other thing which is tested by ACA time and again. If it is 2.5 lakhs exactly, no TDS. Amount should be more than. So it is not more than or equal to. It is more than. So contract value should be more than 2.5 lakhs. Obviously excluding GST. Value is always excluding GST. See, now we have seen three types of values. One, transaction value, again excluding GST. Another, e-way bill, consignment value. It includes GST but excludes exempt supply. Includes GST but excludes. So that will be relevant for e-way bill if the consignment value is more than 50, more than equal to 50,000, more than or equal to 50,000. In case of interstate movement, e-way bill is required. E-way bill is one, contract value. One, that contract value is not including GST, and contract value should be more than, not more than equal to, should be more than 2.5 lakhs for TDS to be applicable. For TDS to be applicable. Now, when your TCS is applicable? TCS is applicable when you are supplying goods or services through ECO and payment is also routed through ECO. You are supplying through ECO, payment is also coming via ECO. I am supplying through Amazon, I am getting the payment through Amazon. I am not directly getting the payment. Supply through ECO, payment through ECO. Then your TCS will be applicable irrespective of the value on net value of supplies. When I tell net value of the supplies is supply minus supply return. Supply minus supply return. So in April, if I am supplying 10 lakhs and supply return is therefore 2 lakhs, which was supplied earlier, TCS will be only on 8 lakhs. TCS will be only on 8 lakhs. And another point, non-applicability. TCS will not apply on section 9(5) transactions. TCS will not apply on. So it is supply minus supply return minus section 9(5). Because in section 9(5), neither supplier pays nor recipient pays. ECO is anyways paying the entire liability. So there's no point of having TCS. So TCS will not be there. See why you have TDS and TCS? So that other party will get that amount and they report the transaction. But in section 9(5), neither supplier will pay nor recipient will pay. ECO himself will pay. You cannot force the other party to show the transaction. So it doesn't make any sense. It is not applicable for section 9(5) transaction. Section 9(5) transaction. Now, non-applicability, you know, TCS is not applicable for section 9(5). Likewise, TDS is not applicable. Super point. Government will always relax government. If supplier is also government, recipient is also government, jolly. If supplier is government, recipient is government. Supplier is government society, recipient is government agency, no TCS. Supplier is governmental authority, recipient is local authority. No TDS. No TDS. So if supplier as well as recipient should surely be government for TDS to be applicable. If supplier is also government or government agencies or government undertakings, no TDS. No. In simple language, supplier should be other than government, recipient should be government for TDS to be applicable. Second point, a very beautiful point, which has been tested again by ICAI. What is that point? If location of supplier and place of supply is in Tamil Nadu, is in Maharashtra. LOS POS is in Maharashtra. Location supplier is who? Other than government. So location of supplier is Maharashtra. Place of supply is Maharashtra. CGST, SGST or IGST? CGST, SGST or IGST? LOS, POS will decide whether it is CGST, SGST or IGST. Location of supplier Maharashtra. Place of supply Maharashtra. Intrastate supply or interstate supply? CGST, SGST. CGST, Maharashtra, SGST. But recipient is located in Bihar. That is, government is located in Bihar. Who will deduct TDS? Government. Who will deduct TDS? But government is sitting there in, and government can deduct only IGST, which is not right because the transaction is, and if government wants to deduct TDS, government should get registered in Maharashtra. Government should get registered in, government tells no, will not do that. Forget about TDS. Forget about, right? See, in both the places, government is relaxing government. Supplier is government, recipient is government, no TDS. Location of supplier, place of supply. Location of supplier is other than government. Place of supply is in Maharashtra. So the transaction is CGST, SGST, intrastate supply. But recipient, that is government, is there in Bihar. If at all TDS is there, it will be IGST, which cannot be true because transaction is CGST, SGST. TDS cannot be. So TDS should be CGST, SGST. If you want TDS to be there, government in Bihar should get registered in. Government tells no. Forget about TDS. Forget about TDS. No TDS. So TDS is not applicable in these two cases. And both these cases are to relax government. Are to relax government. Clear? So this is applicability and non-applicability. And there is a second non-applicability which is not rare, which is not asked, but generally you can understand. If supplier himself is unregistered, if the supplier is unregistered or supplier is supplying something which is taxable under RCM or supply itself is of exempt item, there is no TDS, there is no TCS. And let us understand why. Supplier is unregistered. If I am going to deduct TDS or TCS, opposite person should get in cash ledger. The person who is paying TDS, TCS will pay by cash ledger. Opposite person should get in cash ledger. If he is unregistered, he will never get. He will never get. Ruled out. Supply is exempt. Exempt supply will have 0 GST. When GST itself is 0, you cannot have TDS and TCS. Ruled out. Third, supplies are taxable under RCM. RCM means recipient himself will pay. See, why TDS and TCS is there? So that supplier shows the transaction correctly. Now, supplier is anyways not going to pay GST because it is taxable under no TDS, TCS. Supplier unregistered. Supply exempt or taxable under RCM. No TDS, no TCS. But if supplier is registered, supply is taxable supply, but supply is under composition scheme. Supplier is under TDS will be there, TCS will be there. No worries. No worries. If you are under composition scheme, no worries. If TDS is there, TDS and TCS will go and sit in composition scheme dealer in cash ledger. Composition scheme dealer will use it. The person who is paying TDS, TCS will pay by cash. The person who opposite party will get in cash ledger. So no problem. Even if the supplier is a composition scheme dealer, don't worry. Government will deduct TDS, electronic commerce operator will collect TCS and pay by cash, and the composition scheme dealer will get in cash ledger. No worries. It will be applicable. It will be applicable. What is the TDS percentage? What is the TDS percentage? If it is CGST, SGST, 1 plus 1. If it is IGST, so the percentage is 2%. What is the TCS percentage? Maximum percentage is 2. Till now it was 1. But for your exam it is 0.5. So when you see the old exam papers, answers would have been solved by using 1%. Now you have to upgrade and you have to use it as 0.5. CGST 0.25, SGST 0.25. If it is IGST 0.5. If it is IGST it is 0.5. And what is the due date for payment and filing? We have discussed that yesterday as a passing reference. I said please don't mix your income tax. April month 10th May. May month 10th June. June month 10th July. So payment and return filing is on 10th of next month. Return filing for TDS is GSTR 7 and return filing for TDS is GSTR 8. But due date is all the same. Right. There are other points which are not so important. One important point is still that in addition to GSTR 8, ECO will also file GSTR 9B annual statement. In addition to GSTR 8, ECO will also file GSTR 9B annual statement. Annual statement that is covered in your return filing chapter. So they will also file GSTR 9B annual statement. Annual statement, which is not there in TDS, which is there only in TCS. And ECO can be called for information. So if your goods are there in Amazon's warehouse, officer can also always tell Amazon, give the details of his, what supplies he made, what is the stock available. So that can be called from ECO. And if ECO is not giving the details within 15 days, there can be a penalty on ECO, that is Amazon. CGST 25,000, SGST 25,000. See, that is only for eco, because when I'm supplying through Amazon, my goods may be there in the warehouse of Amazon. So officer, when he is doing inspection for me, officer can go to Amazon and tell, give this person's details, what all supplies he made through you, give the list, what is the stock available, give the list, give it within 15 days. If not, there will be a penalty on Amazon for not sharing the information. So these points of annual statement and calling of information is there only in TCS. It is not there in TDS. There is another point which is there only in TCS. Matching. It works like a matrimonial website. Matching concept. Why? If I am supplying through Amazon, I will report the transaction in GSTR 1, sales. Amazon will report the transaction in GSTR 8. Lot of people will be supplying through Amazon, including me. So my supply through Amazon is there in my GSTR 1 and Amazon's GSTR 8. Matching will happen. If there is a mismatch, both will get information and both of us has to rectify. Either I'll rectify or he'll rectify. If there is no rectification, then action will be taken. If I have reported 10 lakhs and Amazon has said only 8 lakhs, government will not disturb me. Government will disturb Amazon. 2 lakhs. You have collected short TCs on 2 lakhs. Ulta. I have reported 8 lakhs. Sold through Amazon. Amazon has reported 10 lakhs. Sold through Amazon. Government will catch Amazon or me? Government will catch me. Hey, you have sold 10 lakhs, but you have paid GST only on. If it is action against me, GST collection. If it is action against Amazon, TDS collection. TDS? Simple. Matching. That's a matching concept. Which is there only in your TCS. So 3 important concepts of annual statement, GSTR 9B, 31st December of next financial year, same like your annual return. Calling of information from ECO, Amazon has to share the information whenever called for within 15 days. If not, penalty will be that 25,000 plus 25,000. And matching GSTR 1 of supplier and GSTR 8 of ECO. That is there only and only in TCS. Are you guys clear with this understanding? Questions are asked only from applicability and non-applicability. Questions are asked only from applicability and non-applicability. When it is applicable, when it is not applicable. And questions are asked generally from TDS. 2.5 lakhs. So generally they ask only from TDS. Only from your TDS. Now, moving on to the next small topic, which is your returns. Understand, return filing has got certain basic thumb rules. We are not going to discuss the exception because they are not so important, but basic thumb rules. Repeatedly ICAS asks as a 1-mark statement. Comment on this fact, whether true or false. ICAS asks them repeatedly, 1-mark question, whether the following statements are true. Then they'll ask few questions. Now we are seeing the general thing. Exceptions, I'm not touching because exceptions are not so important. If you have time, you can go through the exceptions. But general statement we'll see. In return filing, can I rectify my mistake? Very, very favorite question of ICAS. Is revision of returns possible? Louder. Not possible. Revision is not possible. If I filed April return wrongly, I cannot revise my April return. If I find the mistake of my April return in December month, I can rectify the mistake of April return while filing my December return by doing plus and minus. By doing revision not possible. Revision not possible. I cannot revise my return. All I can do is only, so this statement you are finding in red color, repeatedly asked point. Can I revise my returns? No. Can I rectify it? Yes. What is the difference between revision and rectification? April month return filed wrongly. Can I revise the April return? No. I have found that mistake while filing December return. Now I can rectify the mistake of April While reporting my December return, whatever was the mistake in April return, I'll do plus or minus. December transaction plus or minus corrections of April. Plus or minus corrections of April. And what is the last day for rectification? We already discussed. Louder. 30th number of next financial year or actual date of filing annual return of that financial year, whichever is. What is the last return in which I can rectify my errors? Don't tell October. October of next financial year, not October. If it is financial year 24-25, the last of the return in which I can rectify my mistake is October 25. I can rectify my mistake within that year. I can rectify my mistake in April 25, May 25, June 25, July 25, August 25, September 25, October 25 to be filed on or before 30th. Assuming my annual return is filed after that. Assuming. Because it is whichever is earlier. Last possible return is October. It is not always October because I may have filed my annual return earlier than not possible. Clear? There is one more condition for rectification. I can rectify my mistakes only if I find out the mistake, not if department is finding out the mistake. So there are two conditions for rectifications. One, time limit. Second, who's finding out the error? If I am finding out my errors or omissions, I can rectify. But if these errors or omissions are found out by officer during audit, inquiry, inspection, enforcement, etc., whatever is the reason, it might be during audit, scrutiny, inspection, enforcement, anything. What is the point here? I did not find out the mistakes. Who found out the mistakes? Tax authorities, officer, proper officer. I cannot rectify. Though I may have the time, but I cannot rectify. I cannot. So what are the two criteria for rectification? I should have found my mistake and that's the timeline. I should have rectified within the timeline. These are the two criteria for rectification. Clear? This is the first concept. Second concept. Can I file my May return without filing April return? No. I have to first file my April return. Then I have to file my May return. And for regular taxable person and casual taxable person, it is not only one return, it is two returns, GSTR 1 and GSTR 3B. So there it is more tricky. First I have to file April month's 1, then April month's 3B will open. Then I have to file April month's 3B. Only then May month's 1 will open. Then I have to file May month's 1. So when I have two returns, can I file April month's 3B without filing April month's 1? No. First April month's GSTR 1, then April month's GSTR 3B. After that May will open. Then May month's GSTR 1, then May month's GSTR 3B. So that is the point. Clear? Should I file my nil returns? Mandatory. Even if there are no transaction, I have to file my nil return. I cannot tell the transactions are not there, I will not file. No, I have to file my nil returns. If I get a notice and if return is not filed, will I get a notice if I don't file return within due date? Yes. Not always, but if officer wants, he can give me a notice under section 46, right along with rule 68, telling that you have not filed your return within due date, please file your return. And when I get a notice, I have to file my return within 15 days. After notice, though due date has gone, notice may come after 6-7 months. The moment notice comes, they'll give me 15 days opportunity to file with late fees. Obviously, it is with, because due date has gone, I will file. If not, they'll take next adverse action. Misjudgment and all, they'll take next adverse actions. Can I file my return after 3 years of due date? I can file my return after due date, but they have set a boundary. You cannot file your return after due date at any point of time that you want. You can file your returns after due date, but within 3 years of due date. Supposing today, April 25 return is filed. What is the due date of April 25? GSTR 1 is 11th May, 3B is 20th May. Let us only focus on 3B. 20th May 2025. I can file my April 2025 GSTR 3B after 20th May 2025, any month, but before 26, 27, 28, on or before 20th May 2028. So portal will not allow to file April 2025 25 written after 20th May 2028. And every return will have a different due date. If it is TDS, the answer would have been different. If it is annual return, the answer would have been different. For annual return 24-25, what is the due date? 31st December 2025. So I can file my annual return for 2024-25 till 26, 27, 20. 31st December 2000. You got that point? 3 years. You can file after due date, but within 3 years of due date. Clear? Clear? And if I'm filing my returns late, should I pay late fees? Yes, for sure. You have to pay late fees. So if I'm filing my returns late, I have to pay late fees. Late fees are different in different cases. Late fees are different in different cases. Now what are the late fees? What are the late fees? Late fees is different for GSTR 1, 3B, but you can always merge GSTR 1, 3B and GSTR 4. You can read it together. Late fees of GSTR 1, 3B and 4, you can read it together. Why? You'll understand. If my GSTR 1, 3B, who files GSTR 1, 3B? Regular taxable person and casual taxable person. Who files GSTR 4? Composition taxable person. If my returns are nil return also I have to file. If my returns are nil return but I am filing after due date, there will be late fees. What are the late fees? Very less late fees, 10 rupees per day or 250. If I filed 5 days late means 50 rupees or 250, whichever is lower. So 50 rupees. If I filed 30 days delay means it is 10 rupees per day means 10 rupees for 30 days, 300 or 250, whichever is you do. And whatever late fees we are discussing is of CGST. Copy paste. I'll be only discussing CGST late fees. Copy paste. Copy paste. Clear. Nil return. Even for GSTR 4, same. 10 rupees per day or 250, which is low. If my return is nil, same. Whether it is my GSTR 1 or 3B or 4, if the return is nil return, late fees is rupees 10 per day or 250, whichever is lower. Whichever is, this is CGST late fees. Copy paste. Sir, how to find out delay? I need not tell. Supposing your GSTR 1 due date is for April is 11th May. You filed on 15th May. How many days delay is that? That you can easily find it out. 4 days. From due date, what was the late? 4 days. But if the return is not a nil return, then it depends whether you are small, medium or big. Small, medium or small, 1.5 crores. Your aggregate turnover is 1.5 crores. Medium, your turnover is more than 1.5 crores but up to 5 crores. Big person. Whenever you're talking about concept, whether you're a small person, big person, medium person, is it aggregate turnover or state turnover? Louder. Louder. Automatically. So you find what? Aggregate turnover. Whether you will know whether you're small, big or medium based on aggregate turnover of current year or previous year. Supposing you're filing April 2025 return, you know the current year aggregate turnover? You don't know. You will see obviously. Do not by heart it. When you are trying to find out small, big, aggregate. Whether it is current year, it cannot be current year because I am filing my current year return. It should be obviously. Simple. Clear? So late fees will be less for small, a bit higher for medium, a bit higher for big. Simple calculation. So what is the late fees for small? 25 per day or 1000 whichever is. Everywhere it is whichever is. And everywhere this is for CGST. Copy paste. For medium 25 per day or 2005, whichever is lower. Copy paste. For big 25 per day or 5,000. See, 25 per day is same. It is 1,000. Upper limit is different. 1,000 maximum, 2,500 maximum, 5,000 maximum. And this all figures are only for CGST. Copy paste will be CGST. Simple. Why I said you need not read for GSTF4 separately? Because think of GSTF4 composition scheme person. A composition scheme person will always have aggregate turnover in previous year up to. A composition scheme dealer will always have previous year aggregate turnover only up to. What is the maximum limit for composition scheme? Obviously, you'll always be fitting in the. So, what will be the late fees here? 25 per day or 1,000, whichever is. We need not buy at them separately or read them separately. You can mix them. For a composition scheme dealer, obviously, previous year aggregate turnover will always be less than or equal to 1.5 crores. Clear? So, this is the late fees for GSTR 1, 3B and 4. Now, what are the late fees for government? Government is giving late fees for themselves. Whether they will give high late fees or low late fees. So, what is the written by government? GSTR 7. Rather, I missed out one point in your TDS. Now, it is not only for government, it is also for a metal scrap dealer. Correct? Correct. So, I'll just take that point and I'll come back here. So, earlier TDS was only when the recipient is government. Now, TDS is also when the recipient is registered. So, when you're dealing with metal scrap dealer, if the supplier is unregistered, recipient is registered, it is RCM, no TDS. Because supplier unregistered, recipient registered, then it is section 93 RCM. Pay and take the credit. If supplier is registered, recipient is also registered, FCM, but recipient will also deduct TDS. Recipient will also deduct. I repeat, supplier unregistered, recipient registered, then it is RCM, no TDS, only RCM. If supplier is registered, recipient is, it is FCM. Supplier will collect and pay, but recipient will deduct TDS. Recipient will deduct TDS. Clear? In recipient, both the cases should be registered. For RCM, he should be registered. For TDS also, he should be. Clear? So that was a missed point. Now, coming back here, prima facie TDS is for government. Now it is coming for metal scrap dealer, but is an exception. Prima facie it is for government. So government tells late fees for us. Now there's no differentiation between nil return and normal returns. For 1, 3B and 4, nil return lesser, normal return higher. Now there's no differentiation between nil return and normal return. Same late fees, whether it is nil or normal. But what are the late fees? 25 rupees per day or that same category of small, rupees 25 per day or 1,000. You will not understand this unless you see late fees for other people. Late fees for what are the other returns? GSTR 5, non-resident taxable person. 5A, OIDRS, OMG from outside India. 6, ISD. 8, TCS. 9B, TCS annual statement. 10, final return. For all these returns, what are the late fees? Whether nil return or normal return? 100 per day or now compare both. It is 25 and this is 100. This is and this is government tells for us it is 25 per day or 1,000, whichever is lower. CGST copy paste SGST. For others, when I tell others other than 1, 3B, 4, what is other than 1, 3B, 4? It will cover 5, 6, 7 is tedious, forget about 8, 9B, 10. So what about 9? 9 will come separately. Right. So for them, it is 100 per day or 5,000, whichever is lower, whichever is CGST copy paste for. Now when you compare late fees for GSTR 7 with late fees for other return, you are surprised with the difference. For government themselves 25 per day or 1,000, for others 100 per day or 5,000, whichever is lower. Clear? And finally late fees for your Annual return 9 and 9. 9A is a ghost. Forget about 9A. 9A no one has ever seen, no one will ever see. No one has ever seen, no one will ever see. Just like your Vikram movie. Right? Kamal Hassan. கொஞ்சம் டைம் ஆகும் ரீச் ஆகிறதுக்கு. Right? No one, it's ghost. No one has ever seen him. So just like that particular movie. It's actually not unwarranted. No one has still ever filed GSTR 9A. And 9A is of no use because it is to be filed by composition taxable person. And a composition taxable person already files a yearly return GSTR 4, that too on 30th June. So 9A is typically of no use. I believe after some time they will actually remove this itself. So it is GSTR 9. GSTR 9. GSTR 9 again split into 3 categories. Small, medium, big. It is all like your pizzas. Small, medium and big. So small, now the definition is separate. Small is up to, so that big was 5 crores. Here small is up to 5 crores. Then medium 5 to 20 crores. Big. So for small, big and medium, whether you use state turnover or aggregate turnover. To find out whether you have small, big or medium, aggregate turnover or state turnover. Don't mix it. I have given you a very simple funda to remember when aggregate turnover, when state turnover. Are you trying to find out the number or are you trying to find out which category? So aggregate turnover or state turnover? Louder. Aggregate turnover. But wait, normally I tell aggregate turnover of previous year. But suddenly sir, here it is aggregate turnover current year. Because annual return is not filed in the same year. Annual return is filed after the year is over. For 24-25, what is the due date for annual return? 31st December 2025. So you know aggregate turnover of annual, that year itself. You know aggregate turnover of 24-25 itself because it is filed later on. It is filed. So aggregate turnover of same year, current year. Right? Clear? Now, these are the categories. What are the late fees? Late fees is point, sorry, 25 rupees per day or 0.02%. Wait, now it is about calculating the number or seeing whether you are big or small. Calculating a number, which means it is turnover inside the state. 0.02% of not pan India turnover, that state turnover which you are filing late. I am working in Tamil Nadu, Maharashtra. Maharashtra, I filed GSTR 99. There will be no late fees. But Tamil Nadu, I filed it later. There will be late fees. When I am calculating late fees, it will be 0.02% of Tamil Nadu turnover. But for finding whether I am covered by small category, medium category, big category, I will take both Tamil Nadu and Maharashtra turnover to see whether I am in small, medium or large category. Clear? Best example to explain and put a full stop to my point. You need not bias when aggregate turnover, when state turnover. For seeing whether you are big, small, small, medium or big person or large person, you use aggregate turnover. But for calculating the number, you use state turnover. You use, coming back to the small category, what are the late fees? It is 25 per day or 0.02% of state turnover, whichever is lower. Everywhere it is whichever is lower. CGST copy paste. But if it is a medium category, that 25 increases to 50 per day and that 0.02% remains. So it is 0.02%, which is 0.0002. Sorry, 0.0002. Yes, 3 zeros and 2. 0.02%. So please carefully calculate it. And finally, if you are in large category, 25 becomes 50, 50 becomes 100. 0.02 for small and medium category, but for large category, 0.25% of state turnover. And whatever late fees we are discussing for all the returns is whichever is lower, whichever is, and the amount is of CGST. Copy paste, done. So few times late fees has been asked. Calculate the late fees. Different for 1, 3B, 4. Different for 9. Different for 7. Different for 1, 3B and 4 separate. Nil separate, normal separate. For 9 separate. For 7, separate. Then for others. For others. Are you guys clear with this understanding? Different late fees for different returns. Now what we are going to discuss is all the different returns together. All the different returns together, we'll have a comparison chart and wind this up that different types of returns you have. And by the way, you don't have your GSTR 11 UIN, you don't have your ITC 04 job worker return, and also you don't have your ISD return GSTR 6. So we'll not be discussing them. You don't have. ISC concept is not there at inter level. It is there only at final level. UIN concept, unique identification number, international bodies. Though it is given as a passing reference in your syllabus, but detailed discussion is that only at final level. ITC 04, principal filing job workers return. What goods went to job worker, what came back from job worker is not there at your inter level. Rather, this is part of ITC chapter, but it is not there at your inter level, it will be there at your final. So we'll not, though as a passing reference you may find in your institute material, but questions will never be asked, can never be asked because it is detailed discussion not given there at your inter level. So we are removing 6, 11 and ITC 04. Now, please understand, can you file your return without paying the taxes? No. A return can be filed only after your payment of self-assessed tax. And that is a valid return. You actually cannot file your return without payment of taxes. Portal will not allow you. Portal will not allow you to file your return before payment of taxes. And returns can be filed only and only by a registered person. If you are not registered, you cannot file any of the returns. If you are not registered, you cannot file any of the returns. So returns are filed by registered person. And when returns are filed, you can file your return only after you pay your self-assessed tax. See, you may do wrong self-assessment. Your liability is 1 crore, but you're showing only 10 lakhs. Let it be. But the 10 lakhs should have been paid. The 10 lakhs should have been paid for you to file your return. So, all the returns are filed only after your payment of taxes. Now, what are the returns that you have? Regular taxable person and casual taxable person will file GSTR 1 and GSTR 3B. Correct? Composition taxable person will file GSTR 4 and quarterly payment CMP 08. Quarterly payment CMP, yearly return GSTR 4, quarterly payment CMP 08. NRTP will file GSTR 5. OIDRS OMG from outside India will file GSTR 5A. GSTR 5A. These are the people who are paying taxes in India, but they are outside India. They are outside India. Online information and database access and internet services, online money gaming services from a supplier who is sitting outside India. They have to get registered in India and pay the taxes. So they'll file a simplified return. TDS, TCS, TCR rate. Clear? What is the due date for your 1 and 3B? Regular taxable person, casual taxable person will file 1 and 3B. But in 1 and 3B, you have your MRMB scheme, you have your unwanted, unnecessary, time pass, bogus, waste, utter nonsense QRMB scheme. This scheme is so waste, even ICA seldomly asks questions on QRMB scheme. And government thought it will be a very successful scheme. It is a bogus scheme. No one actually goes for it. And after a few years, you'll be surprised to find that the scheme is removed. I am very highly hopeful that this will be removed. Quarterly return, but payment is lot of complication. To understand this scheme, we have to spend 2 hours of time. Really, if at all I want to explain this scheme, questions can be beautifully asked. But thank God ICA is not asking questions on this QRMP scheme. Because to understand the scheme, this scheme is supposed to be a simple scheme for small people. But scheme is so complex that small people will tell, that was better. MRMP scheme is better. So QRMP scheme can be opted only if your previous year aggregate turnover is up to 5 crores for small people. For small people. But it is optional. If you want, you can go for it. Even if your previous aggregate turnover is up to 5 crores, you can always go for MRMP scheme. You can always go for MRMP scheme. Now, I'll show a gist of complication. We are not going to see entire of QRMP scheme because it is never asked. Believe me, if QRMP scheme from question point of view is to be asked, you can have superb questions. But ICA has never asked it. I do understand the logic of ICA because it is a nonsense scheme. So ICA has restricted itself in asking basic, very, very basic questions of QRMP scheme. One, you have mini Italy, then you have Italy, then you have payment and 3B. So this is the normal thing that you have. Let us talk about 3 months. 1 quarter, April, May and June. Please understand, if you are under MRMP scheme, you don't have IFF. So you never have invoice furnishing facility. What is the due date for GSTR 1? 11th of May for May month. 11th of June for June month. For payment and 3B. 20th of May. For May month, 20th of June. For July month, do you have July? So payment will be followed by 3B. Payment and 3B, same due date. Same due date. 11th of next month, 20th of next month. Simple. 11th of next May, payment and 3B, 20th of next month. But when it is your QRMP scheme, first month you'll have IFF. If one is Italy, IFF is mini Italy. First month you'll have invoice furnishing facility, which is nothing but GSTR 1 only. Which is nothing but sales report. GSTR 1 only. What is the due date? 13th of May for April month. No one. For May, 13th of June, GSTR 1 will not be there. For July, now IFF. When you have main Italy, you will not have mini Italy. So for the entire quarter, 13th of July is GSTR 1. Whatever you have not reported in IFF, you can report in GSTR 1. So when I have written GSTR 1, I have not only written for June month. It is for April, May and June. What already you have reported in IFF, don't report it. Rather in IFF, you can report only B2B, that too up to 50 lakhs. So B2C will be finally coming in GSTR 1. And B2B above 50 lakhs, which is not reported in IFF, will come in GSTR 1. See, June, don't call it as June month's GSTR 1. GSTR 1 will have June months all transactions, B2B, B2C. April and May months missed out transactions. What are the missed out transactions? B2C will not be reported. It will be reported now only. B2B will be reported only up to 50 lakhs. Anything above 50 lakhs will come now in GSTR 1. Payment and 3B, I guess we have easily discussed. I mean, at least 1 hour back, we have already discussed about payment and 3B, correct? QRMP scheme. What is the due date of payment for first month? 25th of May. 3B will not be there. For May month, 25th of June. 3B will not be there. For July month, it is not for July month. For the entire quarter, April, May and June, the balance payment, if at all that is there, and the 3B. Now payment and 3B will come together. What is the date? 22nd for the southern part of India, 24th for the northern part of India, July. I need not go into depth. This itself is very sufficient for me to show the complication. Mini Italy, then Italy, what you have not left, what you have not reported, now reported. It's all so complicated. Payment you do, payment also you have some special method called as fixed sum method and self-assessment method. If you're paid less, finally pay the balance amount, which means when I come to the end of the quarter, I have to do homework for first month and second month again. I have to do that homework. Rather, my life was better. 1 month I report it, I close it. I need not see that month again. So it is a highly complicated scheme. I'll show one more complication. When you are entering the scheme, there's a window. You cannot enter when you want. First, your previous year turnover should be up to 5 crores. You can enter that particular scheme. You should not have any pending returns, which means all the returns for which due date has gone, you should have filed that return. That's normal. There's a window. You can enter that scheme only in that window. First day, second month, previous quarter. Last day, first month, current quarter. First day, second month, previous quarter. So if I want to go for QRMP scheme from April onwards, first day, second month, previous quarter. Previous quarter is Jan to March. Second month is February. First day is 1st Feb. So 1st February 2025 till last day, first month, current quarter. What is the current quarter? April to June. What is the first month? April. What is the last date? So if I want to go for QRMP scheme for April to June, my window is 1st February to 30th April. So that is the level of complication. Forget about all the complications. All you need to remember is 5 crores. All you need to remember is you are eligible for QRMP scheme if your previous year aggregate turnover is up to 5 crores. And the moment your current year aggregate turnover crosses 5 crores, you cannot be under QRMP scheme. You have to go outside QRMP scheme, but not immediately. It is not, please don't mix this and composition scheme. People confuse this. This is not, this is regular scheme, QRMP. This is regular scheme. It's not composition scheme. So if at all your current year aggregate turnover crosses 5 crores, you have to go from QRMP scheme to, you are under regular scheme only, but you are shifting from QRMP to MRMP, but not immediately. Next quarter. Supposing my current year turnover crosses 5 crores in November month. I am in October to December quarter. I need not go to MRMP immediately. I'll go from Jan onwards. I have to go to MRMP scheme. I've just given you 60-70% of your QRMP. There are other 40-50% which is left out. But this is the complication which is there in your QRMP scheme. What are the questions which are asked by ICAI? Entry point 5 crores. Exit point is also 5 crores. Entry point is previous year aggregate turnover. Exit point is current year aggregate turnover, but not immediately. It is not immediately. It is from next quarter. It is from next quarter. Clear? So that is your due dates. And composition scheme, we are done with this entire due dates, MRMP scheme and QRMP scheme. What is the composition scheme due dates? Quarterly payment, yearly filing. We have completed both. What is the quarterly payment due date? April, May, June. 18 July. July, August, September. 18th October. October, November, December. 18 Jan. Jan, Feb, March. Quarterly payment, CMP 08. Yearly return filing. What is the yearly return filing? GSTR 4. Earlier it was 30th April, now it is 30th June of next financial year. Done. This is your composition scheme. Quarterly payment, CMP 08. Yearly return, GSTR 4. Non-resident taxable person. This is actually repeated, yeah. GSTR 5. Now payment, now onwards, payment and return, same due date. Payment and return, same due date. What is the due date? It is 13th of next month or 7 days from the last date of registration, whichever is earlier. 13th of next month. For April month, 13th May. For May month, 13th June. For June month, okay, what if the last date of registration is 7th June? What if the last date of registration is 5th June? You are there registered for NRTP, CTP is only temporary. 1st April to 5th June. Your registration is valid only till here. Right? What about April month? You'll file 3 returns. April month. 13th May. Or what is the last date? 7 days from last date of registration is 12th June. Which is earlier? Second. 13th June or 12th June? Which is earlier? 12th June, not 13th June. 3rd, for June 5 days. 13th July or... So without asking this question, if I tell, can there be same due date for 2 months return? No, but now, yes. You're not going to file one return. May will be separate return, 12th June. June 5 days will be a separate return, 12th June. Clear? 13 days, 13th of next month or 7 days from the last date of registration, whichever is earlier. Whichever is, can there be a scenario where there are 2 months returns but the same due date? Yes, possible. Not always. If I change the last date from 5th June to 10th June, then answer will be different. The same due date will not be the same. Due date will not be the same. Clear? Clear? This is your NRTP. This is your NRTP return. Payment as well as GSTR 5. Payment as well as GSTR 5. Now what about your GSTR 5A? Online information database and access and retrieval services. Classic example. All the apps that you're using on your phone, and if they are paid apps, and if the supplier is sitting outside India, that is OIDRS services. That is OIDRS. Whatever, even WhatsApp, Facebook, Insta, gaming apps, all are online information and database access and retrieval services. If the supplier is outside India, 5A. If supplier is in India, 1 and 3B. If supplier is in India, he is outside India, 5A. OMG, online money gaming. What better time than now? IPL, Dream 11. Right. All the nonsense apps promoted by all your role models. Correct. There's nothing but OMG, online money gaming, Rummy Circle. If you don't have, if you want to do some time pass, play Rummy. What is that? OMG, online money gaming. Lastly, when the advertisement is over, what will be done? This is having two risks, addiction and money. And these are the two things which you should be away from. Right? So OMG, supplier outside India, GSTR 5A. What is the due date of payment and GSTR 5A? Now payment and return same due date. 20th of next month. April month, 20th May month, 20th June month, 20th July. See, there is only one category, RTP and CTP, which will have two returns. Sales return 1 and final return 3B. Otherwise, it is only one return. Then TDS, TCS, we have already completed. GSTR 7, GSTR 8. Payment and GSTR 7, payment and GSTR 8. What is the due date? April month, 10th May. May month, 10th June. June month, 10th July. July month. So on. Simple. Right. So, but what have we completed? So, we have seen 1, 3B, 4, 5, 5A, 6 is not there for you, 7, 8, wait, some things are left out. 9 is left out. 9, 9A and 9B is annual return and annual statement. Now, your annual return is filed only and only by regular taxable person. So, 1 and 3B is filed by regular taxable person as well as casual taxable person. But GSTR 9 is only filed by regular taxable person. 31st of December of next financial year. GSTR 9 is filed by only by regular taxable person. Whether casual taxable person has to file annual return? No. Both casual taxable person and NRTP, they are temporary registration. They are not going to file annual return. They are not going to file. Only one person is required to file annual return. Who's that? Regular taxable person filing 1 and 3B. So what about casual taxable person? He is also filing 1 and 3B. Yes, he will file 1 and 3B, but he will not file GSTR 9. He will not file GSTR 9. 9A, time pass, ghost. Theoretically, yes. Composition taxable person will file theoretically GSTR 9A, same due date, 31st of December of next financial year. Which means April 24 to March 25, it is 31st December 2025. So 9A is theoretical. 9A is only theoretical. Practically, no one has ever filed. I believe no one will ever file. It will be removed sometime later. Right. So it's only theoretically. 9B, already discussed. 9B will be filed by whom? Eco, TCS. 9B will file. Right. Monthly GSTR 8 and yearly GSTR 9B. GSTR 9B annual statement. Same 31st December. Please understand, Amazon will have two registration. Normal registration where it will file 1 3B and 9, and TCS registration where it will file 8 and 9B. Likewise, few governments will have two registration. Normal registration where they will file 1 3B and 9, TDS registration where they will file GSTR 7. A registered metal scrap dealer will have two registration. Normal registration where he will file GSTR 1 3B and yearly GSTR 9, and for TDS purposes he will file monthly GSTR 7. GSTR 7. Clear? Now, annual return, one important aspect which you have to address. Who is only person who is filing annual return? Regular taxable person, no CTP, no casual taxable person. Right? Along with GSTR 9, at times you have to file GSTR 9C. Along with GSTR 9, you have to file at times GSTR 9C. If your aggregate turnover is more than 5 crores, you will file GSTR 9 with 9C. 9C is nothing but reconciliation statement reconciling the figures of GST annual return and your annual audited books of accounts. So your GST and books will be reconciled. When your aggregate turnover is more than 5 crores. 9 will be along with 9C. 9 will be along with, no need of CA, CMA certificate in 9C. It's self-certificate. Both 9 and 9C are self-certification. Self-certification. And there are few relaxation who will not file GSTR 9 and your GSTR 9C. There are few relaxations. 2 crores and all is all yearly basis. So we will not discuss 2 crores. That is every year they give that relaxation. So that is not important. Government whose books are audited by Comptroller Auditor General of India or any other statutory auditor will not file GSTR 9, will not file GSTR 9C. Will not file GSTR 9, will not file GSTR 9C. OIDS supplier, that is implied. OIDS supplier outside India will not file GSTR 9, will not file GSTR 9C because only one person in the entire list files GSTR 9, regular taxable person. So government can also be a regular taxable person, but it will not file GSTR 9 and 9C. Foreign airline companies will file GSTR 9, but no 9C. But conditions are there. If they give their Indian operations, receipts and payments duly audited by a chartered accountant on or before 30th September of next financial year for each of their GST number, they have to file GSTR 9, but not 9C. Government, if their books are audited by CAG or any statutory auditor, no 9, no 9C. Foreign airline company, they have to file 9 but no 9C, but the condition is there. What is the condition? Their Indian operations, receipts and payments should be duly certified by a chartered accountant for each of the GST number and submitted before 30th September. File 9 but no 9C. File 9 but no 9C. Final return after cancellation. After cancellation, GSTR 10 is filed only by 2 persons. Only and only by 2 persons. Only and only by 2 persons. Who are the 2 persons? Regular taxable person and casual taxable person. Regular taxable person and casual taxable person. So now, casual taxable person files annual return. NRTP will not file annual return, will not file final return. But casual taxable person will not file annual return, but he has to file final return. He has to file where he has to give the details of stock, and if at all there is any ITC which was taken there on stock, you have to make the payment of that. So final return will be that GSTR 10. What is the due date? 3 months from the date of cancellation or effective date of cancellation, whichever is later, not earlier. Whichever is cancellation came today, 11th of April, but effective from 1st of Jan. So 3 months will be calculated from retrospectively 1st of Jan or 11th of April. Today you cannot have calculate 3 months from the old date, whichever is later, whichever is later 3 months. You have 3 months time. No one else will file GSTR. This is the best way to know who files what return. Otherwise, you know the types of return, but you don't know who is filing. If generally I'm asking who is going to file annual final return, if I tell whether NRTP files annual final return, you'll have a blank. But now with this chart, you know, no, final return is only by two people, RTP and CTP. No one else. Composition taxable person, no final return. NRTP, no final return. OIDRs, OMG outside India, no final return. These people will not file these returns. And you know, even for annual return, who files it? Only a regular taxable person, not even a casual taxable person. Composition taxable person, dummy. 9A is there, but it is only a dummy. But 9B is there for eco. 9B is there for eco. So with this simple chart, we have summarized the entire chapter. We've summarized actually the entire chapter. What are the different types of returns and what are their due dates and who files them? Who files them? Different types of returns and what are their due dates? So this entire chapter is there in a single page. You do not see here and there. It's a single page. One return which is missing here is first return. First return is not a separate return. First return doesn't have a number. Because if you're a regular taxable person, your first return is 1 and 3B. Your first return is, it is not a separate return. It is the same return that you file. Final return comes at the time of death, cancellation. First return comes at the time of birth or rebirth. New registration or your revocation of suspension. Revocation of suspension. First return is a normal return that you file, but it is filed for a group of months together. I'll give a simple example to explain it. Right, so at times they have even tested first return. Supposing I am liable for registration on April month, but I get registration in July. So my first return, my registration certificate comes in July. Very long process is happening. So my first return will be only July return. GSTR 1 July, GSTR 3B July, but it will contain the transactions of April, May, June and July. A group of months data will be filed in one return which is called as first return. So my GSTR 1 will contain April, May, June, July transactions. My GSTR 3B will contain April, May, June, July transactions. Return will be only July return, but containing transactions of group of months. That is your first return. Final return comes at the time of death. First return comes at the time of two reasons. Birth, rebirth. Birth, new registration, rebirth, revocation of suspension. Revocation of suspension. Birth and rebirth. That is everything about your different types of returns and important areas of your return. Only another 1 minute. Portals are there. There are different types of portals you have. How many common portals you have? 3. One is your main portal www.gst.gov.in, where you do all the work, registration, payment, return filing, notices, replies, everything you do there. Right. That is the first portal, which is managed by GST Network, a Section 8 company. A Section 8 government company. It's non-profit plus government company. Major control is by government. Second portal is e-waybill portal, www.ewaybill.gst.gov.in. It works only for the purpose. The only work that it is done is e-waybill generation. It is not managed by GST Network. It is managed by National Informatics Center, which is a department of Ministry of Information and Electronics Department. It's one of the ministry of government. It is managed by government, not government company. National Informatics Center. National Informatics Center. Right. Third portal is e-invoice portal, www.einvoice1.gst.gov.in. 1 will be replaced by 2, 3, 4, 5, 6, 7, 8, 9, 10. So there are 10 websites. If you want to directly access it, you can access only the first website. Other websites will be accessed by GST Suvidha providers, your softwares. You cannot have an access. If you try to log in, it will show an error. They will be used by GST Suvidha providers. GST Suvidha providers, a companies which will help you to connect between your system and portal. You will not go to portal directly, they'll help you to go to portal. Classic example, Tally. Classic example is your Tally, right? They'll do all the works that you have to do on portal directly, right? So that e-invoice portal is also managed by GST network. GST network, which is a section 8 government company, non-profit and a government company. First and last portal are managed by GST network, but e-waybill portal is not managed by GST network, it is managed by National Informatics Center. We call all these portals as common portals. Why? Whether you're there in Tamil Nadu or Maharashtra or Delhi or Jammu or West Bengal or Punjab, same website. And the same website is used not only by the assessee but also by the officer. It connects the taxpayer, tax professional, tax officer, other tax higher officials, tax department, other government departments, banks, all will use the same website. Same website. Therefore, it is called as common portal. Others uses by way of internet. Officers will use it by way of intranet. Their internal system, they can do a lot more work than you can do. They'll have a lot of works. They can have the pending task. So it is designed in a beautiful way. That is the reason we call it as common portal. A few times questions have been asked about your common portal. So there are 3 common portals that you have. Written filing is taken care by all the works are taken care by the main portal, e-waybill portal, e-invoice portal. Everything else, main portal. Everything else is main portal. Now, starting with a simple topic, registration. So, when you talk about your registration, please understand there are sometimes basic aspects of registration. At times they have been tested. Registration is always PAN based. It's always PAN based. Without PAN number, you cannot have your registration. The exception for the same is your TDS registration, not your TCS registration. It is your TDS registration, where government can apply for TDS registration without having a PAN. So this is for government category, not for metal scrap category. Government category. Then the other exception is NRTP registration, where a non-resident taxable person can obtain registration obviously without a PAN, because he will not be having any PAN. But understand that there will be PAN in NRTP also, not of non-resident person, but of his authorized signatory, who should be an Indian resident and a valid PAN card holder. So when you talk about a non-resident taxable person, it is technically based on PAN, but not PAN belonging to non-resident. It will be PAN of authorized signatory who's a Indian resident. And we are not, there are other 2 special categories which we are not focusing more, but as a passing reference, we will also see them. UIN registration, international bodies. So, a lot of UIN registration will not be based on PAN. International bodies may not have PAN. So, it's not based on PAN. OIDRS, OMG registration. Supplier of OIDRS and OMG who are outside India, they will take registration in India and make the payment of taxes and also file a special return called as GSTR 5A. They will not be having PAN. So there are exceptions. TDS, NRTP, UIN and your OIDRS, OMG supplier outside India. Supplier outside, so it may not be based on PAN. Next is the concept of Aadhaar based registration. Please understand that when you are going for registration, you have to authenticate your Aadhaar. PAN is required, but Aadhaar is not so important, but it is there. Aadhaar authentication is mandatory. Please also understand that when you talk about Aadhaar authentication, Aadhaar is only for a natural person. PAN can be for a natural person as well as artificial person, but Aadhaar is only for a natural person. So next question will come, how is Aadhaar authentication being done? If it is a proprietorship concern, Aadhaar authentication is of a proprietor. If it is HUF, Aadhaar authentication is of a Karta. If it is a partnership firm, Aadhaar authentication is of any of the partner. If it is LLP, Aadhaar authentication is of any of the designated partner. If it is company, Aadhaar authentication is of managing director or whole-time director, any one managing director or any one whole-time director. If it is a trust, Aadhaar authentication is of a trustee. If it is AOP or BOI or society, Aadhaar authentication is of any member of the managing committee. So it is of a natural person only. Clear? So main person will go and authenticate this Aadhaar. In addition to these people, so Aadhaar authentication technically is of two persons. The main person and authorized signatory. And authorized signatory. In addition to them, Aadhaar authentication will be also of authorized signatory. So at times it might happen that only one person is taking Aadhaar authentication. Possible? Yes. Supposing there's a partnership firm and I'm one of the partner. I'm also the authorized signatory. So one Aadhaar authentication is possible. Why? I'm partner plus, so one is sufficient. But if I appoint my secretary as the authorized signatory, then I have to authenticate my Aadhaar plus this Aadhaar. This is Aadhaar authentication. This is all about your Aadhaar authentication. But there are exceptions where you don't require Aadhaar authentication. First is these people, certain people, they never require Aadhaar authentication, where you're talking about non-citizens and UIN. So if at all you are non-citizens, you don't require. A non-resident taxable person, the authorized signatory will authenticate the Aadhaar, but non-resident, no. UIN, no need of Aadhaar authentication. Government tells that we don't require Aadhaar authentication. Government is central government, state government, local authority, statutory body and public sector undertakings, they don't need Aadhaar authentication. So government as well as government company, they don't need Aadhaar authentication. Central government, state government, local authority, statutory body including your ICA and public sector undertakings, that is government company, no need of Aadhaar authentication. No need of Aadhaar. So second category is government category. First category is special category, non-citizens and UIN. These people, they don't require Aadhaar authentication, they are exempted. Other people, whether Aadhaar authentication is mandatory, yes, but they have an option. What they can do? They can ignore Aadhaar authentication and they can tell that I don't want to link my Aadhaar, I will go for mandatory physical verification. So others can tell that I am not interested in Aadhaar authentication, I am ready to go for registration after my physical verification of business premises is done. So if you are covered by others, which means you are not covered by exempted category, non-exempted category. I said Aadhaar authentication is not so important like PAN. PAN you don't have an option, but Aadhaar authentication you have an option. Don't go for Aadhaar authentication, tell that I am ready for physical verification of my premises. Which are the categories where you have to go for physical verification of your premises? Only after that registration will be received. First is you are not going for Aadhaar authentication. Second is you go for it, but it is failing. You try, but it is not linking. Third, you try and it is successful, but you are a risky category SSC. You are a risky category SSC. Data analysis and risk parameters, the inbuilt software tells that no, this is a risky category SSC. Physical verification is required. It is a risky category. See, first, you don't want to link Aadhaar. Second, you want, but it fails. Third, you want, you link it, it is successful, but risky category. For them, what will happen? Physical verification is mandatory, only after that registration will be given. Physical verification before registration. Can there be physical verification after registration? Yes. But for these categories, it is always physical verification before grant of registration. For other, generally, can there be an optional physical verification? Yes. This is mandatory physical verification. This is mandatory physical verification before grant of registration. Can there be an optional physical verification after grant of registration? Yes. There can be. But it is optional and it is after. It is optional and it is after. But this is mandatory and this is before grant of registration. Now, next category is state-based registration. One state, one registration. One state, right? So if at all you're working in 5 states, if you're having branches in 5 states, 5 registration. If you have branches in 10 states, 10 registration. Now there are exceptions. First, when you talk about entire India, 1 registration is the first type of exception. Entire India, 1 registration. UIN, certain UIN, unique identification number, international bodies, they will have entire pan India only one registration based in Delhi, based in Delhi, international bodies. And when you talk about OIDRS, OMG from outside India, these suppliers are outside India but paying taxes in India. Entire India, they'll have only one registration. Entire India, they'll have only one registration. OIDRS, OMG from outside India, entire India, only one registration. Right? So, first type of exception is, though you have presence, the international bodies may have presence, World Trade Organization or World Health Organization may have presence in multiple cities in India, and they'll be having unique identification number. Whether they'll take in each state UIN? No. Entire India, one UIN. OIDRS, OMG from outside India, they'll be having normal GSCI number. But will they take registration in all the states in India? No. Entire India, one registration. UIN is based in Delhi. OIDRS, OMG will be based in Bangalore. The control is there in Bangalore. Additional information. Now, one more type of exception. See, normal answer is 10 states, 10 registration. But these exceptions that we have discussed is 10 states. There can be other type of exception. One state, one registration. Within a state, can you take multiple registration? Yes. Now it is ulta. All states, one. Now it is ulta. One state, multiple. One state. So there can be a scenario we are talking about one state, multiple registration. If you are a company which is having units in domestic tariff area and special economic zone within Tamil Nadu, supposing you have 10 branches, 8 in domestic tariff area and 2 in special economic zone. Normally Tamil Nadu means, but now you have to take mandatory 2 registration. One for 8 branches in domestic tariff area and one for 2 branches in SEZ. Mandatory. You don't have an option. This is mandatory. So what if I want to take more than 2 registration? Can I take in Tamil Nadu? Yes. How many branches do you have in Tamil Nadu total? 10. 8 in domestic tariff area and 2 in SEZ. Domestic tariff area is India other than SEZ. India other than SEZ. So normally in Tamil Nadu, if at all I am asking a normal question, 10 branches in Tamil Nadu, what will be your answer? How many registration? Normally 1. 8 branches DTA and 2 branches SEZ. 2. Can I take more than 2? Yes, but that is not mandatory. Mandatory is 2, 3, 4, 5, 6, 7, 8, 9 up to 10. That is optional. For each of the branch, if I want, each of the multiple place of business, that is each of the branch, if I want, I can go for optional multiple registration. Optional, it's not mandatory, it is optional. It is optional. In my example, where you have 8 branches in DTA and 2 branches in SEZ, what is the minimum mandatory registration? 2. So now you are taking multiple registration in Tamil Nadu, but it is mandatory. What is the maximum multiple registration that you can take as an option? Maximum 10. Each one for each branches. Each one for each branches. The fact that you are dealing with textile sector 5 branches, jewelry sector 5 branches does not have any impact. ICA may try to confuse you telling that 5 jewelry branches, 5 textile branches. No significance. If I am having 10 branches, 5 jewelry sector, 5 textile sector, there's no relevance. What I can do, I can divide Tamil Nadu into 2 regions. Southern, the lower part of Tamil Nadu and the upper part of Tamil Nadu. Southern part of Tamil Nadu, upper part of Tamil Nadu. So in that southern part of Tamil Nadu, I may have 3 branches of textiles and 2 branches of jewelry. I may go for 1 registration. In the northern part of Tamil Nadu, I may have 2 branches of textile and 3 branches of jewelry. I may go for another registration, multiple. So that business vertical is not relevant. Business vertical is not a relevant criteria. Are you guys clear with this understanding? So this is for your multiple registration. Multiple registration. Now, other important areas that you have. Repeatedly asked questions that you have, other areas. Now, when are you required to take registration? When are you required to go for amendment? When are you required to go for cancellation? Taking registration is just like your birth. Amendment is just like your life. In life, changes keeps coming. So amendment. And cancellation is just like your death. Cancellation is just like your death. So you're talking about registration. When assessee will take registration, either assessee is liable for registration under section 22 or 24. Turnover based registration 40 lakhs, 20 lakhs, 10 lakhs, or compulsory registration section 24. Or he is not at all liable for registration, but he is going for voluntary registration. Voluntary registration. So assessee will apply for registration for two reasons. He is liable, therefore he is applying. Second, voluntary. Why will department give suo motu registration to assessee? Only one reason. He is liable for registration. This assessee is liable for registration but not applying for. So department will give suo motu registration. Department will give. Clear? Clear? When assessee will go for registration? Liable or voluntary. Department, when he will give a forceful registration to assessee, which is technically called as suo motu registration, liable for registration, but assessee is not coming forward. Please understand, amendment can never be done by department. Department can never tell that I don't like your face, change your photo and come. They can never tell that I don't like your mobile number, I don't like your mail ID, change it and come. I don't like the address of your branch. They can never tell. Amendment is possible only by assessee. Registration by assessee, by department. But amendment is only possible by assessee. But that has two categories: core field amendments and non-core field amendments. Core field amendment, important amendments. Important amendments. Name, legal name, place, and persons. Name, place, and person. Simple. Name, place, and change in legal name. Your PAN card name changes. Legal name means PAN card. Change in legal name. Second, place. You're adding branch, you're removing branch, you're changing principal place of business. That is place. Person. You're adding partner, removing partner, change of karta. You're adding director, removing director, change in authorized signatory, change in person. Name, place, person. Name, place, non-core field amendments. Certain examples. Again, name will come, but now it is not legal name, it is trade name. Today your trade name is Chennai Silks. Tomorrow you want to change it to New Chennai Silks. PAN card name is legal name. Brand name is whatever name you give. So today it's Chennai Silks. Tomorrow you want to change to New Chennai Silks. It's only change in trade name. PAN card name remains whatever it was. Say it is Chennai Silks Private Limited. Still it is Chennai Silks Private Limited. But earlier trade name was Chennai Silks. Now the trade name is New Chennai Silks. It's non-core field amendment. Or you're talking about change in mail ID, mobile number, non-core field. You want to change your one-time password, you will get and you can update it. Change in mail ID, change in mobile number. It's all non-core field amendment. Non-core field. What is the difference between core field amendment, non-core field amendment? Core field amendment, proper officer will approve it. Non-core field amendment, automatic approval. Automatic approval. Adding HSN, non-core field. Changing bank account, non-core field. So these are only examples. These are only examples. Now, ICAI focuses a lot of times only on the last part, cancellation. When you look at cancellation, first category is by assessee as well as by department. Second category only by department. See, registration was by assessee, by department. Amendment by assessee core field, by assessee non-core field. Cancellation, first category can be more by assessee as well as department. Second is suo motu only by department. Only by department. Now, why assessee or department will proceed for cancellation? Simple reason. Business is stopped. Business is discontinued. Stopping of business. Stopping of business. Or business is sold. The business is sold. Transfer of business, including death of a proprietor where father's business is carried on by his son. So that is also transfer of business, because PAN of father is different from PAN of son. You cannot continue the same registration. PAN of father is different from PAN of son. So father's registration will be cancelled, son will apply for New registration. Next, change in constitution with change in PAN. This can be asked beautifully by, I say, ABC and company. ABC and company. Earlier partners are ABC, now the new partners are DEF, and they have changed the name to DEF and company. What is the answer? ABC and company. Old partners are ABC. Now they have removed old partners, new partners are DEF, and they have changed the name of ABC company to DEF and company. What is the answer? They can go for amendment. Change in persons, change in legal name. If PAN number remains the same, they'll go for amendment. Cancellation, no. They'll go for, but if at all they have formed a new firm itself with a new PAN, then ABC has to apply for cancellation, DEF has to apply for. It's all PAN based. It's all PAN based. Next point is very interesting. You remember why you took registration, you'll get the answer. Why you took registration? You are liable for registration under 22-24. Now you are no longer liable. You took registration because you are liable. Now you are no longer liable. Or you took registration voluntarily. You took registration voluntarily. Someone misguided you, took registration voluntarily. But the moment you take registration, payment is must. You cannot take the benefit of 40 lakhs, 20 lakhs, 10 lakhs. What to do now? You are never liable for registration. You took registration voluntarily. Can you apply for cancellation? Yes. Opting out of voluntary registration. Opting out of. See why you took registration. You are liable. Now you are no longer liable. Or voluntary registration. Now you are not interested in voluntary registration. You are applying for cancellation. You are applying for. Look at all the 4 points. Different. First is stop. Then sale. Then PAN. Then you are running. Last point is there is neither stopping of business, not sale of business, not change in PAN. You are continuing your business, but your business have come down very small. Now your business is very, very small. Very less turnover. Very, very less turnover. So 4 reasons why SSC as well as department can go for cancellation. Now, this is actually directly asked. Why SSC would rather go apply for cancellation? You have to list down 4 reasons. Why department would go for suo motu cancellation? 10 reasons. So why department will go for suo motu cancellation? There are totally 10 reasons. Totally 10 reasons. First, you are not conducting business from declared place of business, which means you are doing business from secret place of business. Secret place of business. Second, you are giving invoice but not supplying. Bill trading. You're just giving fake invoices but no supply. Fake invoices but no bill trading. Third, you obtained registration itself by way of fraud, willful misstatement or suppression of facts. You have given all the documents, bogus documents. Rent agreement was bogus. Signature of landlord was bogus. That address never existed. So registration itself was obtained by fraud, willful misstatement or suppression of facts. So suppression of facts with this fraud registration. Next, you are not updating your bank account. There's a time limit for updating your bank account. You can apply for registration without giving your bank account details. Because when you go for bank account, they'll ask for GST number. So what the government does, you please get your registration number. We will not ask your bank account details. The moment you get your registration number, go to bank, open a bank account, come back and update on GST portal. So that's the time limit given in Rule 10A. That time limit is 30 days from the date of grant of registration or your due date of GSTR 1 or your first GSTR 1 or first IFF, whichever is earlier. If you have got registration on 25th of July, your first return will be July return. What is July month's GSTR 1 due date? 11th August. 11th. And what is 30 days from 25th July? 24th August. Because July will have 31 days. 24th, 11th August or whichever is. So 11th August, please make sure that you update your bank account details. Otherwise, your registration will be maybe cancelled. Maybe cancelled. Next, anti-profiteering. This has got no significance as of today because anti-profiteering was relevant when GST came out. With GST, you get more and more credit, so your cost should be less. So even though if your cost is less, but you're having the same price. So when your cost decreases, you have to reduce your price. But if you're keeping the same price, your profit increases. If your cost decreases, but you're not decreasing your selling price, your profit. This is called as anti-profiteering. Today, it is not relevant. It was relevant when GST was introduced. When GST was anti-profiteering, section 171, or 1% payment. Minimum 1% cash payment. Government becomes bigger. Government tells that you have huge credit. Normally, if I tell that you have credit of 120 rupees and output tax is 100 rupees, how much you will pay by cash? You have input tax credit 120, output tax 100. How much you will pay by cash? ITC 120, output tax 100. How much you will pay by cash? I have reversed the question. Just ITC is 120, output tax is 100. So sale output tax is 100, purchase input tax credit is 120. You will not pay anything by cash because your output liability is 100 and credit is 120. You will pay 0 by cash. 20 rupees will be carry forward. Right? But certain people, they are asked to pay 1%. When your monthly sale is more than 50 lakhs. When your monthly taxable sales, don't count exempt sales, don't count export sales. Don't count exempt sales, don't count export sales. Zero rated, don't count exempt. Only your taxable sales within India is more than 50 lakhs. For the same question, what will be your answer? What answer you gave? Output tax 100 and input tax was 120. So what answer you gave? What answer you gave? You said output tax is 100, input tax I have 120, so I'll use only 100, and ITC carry forward was 20 rupees, correct? So this is your gross output tax, this is net output tax paid by cash. But for the same question, if 86B is applicable, if rule 86B is applicable, when your monthly sales in that month is more than 50 lakhs, only taxable supply not including, exempt supply not including, zero rated supply. Don't count exempt supply, don't count zero rated supply. If it is more than 50 lakhs, then 1% you have to pay by cash. So they will at least 1 rupee pay by cash. 1 rupee, 1% of what? Your output tax liability. 1% of your output tax, not your sale value. 1% of your output tax, pay by cash. So how much credit you will use? 99 only, because you have to pay 1 by cash. So credit usage will be 99. And how much credit will be carry forward? See, I had 120 rupees credit, but now I am using only 99. What is the credit carry forward? So I had 120 rupees credit, but I am using only, how much credit is carry forward? So actually, technically speaking, there is no loss, but your working capital is blocked. Earlier, you are not paying anything by cash because you had 120 rupees credit, you use entire 100 rupees, whatever was required, and your credit carry forward was 0, but you had nothing to pay by cash. Now you're paying 1 rupee more by cash, but your credit carry forward is also more. So net loss, there's no loss for you, but your working capital is affected because earlier by cash is 0, credit carry forward is 20. Now credit carry forward is more, you get more credit carry forward, but you have to pay by cash 1 rupee. You have to pay by cash 1 rupee. This is called as Rule 86B. Rule 86. By the way, Rule 86B is not applicable for government and government companies. Government and government companies. This is also not applicable if at all your income tax payment is more than 1 lakhs in last 2 financial years for which due date of return has been over. Not only your income tax payment, if you are a company, either your company's income tax payment or managing director's income tax payment or two of the whole-time directors' income tax payment. If you're a partnership firm, either partnership firm's income tax payment or two of the partners' income tax payment. So that relaxation is there. Or if your refund of ITC is more than 1 lakh in last 2 years. Right? So they have that. Not last 2 years, last 1 year. If your refund of input tax credit is more than 1 lakh in the last financial year, the previous year. Income tax payment, they talk about 2 years. They talk about prima facie, they tell it is applicable for everyone, but then they give relaxation. For government, not applicable. If your income tax payment is more than 1 lakh, not only your income tax payment, but two of the important persons. If it is partnership firm, either partnership firm or two of the partners. If it is a trust, it is either trust or two of the trustees. Income tax payment is more than 1 lakh in last 2 years, not required. Or your refund of ITC. ITC refund can be claimed only by an exporter or inverted duty structure. Is more than 1 lakh in last financial year, not applicable. So these 3 cases, it is not applicable. And for others, it is applicable only when your taxable sales is more than 50 lakhs. Taxable sales. Forget about exempt sales. Forget about zero-rated supply sales. Only your taxable sales is more than. So it is not applicable every month. 1 month my taxable sales is 40 lakhs. I'll go with left-hand side option. Next month my taxable sales is 60 lakhs. I'll go with right-hand side option. So it is not applicable every month. It is not applicable month by month. 1 month my taxable sales is 60 lakhs. It is applicable. Other month my taxable sales is 40 lakhs. It is not applicable. Next, I am claiming excess ITC. I should not have claimed ITC, but I am claiming excess ITC. I am not satisfying the condition by claiming ITC. Government has a problem with 2 things. If I claim more ITC, government has a problem. If I pay lesser output tax, government has a problem. So my sales in GSTR 1 or 1A. 1A is an amendment that you can do immediately after filing 1. My sales in 1 or 1A is more than 3B. What is the meaning of it? Meaning of it is I am paying lesser tax. My sales in GSTR 1 are shown as 10 crores. But payment will not be there with 1. We have discussed return filing. Payment will be there only along with 3B. My sales in 3B is only 1 crore. Sales in 1 is 10 crores, but sales in 3B is only. What is happening? I am paying tax only on 1 crore, but my sales in GSTR 1 was. So I am enabling others to take credit on 10 crores, because when I file my GSTR 1, opposite party will get in GSTR 2 and 2B. So I am enabling others to take credit on 10 crores, but I am paying tax only on. So government has problem only in 2 cases. I claim more credit, previous point, excess credit. I pay less tax, this point. I pay less tax, short output tax. Right? And government has problem even with non-filers of return. So if at all I am under normal scheme. Normal scheme is not only for say MRMP scheme, even say for non-resident taxable person. Right? If I am not filing my return for 6 straight months. If I am not filing my return for 6 straight months, government has a problem. Or if I am under QRMP scheme, will I file monthly returns or quarterly returns? So 6 months will contain how many quarters? So if I am not filing returns for 2 quarters, either 6 months or 2 quarters, either 6 months or 2 quarters, right? Either 6 months or 2 quarters. But if I am under composition scheme, I don't file return monthly, I don't file return quarterly, I file return yearly. I file return. So for composition scheme, they are telling that I am going to file only yearly return, that to 30th of June of next financial year. After the due date, they will give me 3 months time. So I am not filing my return even after 3 months of the due date of filing composition scheme. See, please understand the difference. If they are talking about my GSTR 1 or 3B or GSTR 5, GSTR 1 or 3B or GSTR 5, I am not filing 6 GSTR 1 or 6 GSTR 3B or 6 GSTR 5. Forget about QRMP scheme. QRMP scheme, it is 2 GSTR 1 and 2 GSTR 3B. So multiple returns. For composition scheme, they are talking about GSTR 4. And they are talking only about 1 GSTR 4. If I am not filing my 1 GSTR 4, even after 3 months of due date, My due date for GSTR 4 will come on 30th June of next financial year. So 3 months will get over in July, August, September. So it is only one GSTR 4 which I am not filing even after 3 months of due date. Even after 3 months of due date. Non-filing of returns. And next, non-filing of returns even after 30 days from the order of revocation. This we have discussed indirectly while discussing input tax credit. Input tax credit has a time limit. 30th November of next financial year or due date of filing, actual date of filing of annual return of that financial year, whichever is earlier. But there was a special time limit. If my registration is cancelled and again there is a revocation, I can claim the credit in my first return filed within, read this point again. You are talking about non-filing of my first return within same point. So when I am reborn, I have to file my first return within 30 days for two reasons. To claim my ITC, to make sure that again it is not cancelled. Otherwise I again cancel my return. And finally, a funny scenario where a person is taking voluntary registration, filing returns properly. No issues, it's filing return properly. But his first 6 returns, not any 6 returns, first are all nil returns. 0, 0, 0, 0. Obviously, if you don't have anything to show, why are you taking registration? You start business, then come for registration. You start your business, then come for registration. So this is not about non-filing of return. This person is filing his returns properly. But every of his first 6 returns, not any 6 returns. The moment he took registration, he is filing his first return, second return, third return, fourth return, fifth return, sixth return. It's all 0. He has not commenced his business. These are the cases where officer will go for suo motu cancellation. In total, 10 cases. Secret place of business, bill trading, fraud registration, bank account, anti-profiteering, 1% cash payment, short payment of excess ITC, short payment of output tax, non-filing of returns, 2 categories. Non-filing of returns, and the last is your voluntary registration, not starting business for 6 months. Right? Direct questions are asked by I say, list out any 3 or 4 reasons where officer will go for, department will go for suo motu cancellation. And please understand, for cancellation, effective date of cancellation is always decided by officer. Whether you apply for cancellation or officer starts suo motu cancellation, who will decide what is the effective date of cancellation? Officer. It is only officer who will determine the effective date of cancel. It can be prospective date or it can be a. So today on 11th April, you can get a cancellation order effective from 11th April, or it can be effective from 1st Jan, or it can be effective from. Who will decide? So this is for cancellation, any case of cancellation. Now, another important area where questions are repeatedly asked. First area was the cancellation reasons. Effective date of registration. And I believe we have addressed a question yesterday so that you are aware of it. What is the effective date of registration? If you apply for registration within 30 days, I am liable on 1st of April. I apply on 25th April. Did I apply within 30 days? So my effective date of registration is 1st April. But if I am liable on 1st April, I apply on 15th May. Did I apply within 30 days? No. So what is the answer? It is neither 1st April nor 15th May. It is the date when the registration is granted. So if I apply for registration within 30 days of liable, then it is date when I am liable for registration. Any other case. So what are the possible any? There are actually multiple other cases. First, I did not apply for registration within 30 days. Second, I was never liable. I took voluntary registration. Third, Officer granted me suo motu registration. Officer granted me in all these three cases. My date of my effective date of registration is when the registration is granted. When the registration is granted. What are the three cases where my effective date of registration will be neither old date nor the present date when I apply? It will be future date when it will be granted. I was liable for registration, but I did not apply in 30 days. Voluntary registration. Department giving suo motu registration. Your registration will be effective only when you get the registration certificate. Grant of. So you are liable on 1st April, applied on 15th May, you got on 16th June. Your registration is effective from 16th June. Why is it so relevant? If I tell you your registration is effective from 16th June, you can take input tax credit only from 16th June. You have to pay output tax from 1st April. But input tax credit is only from, if I tell your registration is there, liable on 1st April, you applied on 25th April. So now, effective date of registration is 1st April. You have to pay output tax from 1st April. ITC is also eligible from, it is all about input tax credit. It is all about your input tax credit. What is the effective date for amendment? Effective date for amendment is when you apply for amendment. So initially they tell that effective date of amendment is when the change happened. Theoretically they tell that if change happened on 1st April, you have to apply within 15 days. Like for registration, you have to apply within 30 days. Amendment, you have to apply within 15 days. So initially they tell that if the change happened on 1st April, whether you apply within 15 days or after 15 days, it will be date when amendment happened. So it will always be 1st April. So whether you apply in 15 days on time or after 15 days, it will be date of change 1st April. But practically not so, even that is addressed in the exception. Then later on they tell that application shall not stand amended earlier than the date of submission. So suddenly they change the answer. They tell that it is neither when change happened nor when it is approved. Neither when change happened nor when it is the date when you applied. Whether within 15 days or after 15 days, it is the date when you applied. So it is the date of submission of application for amendment. So if I tell that a branch was added on 1st April, I applied for amendment on 10th April. Amendment is with effect from 10th April. I applied for amendment on 20th April. Amendment is with effect from 20th April. Whether I apply within 15 days or after 15 days, it is the date of application. It is not date of change. It is not date of approval. See, registration is dependent on old date or future date. Amendment is ulta. It is the date of application, current date. Date of application. Date of, but they give an exception. If you want 1st April as the answer, if you want 1st April as the answer, you can request the commissioner and he can approve in writing. In that case, whether you applied within 15 days or after 15 days, commissioner can make it effective from 1st April. Commissioner can make it effective from 1st April. Not so important, not us, but yes. When you are seeing effective date of registration and effective date of cancellation, you should also understand effective date of amendment. Effective date of amendment. Now, we are going to evaluate this area and the next area are extremely important because we are talking about two important concepts. One, CTP, NRTP, and one, when you have to take the registration. First, we'll take an important concept, NRTP. A repeatedly asked question that you can find in your ICI, RTP or mock test paper or exam paper is CTP, NRTP. Casual taxable person and non-resident taxable person. You'll always find in return filing chapter, CTP was not along with NRTP, CTP was always along with regular taxable person. So there are some common points, right? There are some common points. You can think of CTP as a one-side lever. who always loved regular taxable person. Who always loved regular taxable person. But regular taxable person kicked him out. On that, you can take CTP as a one-side lover, a male candidate, and RTP as a female candidate. Right? On a special day, on her birthday, which comes only once in a year, annual return. Regular taxable person did not even invite CTP. Therefore, annual return is only applicable for regular taxable person. It is not applicable for CTP. So, don't you think that that one-side lover will be deeply affected? Will be deeply affected. So, that one-side lover is deeply affected and is looking for some support. Who's that support? NRTP. So, that one-side lover finally finds his love in a non-resident party. NRTP, non-resident taxable person. And this one-side lover will surely call RTP on his wedding. You left me, now come. I am with NRTP. But the fact is, the love of this one-side lover is forever. So this CTP and NRTP will not be forever. They are all for temporary purposes. They are all for temporary purposes. So when you see this one-side lover showing his new love, NRTP to RTP, both of them knows it is temporary. It is temporary. Right? So that is the logic of your CTP and NRTP. Because their love will be short-lived. Very short-lived. So with this background, please understand the difference between CTP and NRTP. Both of them occasionally undertakes the transaction of supply of goods or supply of services. Occasionally. That is the word, occasionally. Though we are calling it as temporary, the right term is occasionally. CTP has a condition that that transaction should be in course or furtherance of business. For NRTP, that condition is not there. They want to be very strict with NRTP, so that condition of in course or furtherance of business is not there. CTP is a person where he is not having any fixed place of business in the state where he is getting registered as CTP. I'll give a practical example. Adani of Gujarat coming to Tamil Nadu. Adani of Gujarat in Gujarat is regular taxable person. Only for Tamil Nadu when it's coming for business exhibition or a trade fair, he's a casual. So for Gujarat, he's a regular taxable person. For the purpose of Tamil Nadu, he is, because he will come, participate in the business exhibition or trade fair there in Odisha and then go away. He's not having any branch in Tamil Nadu. He's not having any branch in. But what about NRTP? NRTP is not having any fixed place of business or for that matter residence throughout India. NRTP is also coming to same Tamil Nadu for same business exhibition. But that NRTP is not having any fixed place of business or even for that matter residence throughout. Though we are talking about NRTP registration in Tamil Nadu, but the focus is it is not having any place of business or residence throughout India. Clear? And this is all taken from the definition. Registration for CTP is based on PAN of CTP. But for NRTP, PAN of authorized signatory. And registration application for CTP will be normal application REG 01. For NRTP, it will be a special application REG 09. Return filing, we have already discussed that. Return filing for CTP, GSTR 1 and 3B and final return GSTR 10. Annual return is not there even for ಅದಕ್ಕೆ we need the CTP found a friend in NRTP, right? But what is for NRTP? Normal return is GSTR 5. Final return not applicable. For NRTP, neither annual return nor final return. ITC, we have discussed this also. Normal provisions of ITC applicable. He can take credit on anything and everything. But NRTP cannot take any credit except IGST portion on import of goods. IGST portion on import of goods. Clear? These are given in different chapters. Definition, section 2, registration, this chapter, return filing from return filing chapter, ITC from your ITC chapter. Now, what is special for all of them? One by one, we'll discuss, and this is a very common asked question, so you can easily be aware of it. Normally, if at all you're going to apply for registration, how much time you have for application of registration? When you're liable, how much time you have for application? Louder, louder. For them, no 30 days, advance 5 days, which means if you want to participate in a business exhibition in Tamil Nadu, which is going to be held from 1st April, make sure that you apply for registration 5 days in advance. Minimum 5 days advance. So 31st March, 30th March, 29, 28, 27, on or before 26th March, you apply. You apply 5 days advance application. 5 days advance application. Assume that business exhibition is going to be held on 1st April and you have applied for registration on 20th March. Have you applied in advance? Have you applied in advance? Business exhibition 1st April and you have applied on 20th of March. Business exhibition 1st April, you have applied on 20th of March. 20, not 28th, it is 20. 20. Have you applied 5 days in advance? Yes, you applied 11 days advance. Correct? Correct. Now, registration is given to you only on 6th April. Though you have applied on 20th of March, that is 20 of March, registration is given only on 6th April. From which date you can participate? Normally, you would have said, yes, one is work on time. Therefore, you should be allowed to participate in the business exhibition on 1st April. No. Effective date for him will be only when the registration is granted. Application normally after liability 30 days. Here, before participation, advance 5 days. Normally, if you do your work on time, everything good will happen. Here, you did your work on time. But you can participate only when the registration is granted. When the registration is granted. Whether you pay any advance tax or deposit in cash with for normal registration. No. If you want to take registration, are you required to pay any advance amount or deposit amount in cash with it? No. But CTP and RTP, they have to pay advance tax. A concept called as advance tax. Deposit in cash ledger, which is estimated net output tax liability. So they have to estimate. Advance tax in income tax is based on estimation. In income tax, advance tax is based on what? Estimated net output tax. What will be estimated output tax less estimated ITC? So what will be estimated net output tax liability? You have to pay that amount. Only then you will get. Normally, when you get registration, till how long it is valid? It is valid till it is cancelled. It is valid till it is CTP and RTP. No. It is valid maximum for 90 days. Maximum. And not always 90 days. 90 days or last date mentioned in the registration certificate, whichever is earlier. If you remember an example of NRTP, I took care of it. Registration was given on 1st April, but it was valid till 5th June. If you remember in return filing chapter, we took this data to understand GSTR 5. Registration is given on 1st April and it is valid till 5th June. Whether 90 days are over? No. Why 5th June suddenly? Because maybe the trade fair is getting over on 5th June. The trade fair itself is getting over on 5th June. Clear? Maximum, don't tell 90 days. Maximum 90 days or last date mentioned in the registration certificate, whichever is earlier. Can you apply for extension? Yes, you can apply for extension, but there are conditions. You have to apply for extension before your original validity is over, and again you have to pay advance tax based on estimated net output tax liability. And again it will be valid only till maximum 90 days, or again last date mentioned on the extended registration certificate, whichever is earlier. Again 90 days maximum plus 90 days maximum. 90 days plus 90 days is not the answer. Maximum 90 days plus maximum 90 days. It can be less than 90 days. It can be less than 90 days. Can you apply for second time extension? Tell no. You come. You're coming again. You please have a branch here. You don't get registered as CTP NRTP. You get registered as regular taxable person. So extension will be granted only once. Extension will be granted only once. Second time extension not allowed. Second time extension not allowed. Clear? Clear? That is your entire concept of your CTP NRTP. Why they are very strict with CTP NRTP? Because they'll come for some time and they'll go back. When they go back, it is difficult to recover the tax. It is difficult to recover the, therefore so much strict conditions. So much. Supposing your advance tax paid is more than actual liability, can you take the refund? Yes. You file all your returns and you can take the refund. You can take the refund. Are you guys clear with this understanding of CTP and RTP? Right. You just know the logic. You'll find it very, very simple why things are so complicated for them. Why things are, if you see all the headings, I have given in such a way that every point you are forced to remember for others. For others, things are not so. For normal people, things are not so strict. For them, things are very, very strict. Very, very. Why? Adani of Gujarat, when he is coming to Tamil Nadu government will find it difficult to recover any taxes because Adani is not having any branch in Tamil Nadu. And Trump of USA, when he is coming to Tamil Nadu government will find it more difficult to recover any taxes from Trump because once gone, it is difficult. But wait, if Adani has a branch in Tamil Nadu, Trump Incorporation, foreign company, has a branch in Tamil Nadu, what would have been your answer? If Adani had a branch in Tamil Nadu, proper place. Trump Incorporation, foreign company, had a branch in Tamil Nadu, what would have been your answer? Louder. No CTP, no NRTP. People actually confuse this point. There's no CTP, there's no NRTP. Though it is a foreign company, it will take regular taxable person. Because if I don't tell this point, NRTP, always will think, oh, NRTP na, foreign company na, okay, always. No. Foreign company, can it have regular taxable person registration? Yes. Adani of Gujarat coming to Tamil Nadu with a branch, with a proper setup. Lot of companies who are not having their base in Tamil Nadu, but they have branch setup in Tamil Nadu. What registration they take? Normal, regular taxable person. Regular taxable person. So don't go with that mindset that foreign company means NRTP. No. Can foreign company have regular taxable person registration? Yes, very much. If they have branch setup, they'll have regular taxable person registration. Now, the last part of this chapter where you're talking about your registration. When it is required, when it is not required. Important. When it is required, when it is not required. Right. Now, please understand this area. There are 3 people who will never ever take registration irrespective of their turnover. In Tamil Nadu, you might have turnover of 100 crores or 1000 crores or 10,000 crores, but you will not take registration. Who are they? Person who are having exclusively exempt supply or exclusively non-taxable supply or exclusively supplies which are taxable under RCM, which are taxable under RCM, which means we are not talking about the recipient, we are talking about the supplier. I am supplying to you, all my supplies are taxed under RCM. So it is not about you. For you, compulsory registration. For me, no registration. Not applicable for metal scrap dealer. Why? Unregistered person to registered person is RCM. But that unregistered person will not remain unregistered forever. So this point for RCM is not applicable for a metal scrap dealer. They want him to get registered once 40 lakhs, 20 lakhs or 10 lakhs is crossed. See, there's a difference between two people. GTA. I am GTA. All my supplies are under RCM. My turnover may be 100 crores. I need not take registration. I need not take. Now, if I am a metal scrap dealer, I am unregistered and you are registered, you will pay RCM. You will also pay RCM. You will also pay RCM if you are all registered. But they are not giving me benefit of never to take registration. Once I cross 40 lakhs, 20 lakhs, 10 lakhs, I should take. Now read this exception. This point is not applicable for a metal scrap dealer. But forget about metal scrap dealer for the time being. 3 cases where a supplier will not take registration irrespective of the turnover. Irrespective of the sales, he will not take registration. 100% exempt supplies, 100% non-taxable supplies, 100% RCM supplies, not from the angle of recipient but from the angle of, I repeat, not from the angle of recipient but from the angle of, why? If it is from the angle of recipient, compulsory registration, ulta. For you, you are paying RCM means you have to take compulsory. If you are not registered, you have to take compulsory. So it is not from the angle of the recipient, it's from the angle of suppliers. Right? 3 people who will never take registration irrespective of the turnover. Rather, section 23 we have discussed when we have discussed 40 lakhs, 20 lakhs and 10 lakhs. Discuss the example of Tamil Nadu, Telangana and Tripura. Clear? Now that is the first point. Second, agriculturalist. Agriculturalist to the extent of supply of agricultural produce out of cultivation of land. And please remember, agriculturalists can be only individual and HUF. This is also as a passing reference we have discussed. Agriculturists cannot be a company. So you will not call a company as an agriculturist. It can be only individual and HUF. Agriculturist turnover, supposing that agriculture's turnover is 100 crores. Agriculture's turnover is 100 crores. Agriculture's turnover is 100 crores. You are not going to take any registration. You are not going to take any registration for supply of agricultural produce. Supposing if I am an agriculturist, if I have out of 100 crores, 90 crores is out of agricultural produce. 10 crores is my other income. It is my other supplies. Other, will I take registration? Yes. But still, I will not pay GST on 90 crores. No, it is not exempt. It's a beautiful point. It's not because of exempt. Supposing I am dealing with strawberries. Strawberries are exempt? No. I'll take a practical example to make you understand. I am dealing with 100 crores is my turnover. Very nearby. Nilgiris. A big market even for strawberries. So, Kunur. You can easily correlate. So, I am doing cultivation of say strawberries. My turnover is 100 crores. Will I take registration? I don't have any other supplies. Will I take registration? No. I will not take registration. But when I sell the strawberries to others, and when they sell to others, strawberry is having a rate of tax. Assuming say 5 or 12%, whatever it is, the next supply will have GST. The next person who's selling will have. So government is giving me help in terms of not collecting tax from me, but next person who's selling the strawberry will pay GST. Assume that strawberry is having say 12% rate of tax. Assume. So I will not pay GST, though my turnover is 100 crores. But the next person, supposing I sell to Palamudi Nilayam, and when they are selling, they will pay GST. Now I'll change the question. My turnover is 100 crores, 90 crores is strawberry, 10 crores is other supplies. In the earlier question, I was not at all registered. Now will I take registration? Yes. Will I pay GST? I'll pay GST only on 10 crores. Still, I will not pay GST on 90 crores. So that is the reason they have used the word to the, though I may be registered, but for the purpose of agricultural produce, I will be treated as if I am not registered, I will not pay tax. I will not pay tax. Look at the point. I am registered. Item is taxable. Still, I am not paying tax. I am registered. For my other 10 crores, I have to pay GST. I am Registered. Strawberry is having 12%. Assume. Still I am not paying tax. And if at all I were to tell this question, can there be a taxable supply made by a registered person on which GST is not there? What would have been a normal answer? Not possible. Item taxable, person registered, GST surely will be there. But this is an exception. This is an person is registered, item is taxable. Still he is not paying GST. Still he is not paying. Understand? ICA has not used, I have not said only for the sake of telling from 10%, ICA has come to 25%. This is in the balance 95% where ICA has not used its potential. This question, if at all is asked, first of all, you will even not be able to digest the question. What are they trying to ask? Because this agricultures will be registered. Item strawberry will be having a rate of tax 12%, but still your answer will be no GST on strawberry, because section 23 tells that agriculture is to the extent of supply of agricultural produce out of cultivation of land, no GST. On the balance and fruits, GST will be there. Clear? Now, there are other cases of relaxation. 3 persons, no registration irrespective of turnover, because 100% supply is exempt, 100% supply is non-taxable, 100% supply is under RCM. 1 person will not pay GST even if registered, even if the item is taxable, agriculturist to the extent of supply of agricultural produce. Now balance, we are moving to your compulsory registration. In compulsory registration, there are few cases where section 23 will help. Where section 23 will help, which means there's a fight between 24 and 23. Who will win? If there is a contradiction between 24 and 23, which will win? Section 23. No registration. 24 is compulsory registration, 23 is no registration. Who will win? Section 23. Section, which is the most powerful section? Turnover based registration 22, compulsory registration section 24, or no registration section 23? The most powerful is section 23, no registration. Then it is 24, compulsory registration. Then it is 22, turnover based registration. Now we are seeing your compulsory registration list. First, we'll close the cases where for sure you have to take compulsory registration. One we have already covered. As a recipient, if you have to pay RCM, compulsory registration. Next, if you have to pay tax under section 9(5), if you have to pay tax under section 9(5), 4 notified services under the section 9(5), ECO will pay. Neither the supplier nor the recipient. That ECO has to take compulsory registration. So we are actually talking about section 93, 94 RCM and 95. Correct? Next, if you're talking about special people, who are the special people? Input service, distributor, TDS, TCS. These 3 are the special people. GSTR 6, GSTR 7, GSTR 8. Input service, distributor, TDS, deductor, that is government, and now metal scrap dealer, registered metal scrap dealer, and TCS. TCS, when it is applicable? Supply is through ECO, consideration is also, just because there is sale through ECO, TCS will not be there. Supply through ECO, consideration is also through ECO, TCS. So compulsory registration. Other special people, OIDRS, OMG from outside India. OIDRS, OMG from these people, irrespective of their turnover, they have to pay tax. Compulsory registration. Who are the special people? 93 RCM, 94 RCM, recipient, 95 ECO. 95 ECO. Then ISD, TDS deductor, TCS collector. Then OIDRS from outside India, OMG from outside India. Then special agent. If at all you are talking about a scenario where you are supplying taxable supply of goods on behalf of another person. On behalf of, actually you have to change this particular 2 exemptions are not related to point number 10, they are related to point number 9. There are 2 relaxation given in this different shade, they are not related to point number 10, they are related to point number 9. They are related to point number 9. So I've just made this arrow mark change. Now, these are the list of special people who have to take compulsory registration. What is the list? Special people list. Recipient RCM. ECO. Recipient RCM 9394. ECO 95. ISD. TDS. TCS. OMG outside India. OIDRS outside India. Special agent. Schedule 1. Special agent. Schedule 1. Special agent. CTP. NRTP. CTP. NRTP. 10 special people. 10 special people. These list of 10 special people, these are all discussed in different chapters. Different chapters. For example, ISD, TDS, TCS, OIDRS outside India, OMG outside India, we had a passing reference in written filing chapter. 93 RCM, 94 RCM, ECO 95 we have discussed elsewhere. Right? RCM chapter. Correct? There was a separate chapter for that. Then special agent, we have discussed in supply chapter. We discussed in supply chapter. CTP NRTP. Just a few minutes back we have discussed CTP. 10 special people. 10 compulsory registration. Compulsory. There's one relaxation for CTP which we'll discuss. Other special people, no relaxation. Relaxation is only for CTP. Relaxation is only for. So 10 special people, compulsory registration. Compulsory. Now let us talk about relaxation for CTP. Now before I talk about relaxation for CTP, the only 2 points which are left out in this entire discussion is point number 1 and point number 9. What is point number 1? Interstate outward supply, which means one state to another state sales, one state to outside India, that is export sales, or sale to SEZ. Sale to, if at all it is goods, if at all it is services. I, as a passing reference, has already said that goods are like sons and services are like daughters. So government will always be very strict with goods. So for goods, it is compulsory registration. If I have only, if I have a turnover of say 15 lakhs, out of which only 50,000 is interstate sale, compulsory registration. The moment I have my first interstate sales, compulsory registration. Compulsory. So as a general concept, compulsory registration. That's an exception. Now, as a general concept for services, I need not go for compulsory registration. That will be turnover based registration. Turnover based. What is the turnover limit for service sector? 20 lakhs or 10 lakhs? 20 lakhs or 10 lakhs. Turnover based registration. Turnover based registration. So, a chartered accountant can have clients within the state or outside the state. Still, he can be enjoying the limit of 20 lakhs or 10 lakhs. But if you look at these things carefully, I have written turnover based registration in bracket not 22. I have written 23. Why? Initially, the moment I have interstate outward supply, 24 tells compulsory registration. Then 23 tells come here. Don't worry, I am here. I'll help you out. You don't take registration but follow the logic of 22. So you are caught by 24. 23 helps you out. But 23 tells that follow the logic of 22. Follow the logic of 22. Turnover based registration. Turnover based registration. Now, normally goods is strict, compulsory. Service, turnover based. But there is an exception. For goods sector, there is an exception where I will go for turnover based registration as per section 23. That exception happens to be notified handicraft goods. Notified handicraft goods. And for service sector, the exception is I have to take. See, normally it is lenient for service sector, but exception means it is strict. Take compulsory registration. The exception is Job work service, not any job work service. Job work service for jewelry sector. For jewelry sector. I'll make you digest this in a very simple way. If I have interstate sales, let us evaluate one by one. If I have interstate sales, normally for goods, louder. If I have interstate sales, normally for goods, louder. For notified handicraft goods, don't worry, don't take registration. You enjoy limit of 40 lakhs, 20 lakhs and 10 lakhs, then take registration. Turnover based registration. Turnover based for goods, turnover can be 40, 20 and 10. Normally service, a chartered accountant. Having few clients within Tamil Nadu, few clients outside Tamil Nadu. Interstate sales is there. What is the normal answer? Service sector, what is the normal answer? I have interstate sales as a service provider. What is the normal answer? No. Turnover based registration. Though you have interstate sales, still you take registration only when you cross 20 lakhs and 20 lakhs, 10 lakhs is not only for interstate sales, aggregate. Your clients within Tamil Nadu, clients outside Tamil Nadu, totally the value should be up to 20 lakhs or 10 lakhs. But one service sector where they tell that no. The moment you have your first interstate sales, take compulsory registration. What is that service sector? Job work service for jewelry sector. If I am doing job work for textile sector, turnover based registration. Turnover based. Clear? Clear? Are you guys clear with this understanding? That relaxation is given. And the same point, the same relaxation is there even for casual taxable person. So normally casual taxable person it is compulsory registration. NRTP compulsory, CTP compulsory. NRTP no exception, CTP one exception. If you're dealing with notified handicraft goods, then don't take compulsory registration. You can take turnover based registration. You can take turnover based registration. So that is the relaxation there. So this point which was left over is done. And what is the last point which is left out? It is not talking about TCS collector. If I am supplying through Amazon and Amazon has to collect TCS, Amazon has to take compulsory registration for TCS. We are not talking about Amazon. We are talking about myself. I am supplying through Amazon. I am supplying through Amazon. Right? So if at all, you are not talking about Amazon. Understand this. If I am supplying through Amazon and Amazon has to collect TCS, Amazon has to take compulsory registration. TCS collector. What about me? What about supplier? What about supplier who is supplying through Amazon? Supplier who is supplying through? Are you guys clear with this understanding? Person who has to collect TCS, compulsory registration. Now we are not talking about person who has to collect TCS. We are talking about person who is supplying through ECO where TCS is applicable. Where TCS is applicable. So for them, supplier of service who is supplying services through ECO where TCS is applicable, they need not take registration. They can enjoy the limit of 20 lakhs and lakhs. They can enjoy the limit of, which means though I am supplying services through ECO where TCS is applicable, but still I need not take registration. I need not. When I am not taking registration, just remember TDS TCS. When I am not taking registration, ECO will not collect TCS. Because if the supplier is unregistered, no TDS, no TCS. No TDS, no. Prima facie, TCS was applicable, but this supplier is unregistered. Therefore, TCS is not applicable. The same relaxation is for goods. The same relaxation is for goods. Supplier of goods who is supplying through ECO, supplying through say Amazon. For goods, I can take the example of say Amazon, where TCS is applicable because supplies through Amazon, consideration is also coming through Amazon. I need not take registration. I can enjoy the limit of 40 lakhs, 20 lakhs or 10 lakhs, but there's an extra condition. Though I will not be registered, but I have to take enrollment number. I have to take an enrollment number. I can take only in one state across India and only one time. Only one enrollment number I can take, and that too only in one state. Only one enrollment number I can take, and that too only in one state. Clear? Clear? And one illogical point they had said is, my turnover should be up to 40 lakhs, 20 lakhs, 10 lakhs. Obviously, in current year, they also checked that my turnover should have been 40 lakhs, 20 lakhs, 10 lakhs even in my previous year, which is unwarranted, but they are given. So, my turnover should be up to 40 lakhs, 20 lakhs, 10 lakhs in previous year, which was not required, but they have given. Also, my turnover should be up to 40 lakhs, 20 lakhs, 10 lakhs in current year. If in my current year, my turnover crosses 40 lakhs, 20 lakhs, 10 lakhs, then I have to take registration. Enrollment number will be automatically cancelled. I have to take registration. Enrollment number is just some kind of contact with GST department without getting registered. Without getting. Now, even this point, don't you think that service is very simple? For supplier of service through ECO, it's very simple. Don't take registration till 20 lakhs, 10 lakhs. No need of anything else. No need of enrollment. But supplier of goods through ECO, what TCS is applicable? Then it is complicated. Don't take registration up to 40 lakhs, 20 lakhs, 10 lakhs, but you have to take enrollment number. And that enrollment number you have to take in only once. And you have to take only in one state. You cannot take in multiple states. So that is complicated. That is complicated. See, relaxation is given to both. No need to take registration depending on your turnover for service, depending on your turnover for goods. But for services, it is very simple. Don't take registration up to your 20 lakhs, 10 lakhs. That's it. For goods, don't take registration up to 40 lakhs, 20 lakhs, 10 lakhs, but you get an enrollment number in one state and you cannot take one more time in any other state. Only in one enrollment number, that too only in one state. Additionally, make sure that your previous year turnover was also small, up to 40 lakhs, 20 lakhs and 10 lakhs. So this is the complication in your goods sector, which was not there in your service sector. Now, this area is not at all important. Questions normally are asked from your interstate sales. Interstate sales. Whether you have to take compulsory registration or you are not required to take compulsory registration. And at times special persons. He's made it easy by naming 10 special persons. All these 10 special persons for sure compulsory registration. Only exception was CTP, where you have the relaxation for notified handicraft goods. Notified handicraft goods. So that is all and all about your registration. Everything about your registration when you talk about important areas of your registration chapter. So when you talk about this tax invoice, debit note, credit note, understand that there are different types of documents that you have. A document can be a written document or a printed document or an electronic document, anything written, printed or electronic. Now, how to understand document chapter in a very simple way? When there is a supply, the document which will go is either tax invoice or a bill of supply. And if there is no supply, the document that will go is delivery challan. When there is supply, the document that will go is tax invoice or bill of supply. If there is no supply, delivery challan. It may be accompanied by e-way bill. If it is goods, if the goods are moving. If the goods are moving, it may be accompanied by e-way bill. But e-way bill is only for movement of goods. Movement of supply can be of service. But movement of goods is possible. A DJ, when he's going to an event for playing his instruments, so he is a supplier of service, but his instruments, goods are moving. So e-way bill is all about movement of goods. It has got nothing to do with supply of goods. It has got nothing to do with supply of goods, movement of goods. That is first type of document. Second, if there is any change to be done in tax invoice, supposing you have supplied 1 lakh units, finally it is found that it is not 1 lakh units, it is only 90,000 units. We are going to increase the value or decrease the value? You have supplied, finally it is found that it is not 1 lakh units, it is 90,000 units. Customer will call you. So you are going to increase the value or decrease the value? So decrease the value means you are going to give a credit note. You are going to change the value and GST, which means you are going to give a credit note. Supposing you have supplied 1 lakh units, in invoice you have raised for invoice for 1 lakh units, but while checking you found that you did not dispatch 1 lakh units, you have dispatched 1 lakh 3,000 units. And you have comfort with your customer also. He also said, yes, you have sent me 1,03,000 units. And he said that, no worries, I want that. Now for the differential 3,000 units, what you'll do? You'll increase or decrease. So you're going to give debit note. You're going to give debit note. And when you're getting registered for the very first time, you would have sold your customers. You would have given some invoice, but that invoice will not have your GST number. That invoice will not have your, which is very essential for the customer to take the credit. One of the important 5 elements for customer to take the credit is GST to the supplier. Now, you are in process of registration. You have sold to your customers. You have collected GST, but they cannot take the credit because your GST number is not there. The moment you get your registration, you will convert your normal accounting invoice to your GST invoice. You will put the GST number. You will put that is called as revised tax invoice. Don't go with the revised tax invoice, doesn't mean revision of tax. For revision of tax invoice, you have debit note, credit note. Revised tax invoice means when you are getting registered for the first time or when your suspension is revoked, birth or rebirth, so you would have sold your customers, but they cannot take the credit because your GST number is not there. The moment you get your GST number, you please convert your accounting invoice into revised tax invoice so that your customers can take the credit. Next, if at all you receive advances, GST is on advances for goods sector or service sector? Time of supply, GST is on advances for goods sector or service sector? Only service sector. So when you receive the advances, you have to give receipt voucher. And when supply is made, you will give tax invoice. You will give. Supposing 5 lakh contract is there, you have received 1 lakh advance. 1 lakh you will give receipt voucher. When supply is completed, you will give tax invoice for entire, not for 4 lakhs, for entire 5 lakhs. So that now customer can take the credit. You will get balance 4 lakhs, but you will give tax invoice for entire 5 lakhs. You will not pay GST on 5 lakhs. You will pay GST only on 4 lakhs. You will show invoice 5 lakhs, but you will subtract GST is already paid on 1 lakh. GST is already paid on, right, receipt voucher. At times you receive the advance, but for some reason the contract is cancelled and then advance is refunded back. You will give refund voucher. Normally receipt voucher is followed by tax invoice. Very rarely receipt voucher will be followed by when the contract is cancelled and amount received in advance is refunded back. So it is a rare scenario. It is a very rare scenario. Then you have documents for RCM. If the supplier is unregistered and it is RCM, 2 conditions. If the supplier is unregistered and it is a case covered by RCM, recipient will give, this we have discussed in IDC, one of the documents for taking the credit is self-invoice. Don't tell RCM means self-invoice. No. It should be RCM plus supplier should be unregistered. Self-invoice. Recipient himself will generate invoice and take the credit. And when such recipient is making the payment to the supplier, recipient will make payment only of price to the supplier because GST he himself will pay by one hand, cash ledger and get credit in other hand, credit ledger. Correct? So when such recipient is making the payment of price to the supplier, that recipient will give payment voucher. Now payment voucher will be given in RCM case by the recipient whether the supplier is registered or unregistered. See, self-invoice will come only if the supplier is, but payment voucher will be given by the recipient whether the supplier is registered or, and understand that all the documents that we are discussing can be given only by a supplier. Three important concepts. These documents can be only given by a supplier. If GST is only from the angle of supplier, it's only from the angle of, therefore debit note and credit note, you only look from the angle of supplier. Because if a supplier gives credit note, customer will give debit note. But we don't talk about it. We are only looking at the supplier. GST is only from the angle of, there are only 2 documents from the angle of recipient. Self-invoice and payment voucher. Self-invoice and payment voucher. So these are the only 2 documents which are from the angle of which are from the angle of your recipient. Now, another concept. All the documents that we are discussing can be given only by a registered person. If you are unregistered, you cannot give document. Exception, delivery challan. Delivery challan can be given by a registered person as well as unregistered. Both the concepts are clear? All the documents are only from the eyes of supplier. Exception, RCM, self-invoice and payment voucher. It is from the angle of recipient. Second thumb rule, all the documents can be given only by registered person, including self-invoice and payment voucher. They can be given only by registered person. Exception, delivery challan can be given even by unregistered person. Can be given even by unregistered person. And there are few thumb rules in section 32 and 33. All these documents are discussed only in one section, section 31. Debit note, credit note, section 34. All other documents, section 31. 32 and 33 tells a very simple story. If you are unregistered person, you cannot collect tax. That's it. 32. 33, if you are a registered person, you can collect tax, correct tax, and please show that on all documents, including invoice. You have to give the breakup. This is the price, this is the tax. This is the price, this is the... You cannot write it together. This is the price, this is the tax. And all the document will have something called as serial number or invoice number or bill of supply number or delivery challan number, correct? This number will have 16, maximum 16 characters containing alphabets, numbers and only 2 special characters. Containing alphabets, numbers and only 2 special characters, dash and slash. Dash and technically hyphen, so, but I'm making it simple. Dash slash. Dash slash. So it can have maximum 16 characters. Right, for big stores which have multiple branches, they'll have different way to identify from which branch invoice has been executed. So they can have all these things. But maximum 16 characters. Is there any format of any document? No. There's no format. What all contents should be there, it is given. But there's no, for example, I can write my company's name on the top of the invoice. I can write also at the bottom of the invoice. I have to write my GST number. I can write on the top. I can write on the left hand side. I can write at the bottom. I can write anywhere. Contents are given. Format not given. I have to write, I should give these contents. In what format? I will decide. I will decide that. Now, what is done is, all these documents are given together to understand when to raise the document, what is the time limit to raise the document, and who has to raise the document. Now, who has to raise the document, we have already discussed. Who will raise tax, invoice, bill of supply? Who will raise? First answer me, supplier or recipient? Louder. It is only the supplier. And registered or unregistered? Registered. Who will give delivery challan? First, supplier or recipient? Supplier. Registered, unregistered? Any. So here it is, any. Who will give revised tax invoice, debit note, credit note? First answer me, supplier or recipient? Registered, unregistered? Right. Who will give self-invoice and payment voucher? RCM documents given by recipient. Registered, unregistered? Right. Who will give refund voucher and, refund, receipt voucher and refund voucher? It is only supplier for advances. For registered, unregistered. This we have indirectly discussed. How I made it simple? All the documents are only from the eyes of exception, RCM, self-invoice, payment voucher. Second thumb rule. All the documents are only given by exception, registered or simple. So that is done. Now, when these documents are raised, so one by one we'll discuss when these documents are raised. Tax, invoice, bill of supply. This is at the time of supply. When supply happens, either it is tax invoice or it is bill of supply. Now, when there is tax invoice, 2 conditions. Tax invoice can be given only by a regular taxable person, not by a composition scheme dealer. Regular Regular scheme person. Regular scheme person. I should not use regular taxable person because it can be even given by NRTP. So regular scheme person. It can be your regular taxable person, casual taxable person, NRTP, OIDR. So that is tax invoice. Tax invoice, regular scheme, other than composition scheme. Plus, items should be taxable. Item should be, what are the two conditions? Regular scheme, taxable item. Regular scheme. Now, if I answer this automatically, you know the answer for bill of supply. When bill of supply is raised? Louder. So first, it is there at the time of composition scheme. Second, regular scheme, but item is simple. Right? Can there be a combo of tax invoice cum bill of supply? Yes. Both taxable item and exempt items are sold together. Yesterday in one of the questions we had this point. For finding out consignment value. But there's a condition. Customer should be unregistered. If you look back at that question, they were silent whether customer is registered or unregistered. But if I want to give tax invoice cum bill of supply, see, this is one document. I am supplying to you one taxable item as well as exempt item. And by the way, day-to-day basis, we get these documents. If you walk into any confectionery stores, you'll purchase taxable items as well as exempt item. But you get only one document, which is tax invoice cum bill of supply. You get only one document, which is tax invoice cum bill of supply. Why? You guys are unregistered. When we walk into the stores, we are actually technically unregistered. But if it is given to registered person, for taxable items, separate document, tax invoice. For exempt items, separate document, bill of supply. Clear? There's only one condition for tax invoice cum bill of supply. What is that condition? Customer should be unregistered. Combo, we call it as combo document. Combo document given by a regular scheme person when he is selling both taxable item as well as exempt item. What is the condition? Recipient should be unregistered. If he is registered, two documents, tax invoice separately, bill of supply separately. Now, when is delivery challan issued? What is the thumb rule for delivery challan? When there is delivery challan can be given by registered or unregistered person. Okay, fine. When is delivery challan given? When there is no supply. When there is, you see all these points, you'll find one thing very constant. Delivery challan is given when there is supply of liquid gas, quantity is not known at the time of removal. I am supplying some item, whether it is a liquid item or a gaseous item or any item, but I don't know the quantity. I'll send it to you. I have sent 100 units, you'll accept only 10 units. So when I'm sending you 100 units, what is the document? Delivery challan. You accept 10 units. What is the document? Tax invoice. Balance 90 units are coming back. What is the document? Delivery challan. I'm supplying you something, but I don't know how many units you will be accepting. Delivery challan. Though it is for supply, but I'm not sure of the quantity of supply. So I'll be giving delivery challan. Second, transportation is for reasons other than this was the point I'm saying. It's not, there is no supply. ICI is shifting all these tables and benches from Araspuram branch to Tudilur branch. Delivery challan. Next, job work. I'm sending the goods for job work. What is the document? Whenever you are giving the goods to job worker, is it supplied? You will give it to, you are giving your dress material to tailors. Who's tailor? Job worker. Are you selling the fabric to tailor? No. You are giving the fabric to tailor. Delivery challan. When the work is done, you will get back the shirt. Delivery challan. Both for fabric, for shirt. That is a no, sir. Job worker, tailor has done a work. He'll be giving invoice. Yes, he'll be giving invoice, but not for the shirt. He'll be giving invoice for stitching charges. That is supply of service. We are not talking about shirt. That is for supply of service. And for supply of service, he is having 30 days time. He is having 30 days time. So when fabric goes, delivery challan. When shirt comes, delivery challan. For job working charges, tax invoice, but that is not related to shirt. That is for his job work, stitching charges, which he can give invoice within. Generally, he will give you along with the shirt, but he is having time, 30 days. And that amount he is giving you is not for the shirt, it is for the stitching charges. It is for the time. Any other cases? Simple. Delivery challan, very simple concept. No supply, delivery challan. Goods are moving, no supply, delivery challan. If there is supply, tax invoice or bill of supply. Tax invoice or bill of supply. And when this tax invoice or bill of supply has to be given? We have discussed that yesterday. So this was a detailed discussion done. For goods, no breathing time. Goods are like sons for a father. And services are like daughters for a father. For goods, no breathing time. Immediately. For services, normally 30 days. Banking sector, insurance sector. So there were totally how much due date of invoice was there? 3 plus 1 case for goods. 4 plus 1 case for that we have already discussed. This is nothing but due date of invoice. Due date of invoice. Delivery challan, when it has to be given? Immediately. Whenever the goods are going out, immediately. When you are giving fabric to job worker, delivery challan. When shirt is returned back, delivery challan. When you are giving your motor vehicle to mechanic shop for repairs, delivery challan. If it's all for a company, then it's all delivery challan. The goods should go out only on the basis of a delivery challan. Clear? Clear? When you talk about e-way bill will be there whether it is tax invoice, bill of supply or delivery challan. E-way bill has got nothing to do with supply. If the goods are moving, e-way bill. If the goods are moving, e-way bill. If the goods are moving, people confuse e-way bill with supply. No, e-way bill has got no connection with supply. Okay, I'll give you an example to make you understand this point. Coimbatore to Salem via Palghat. Coimbatore to Salem via Palghat. Tamil Nadu e-way bill limit is 1 lakh. But which is not applicable for your exam because every state will have a different limit. But interstate movement e-way bill limit across India is 50,000 consignment value. Now whether you will go with 1 lakh limit or 50,000 limit. Supply is Coimbatore to Salem. Intrastate supply or interstate supply? CGST, SGST or IGST? Louder. CGST. So limit will be 1 lakh or 50,000. Emotion. No, it's not 1 lakh, it is 50,000. Why? It went via, which is Aaron? Supply is intrastate, but movement is, so limit is, right? It's all within your syllabus. You have circulars, all these points will be there in your study mat. Okay, I'll change this. Now don't go wrong. I'm supplying from Coimbatore to Coimbatore Special Economic Zone. What limit? Tamil Nadu limit 1 lakh or interstate movement limit 50,000. Louder. Louder. Sutta emotion. It is interstate supply, IGST. But movement. ICA has not used the potential. I mean it by every statement that I tell. I mean it. Give me an opportunity to set your question paper. I'll make your life a big hell. Right? And I've now, after 1.5 days, you actually know what I mean. Though I have shown you only samples, but that is the scope. And ICA is going to that level. Be prepared. I'm not asking you to be prepared at a very high level, but make sure that you give due respect to the points. Just a few seconds back, I said, please don't make this mistake. E-way bill has got nothing to do with supply, but you are emotionally attached to supply. The moment I said yes, he said interstate supply. Therefore, you went with 50,000, correct? But movement is Intra. Movement is? So limit should have been? Though 1 lakh questions will not be asked, but they will test whether what limit you have to see. E-way bill has got nothing to do with supply. Nothing to do with. So e-way bill will be along with tax invoice or bill of supply. E-way bill also will be along with delivery challan. When you're sending the goods to job worker, are you supplying to him? No. But if the amount is more than the limit of e-way bill, for interstate movement, it is 50,000. For intrastate movement, it will differ from state to state. It will differ from if the amount is crossing the limit of 50,000 or state limit, or you have to give e-way bill. Delivery challan with the e-way bill will have nothing but the contents of delivery challan plus vehicle number plus supporting document. It is not the main document. It is a supporting document. Yes, not talking about the next important step. Rather, ICA focuses only on these two areas. The focus of ICA is only on revised tax invoice and debit note and credit note. Revised tax invoice is given when? Is given when? At the time of birth and rebirth. Birth and rebirth. Birth and rebirth. So, whenever registration is granted to you, birth or revocation of suspension, rebirth. These are the exact two cases where you'll have one more thing, first return. Birth and rebirth will always have revised tax invoice for your customers and first return for you. Birth and rebirth. Revised tax invoice and first return. First return is nothing but normal return for a group of months together. Group of months together. Birth and rebirth. And please understand, the 30 days significance is so much that you cannot miss it. At the time of birth, you will get the opportunity of giving revised tax invoice only and only if you have applied for registration within. Just understand the power of 30 days. If you don't apply within 30 days, 1st April, you are liable. You have applied on 15th May. You have applied on within 30 days or after 30 days. What all problems you will face? First problem, you can take the credit only from 15th May. You cannot take the credit from 1st April. You will pay output tax from, but ITC from. This is problem for you. Second problem, you cannot take the credit on the stock as on 31st of March. Section 18, you cannot take the credit as on stock contained in inputs. Forget about capital goods because capital goods is not covered that. You cannot take the credit even on stock. Otherwise, you would have taken. Otherwise, you would have taken the credit even on the stock. So, no credit from 1st April to 14th May. No credit on stock which is lying as on 31st of March. This is all the problem for you. What is the problem for your customers? From 1st April to 14th May, you have sold the goods to your customer. These are all your problems, your purchases. Now, it is not your purchases, your customers' purchases, which is your sales in your customers' purchases. You would have sold goods from 1st April to 14th May. Your customer will have accounting invoice. Can you give him revised tax invoice? No. Can he take the credit? No. If you've already collected GST, he'll call you and get the amount back. He'll call you and because he cannot take credit. He cannot take the credit. You will not be in a position to give revised tax invoice. You will not be in a position to give. Got that? That is the power of 30 days. That's the power of 30 days. Now, in both the cases, birth or rebirth, the moment you are birth plus 30 days, rebirth normal. The moment you are already registered, your registration was suspended, now it is revoked. The moment you are reborn, you can give revised tax invoice, no condition, because you have already registered. The moment you are born, that is a birth or rebirth, you can give revised tax invoice within. Don't mix 30 days and 1 month. Now it is within 1 month if you are born from the date of grant of registration, because only then you will know your GST number. It is not the date when you are liable for registration. It is date from the date of grant of registration. Supposing you are liable on 1st April, you applied on 25th April. Your effective date of registration is 1st April, but you get the registration on 20th May. You get the registration on. So for all the sales between 1st April and 19th May, you gave only accounting invoice. So now you want to help your customers to give revised tax invoice so that they get the credit. So for all the sales between 1st April to 19th May, you can give revised tax invoice within 1 month of what? When did you know your GST number? Though it is effective from 1st April, when did you know? 20th May, grant of registration. From 20th May, 1 month, you can give your revised tax invoice. And if it is rebirth, 1 month from the date you are reborn. From the date of revocation of suspension. From the date of revocation of suspension. Clear? Clear? That is revised tax invoice for you. Repeatedly asked question. Repeatedly asked question. Now, credit note, debit note. Credit note is for what? It is all from supplier's point of view. Increase or decrease? Louder. So, credit note is for decrease. Credit note is for decrease in taxable value or tax. Or credit note is for supply return. Supply return is also decrease. I sold you, now it is return. Either my invoice value was 1 crore, now I am making it as 90 lakhs. So I have to give 10 lakhs credit note. Or entire 1 crore products are returned back. Supply return. Supply return, credit note. Or there is deficiency in supply. Either quantity is less or quality is less. I said you it is 1 lakh units, but actually it is 90,000 units. Or I said you it is X quality, but it is actually Y quality. It is lesser quality. What I'll do? Decrease. So what I'll give? For deficiency, I'll increase the value tax or I'll decrease the value tax. What is the document? Decrease in value, decrease in tax, supply return, deficiency. I'll be giving debit notice for what? Exactly ulta. Increase in value, increase in tax. That's it. That can be an escalation price. I have one example I have already given. I have supplied you 1 lakh units, but suddenly I found that it was 1 lakh 3,000 units. So what I'll give for extra 3,000 units? Supplementary invoice. Or I said that as of now my price is 1 crore, but I don't know the cost. I have the right to increase my price by 10%. Suddenly when the work is over, I tell that no, it cannot be 1 crore, it will be 1 crore 7 lakhs. So what I'll do? 1 crore invoice I already given. For 7 lakhs, what I'll do? Debit note. Supplementary invoice. Debit note is otherwise called as supplementary. The other name of debit note. Rather, there's only one case throughout your GST Act where there's a pet name given for a document in the Act itself. Debit note is otherwise called as supplementary invoice. Supplementary invoice. Now, government is happy with debit note or happy with credit note? Debit note, government is happy or credit note, government is happy? D or C? Government is happy with debit note. So, debit note is mandatory or optional? Debit notice, you have to pay extra output tax. Credit notice, either you give GST credit note or you give normal credit note. Don't have GST. You don't reduce the output tax. Customer need not reduce the input tax credit. Debit note is mandatory, but credit note is optional. Government is happy with debit note or credit note. So one more point. Debit note is without any conditions. Without any conditions. Credit note has got a condition that if you are reversing your output tax, customer should reverse ITC. Customer should reverse. Also other condition, there's a time limit. You can give credit note not later than 30th November of next financial year or actual date of annual return of that financial year, whichever is. So, government is happy with debit note. It is mandatory. There is no time limit. There is no condition. It is mandatory. There is no time limit. There is no condition. Government is not happy with credit note. It is optional. You may give GST credit note or a normal accounting credit note without GST. Without. Plus, there is a time limit. This time limit you have discussed a lot of times. Plus, it is conditional. You can reverse your output tax, but your customer has to reverse proportionate ITC. Clear? Clear? That is all about your debit note and credit note. Now, what is the document for RCM? What are the two documents for RCM? Self-invoice and both will be applicable only in RCM cases. But self-invoice will not be applicable in all the cases. It will be applicable only and only when the supplier is and payment voucher will be given by the recipient whether the supplier is registered or. So both are applicable only in RCM cases. But for self-invoice, there are two conditions. RCM case plus supplier is unregistered. And in that scenario, self-invoice will be given immediately at the time of receipt of goods or services. And for payment voucher, there is only one condition. It should be a RCM case. Whether supplier is registered or unregistered, you have to give payment voucher. When you are making the payment. When you are making the payment of price to the supplier. Because if it is RCM, you will not pay GST to the supplier. You only pay the price to the supplier. That's it. That's it about your self-invoice and payment voucher. Receipt voucher and refund voucher. Receipt voucher and refund voucher technically will only come in service sector. Because GST is taxed on advances only for service sector. When you receive the advances, what is the document? When you receive the advances, what is the document? Receipt voucher immediately when you receive the advance. Immediately when you receive the, but when the advance is refunded back. Normally receipt voucher is followed by tax invoice. Contract is for 5 lakhs. Now you pay 1 lakh advance receipt voucher. Then when the work is over, tax invoice. Tax invoice will not be for 4 lakhs. It will be for entire 5 lakhs. But you will pay only 4 lakhs. How? Tax invoice 5 lakhs plus GST minus what you have GST you have already paid in advance. That will be subtracted. So that is the way return is formed. Invoice will be for 5 lakhs. But you will pay GST only on 4 lakhs. Refund voucher is when you have received the advance against the taxable supply, but it does not materialize, which means the contract is cancelled. The contract is, and you have not yet raised tax invoice. You have only raised receipt voucher, but the contract is cancelled, and you have not yet raised tax invoice. So how to nullify the effect of receipt voucher? Because at the time of receipt voucher, you already paid tax to the government. On 1 lakh, you already paid the tax to the government. What to do? Raise a refund voucher immediately at the time of refunding the advance receipt. But the problem is refund voucher, when you give, you already paid 1 lakh GST on 1 lakh in advance. But when you give refund voucher, you cannot adjust in your return, which is illogical. They tell that you will get the refund of GST. But you have to apply for refund. Ideally speaking, they should have allowed me to adjust in return itself. I should not go in front of the department and ask for refund. So this receipt voucher and refund voucher are actually a headache. Receipt voucher is not a headache. Refund voucher is a headache. At the time of receipt of advance, I will pay GST. At the time of refund of advance, I will not subtract GST. I should have subtracted it from my return itself. But I will not subtract from my return. I have to apply for a refund. What is the better option? I would have ignored everything. The better option would have been invoice. At the time of receipt of 1 lakh advance, give a tax invoice. There are only two possibilities. Either the contract will happen or it will not happen. If it happens, already I have given the invoice. If it happens, I have to receive balance 4 lakhs. What I will give? Debit note, increase in value. If it happens, what I will do? Supplementary invoice. Invoice is already raised. So if it happens, what I will do? Debit note, supplementary invoice. So it will be for 1 lakh invoice, and debit note will not be for 5 lakhs. It will be only for properly it will go. I'm just recalling your debit note and credit note. Ulta, contract cancels. When I receive 1 lakh invoice, and when the contract is cancelled, I refund it. Credit note, supply return, credit. What is the advantage of credit note? I would have paid a tax on 1 lakh. When I am reversing tax on 1 lakh, I will reverse in my return itself. I'll reverse in my, I'll not go and apply for. So this entire concept is not relevant if you properly plan. You can go with tax invoice, debit note and credit note. Tax invoice, debit note and few MCQs with respect to receipt voucher. I'll make it simple. These are MCQs which are asked when you receive the advance and you are not sure of the tax. I'm dealing with two items, 12%, 18%. If I know advances receipt for 12%, I'll put GST 12%. If I know advances for 18%, I'll put GST. If I don't know for what, then what I'll put? Okay, not highest. Okay, I'll make the change. I'm dealing with two items, 5%, 12%. If I get the advance for 5%, I'll put GST 5%. If I get the advance for second item, 12%, I'll put GST 12%. I'm not sure. I'm just getting advance, but I'm not sure whether it is for 5% or 12%. Then I'll go with 18% revenue neutral rate. If you're not sure of the rate of tax, go with, it's not highest or lowest. Go with, fine. Now, if I'm not sure about the type of supply, supposing you are my customer having your branch in Tamil Nadu and Maharashtra, I'm in Tamil Nadu. If Tamil Nadu branch gives me advance, it is CGST, SGST. If Maharashtra branch gives me advance, it is, but this company gives me advance without telling that this advance is for supply which is to happen to Tamil Nadu branch or which is to happen to. So if I don't know whether it is CGST or IGST, which to go? If you're not sure of the type of tax, go with. If you're not sure of the rate of tax, go with. Clear? Clear? So that is here. These are all the different types of documents. And with respect to the last part of your invoices, different persons will have different types of. We are now focusing only on tax invoice. We are done with all the documents, different scenarios, different points. Now, when you talk only about tax invoice, only and only about, there are certain special points. What is the due date of invoice for goods generally? For goods, what is the last date for raising the invoice for goods generally? On or before? Whether you give to your customer or to your branch, on or before? On or before? For service sector, louder. For service sector, but for one service sector, banks and insurance, it is already discussed. Correct? Now, for service sector, but to your own branch. Recording in books or end of the quarter, which is not only for banks and insurance but also for telecommunication sector. Recall that? See, service sector, normally it is 30 days. But if it is banks, insurance, it is 45 days. But if it is to your own branch, it is not to your customers, it is to your own distinct person with a different VSC number. Then for banks, for insurance, for telecommunication sector, it is recording in books of accounts or end of the quarter. End of the, this we have already discussed while discussing your due date of invoice, correct? Now, certain other special points. This we have already discussed when you discuss your due date of invoice. Certain other special points. There's a concept called as daily consolidated tax invoice or bill of supply. We are discussing about all these points are for tax invoice as well as bill of supply. Consolidated. So if my customers are unregistered, condition number 1, and if they're not insisting separate tax invoice or bill of supply, and if the value is less than 200, not less than or equal to, less than 200, I'm talking about a retail store, 10 rupees, 20 rupees, 30 rupees, 40 rupees, 50 rupees, etc. Lot of sales are happening. I need not give invoice to each of the customer. What I can do? At the end of the day, I will not give to any customer. I will record all such transactions amounted to say 9,300. And I tell all such transaction, it means 3 conditions. B to C. B to Not demanding. These customers did not ask. Supposing if you tomorrow, I have purchased only for 20 rupees, but I want tax invoice. Should I give? Yes. Should I give? Yes. If the customer is demanding, I have to give. Third, each of the customer, the value including tax was less than, then I need not give to each of them at the end of the day. At the end of the day, what I can do? I can make a consolidated tax invoice or bill of supply and have it for my records, for my filing of returns and other purposes. I will not give to anyone. It will be with myself. So this concept is applicable for all sectors, food sectors or service sector, except one case, multiplexes, except where even if it is B2C case, even if customer is not demanding, even if the ticket value is less than 200, all of you sitting here can picturize yourself in that position. Correct? Spy Cinemas, one ticket, Ajit movie, in night bola. Right? What will happen? You will get a message. You will, nowadays that paper has gone because of GST change, GST law change. You'll get a e-ticket. You'll get a e-ticket. Correct? So they have to give you separately. They cannot tell that no, we will prepare consolidated tax invoice or bill of supply. They have to give you two important points. First, they cannot go with consolidated tax invoice or bill of supply. Second, they have to mandatorily give you electronic ticket. 2 points. First, the concept of consolidated tax invoice bill of supply does not apply to them. Second, mandatorily they have to give you electronic ticket. Normally, whenever they talk about electronic document, it is an option. But for them, mandatory. But for them, clear? Clear? This is one important concept. All these are from the angle of your MCQs or statements. These are repeatedly asked questions. Whether true or false, they'll give you few scenarios. Second, there's a concept called as monthly consolidated tax invoice. It sounds similar to consolidated tax invoice, but it's very different. That concept is only for a banking sector and insurance sector. And it is without any conditions. What are the 3 conditions for daily consolidated tax invoice or bill of supply? B2C. Here it can be B2B or B2C. Second, not demanding. Here it can be whether demanding or not demanding, doesn't make any difference. Third, less than 200. Here it can be less than 200, more than 200, more than 2000, more than 20,000, more than 2 lakhs, more than 20 lakhs, whatever. No condition. And that whether that daily consolidated tax invoice or bill of supply was given to any customer? No. But here it will be given. It will be, this concept is what? For all transactions of a bank or insurance company to a particular customer during a month, they will prepare a consolidated monthly tax invoice and give it to each of them. If I am bank and if you are all my customers, I'll prepare a monthly consolidated tax invoice for all your transactions, give it to you. Monthly consolidated tax invoice for all your transactions and give it to you. Monthly consolidated tax invoice for all your transactions and give it to you. I'll give it to you. I'm consolidating transactions, not of all customers, not of. See, when you talk about daily consolidated tax invoice, consolidating multiple transactions of multiple customers. Here, multiple transaction of a single customer, and it is actually given. It is actually given. So that concept is there. Third, in certain cases, you'll write all the details on the invoice, but recipient's details is not mandatory. Recipient's names, address is not mandatory. Normally, even if recipient is not having GST number, you have to write name and address. But at times, recipient's details is not mandatory. When similar condition of 200, it should be B2C. B2, second, not demanding. Recipient is not asking, please write my name and address. If he is asking, you have to give. Third, value is less than 50,000. Value is less than 50,000. Then what will happen? I need not write recipient's address. All of us experience that. When you go to any, say, retail store and purchase ready-made garments, we purchase for generally less than 50,000. Correct? Look at the invoice. Whether your name and address is there? No. Why? You are B2C. You are B2. You are not demanding your name and address. Third, amount is less than. Amount is less than. Correct. All of us experiences that. We will get a separate tax invoice. It is very different from consolidated. Consolidated means you will never get. Now you will get a separate tax invoice. Every one of you will get a separate, but your name and address will not be there on the invoice. So this is true for all sectors, and for multiplex, anyways not required. For multiplex, there is a special point. Even for multiplex, name and address will not be there. But for multiplex, there is a special point. Whether or not these conditions are satisfied, your name and address will not be there. Whether or not these conditions are satisfied or not satisfied, your name and address will never be there. Your name and address will never be there. That's an extra point. Other sector, you satisfy the condition, customer name and address is not required. Multiplex, forget about conditions, name and address not required. And for one more special sector, which is supply of OMG, supply of OIDRS, or supply through ECO, whether within India or outside India, whether the supplier is in India or outside India. Three categories: OIDRS service, OMG, supply by or through ECO, whether the supplier is of India or supplier is outside India. In such case, you have to actually write recipients state, and that will be deemed to be recipient's address. You have to actually write recipients state, and that will be deemed to be recipients. So that all are actually via internet. OIDRS, OMG, and via ECO, online platforms. So the moment you give your details, your address, they don't want your entire address, they want your state. That is sufficient. That is sufficient for them to find out your place of supplies. Your recipient address is sufficient. And next, in few sectors, invoice number and address of the recipient is not required. Name of the recipient will be there. Invoice number and address of the recipient. Name of the recipient will be there. No conditions. Invoice number and address of the. What are these sectors? Banks and insurance sector. You will not find invoice number, you will not find your address. Your name will be there. Your name will be there. Passenger transport service. This everyone sitting here can picturize. When you get the ticket, whether it is air ticket or train ticket, your name will be there. But PNR will be there. That is not the invoice number. Invoice number not there, and your address is not there. Your address is not there. For these two sectors, banks, insurance, and passenger transportation service, invoice number not required. Address of the recipient, not. Name of the recipient will be there, but address of the recipient not required. And finally, there is an extra document, consignment note. Extra document which has to be given by one person. See, all these earlier points are all relaxation. We're all in terms of something less. You don't put this, you don't do that. But this last point is extra thing. For goods transportation agency, in addition to the contents of invoice, they should give the details of consignment note. They have to write the details of consignor. Who is the consignor? Name and address of the consignor. Name and address of the consignee. What is the type of goods? What is the weight of goods? What is the type of goods? What is the weight of goods? Which vehicle number it will go? In which vehicle these goods are going to go? Who is going to pay GST? Because it can be FCM or RCM. It can be FCM or extra details. Extra details will be there for GTA. See, there were two ways of reading all this. Either read them separately or read them as a general rule and see the exceptions. And see this is a very simple way. What we have done, we have took 5 special aspects, understood what happens generally, and it is for which sector, and it is for very simple way to complete. Very simple way to complete. All the special types of invoices is covered here. You have not even left any single point, and these are all questions for your MCQs or maybe statements, whether it is true or false. State whether the following statements are true or false. You have to give reasons, and these reasons are from here. And the last part of your document chapter, which is important, is your e-invoice and dynamic QR code e-payment. E-invoice and your e-payment. In both the cases, you'll have QR code, dynamic QR code. Dynamic QR code means what? It will keep changing for each transaction. Normally, when you go and make the payment in a shop, it is not dynamic QR code, it is static QR code. You will get the details of the opposite person's bank account, but you have to type the number. But dynamic QR code means every invoice will have separate QR code. So if you go to Decathlon and if you scan for payment, it is for that invoice. Automatically number, what, supposing you purchase for 10,399, the 10,399 also will come. All you have to give is your PIN and process it. It will keep changing for each invoice. Dynamic QR code. Now, both these cases are applicable for different transactions. One is e-invoice QR code and one is e-payment QR code. E-invoice QR code is for B2B transactions and exports. B2B transactions and exports. E-payment QR code is for B2C transactions other than export, which means they are mutually exclusive. They are mutually, e-invoice QR code is for B2B plus exports. E-payment QR code is for B2C other than export. And please understand the purpose of e-invoice QR code. E-invoice QR code is to eliminate fake invoicing, to catch hold of bill trading. And e-payment QR code is to promote digital payments, to make sure that all of the people are making digital payments. So first, for which transaction they are applicable? E-invoice QR code. B2B transactions, customer should be registered, plus exports. Though customer is not registered, it is applicable. E-payment QR code, exactly ulta. B2C other than exports. Next, e-invoice QR code will be there only on 3 documents: tax invoice, debit note, and it is not on any other document. Tax invoice, debit note, and credit note. Will it be there on revised tax invoice? No. Receipt voucher? No. Refund voucher? No. It is only on tax invoice, debit note, and credit note. Whereas e-payment QR code is applicable on tax invoice and bill of supply. Tax invoice and bill of supply. Simple. When you are going and making the payment, whenever you are going to stand there and the final, see, when there is supply, there can be only 2 things, either tax invoice or bill of supply. So amount comes, you will pay. Tax invoice and bill of supply. Tax invoice and bill of supply. Are we clear with the basic point? B2B plus exports, tax invoice, debit note, credit note. And e-payment QR code, B2C other than exports, tax invoice and bill of supply. Now for whom it is applicable? It is not applicable for everyone. Only and only if your aggregate turnover is more than 5 crores. More than, for e-invoice QR code it is 5 crores. And for e-payment QR code it is 500 crores. For e-invoice QR code it is 5 crores. For e-payment QR code it is, and whenever you talk about aggregate turnover, it is pan-India turnover. You are trying to see big or small. You are trying to see whether you are a big person or small person. So you will always go with, so you will see aggregate turnover of current year or previous year. Louder. Louder. But here you are going one step further. You are seeing aggregate turnover of all previous year, right, starting from 17-18 till date. Right, starting from 17-18 when GST started till date. And if any of the previous financial year it was more than 5 crores, e-invoice is applicable. If any of the previous financial year your aggregate turnover is more than 500 crores, e-payment QR code is applicable. I'll help you out with an example. In 1920, your aggregate turnover was 5.3 crores. In all other years, 17, 18, 18, 19, 20, 21, 21, 22, 22, 23, 23, 24, 24, 25, the year which is over, it was all less than 5 crores. But in one year, 1920, how many years are there? We are standing in which financial year? 25, 26. What are the previous financial year? 17, 18, 18, 19, 19, 20, 20, 21, 21, 22, 22, 23, 23, 24, 24, 25. How many years? Out of 8 years, 7 years, it was less than 5 crores. Only in 1 year, 19, 20, it was 5.3 crores. Whether e-invoice is applicable. And indirectly, if you understand this, once applicable, it is always applicable. Once applicable, it is always clear. 5 crores and 500 crores. 5 crores and so when it is applicable, we have clearly understood it. But for few people, though your aggregate turnover is more than 5 crores for e-invoice QR code or more than 500 crores for e-payment QR code, it will not be applicable for certain sectors. And to remove those certain sectors, you have already seen the previous chart. Tell me who are all the special sectors. Just see this chart. Who are all the special sectors? For whom special invoices are there? Banks, insurance, passenger transportation service, goods transportation agency, multiplex. So telecommunication sector, forget about it. Forget about it. What are the other 4 sectors which are there? Banks, insurance, passenger transportation service, GTA. Now, surprisingly, you will find here that for all these special sectors, for all these, which I am highlighting in yellow color, banks, insurance, GTA, passenger transportation service, multiplex. Banks, insurance, GTA, passenger transportation service, e-invoice QR code, not applicable. E-payment QR code, not applicable for any of their transactions. For any of their transactions. Clear? Clear? Plus one other sectors for which e-invoice QR code is not applicable is your government departments and government, that is government, local authority, and as you said, wait, it is not government company. Here it is only government. Government, local authority, with central government, state government, and local authority. Government and SEZ unit. SEZ, for developer of SEZ, it is applicable. SEZ unit, not applicable. So for whom all e-invoice QR code is not applicable? Banking sector, banks, NBFC, financial institution, insurance, passenger transportation service, goods transportation agency, multiplex, government departments, local authority, that is government, not government companies. Government companies, it is applicable, only government. SEZ units, SEZ, and for whom your e-payment QR code is not applicable? Banks, insurance, GTA, passenger transportation service, multiplex, and OIDRS from outside India. OIDRS from outside India to your Indian online recipient. OIDRS from outside India. Easy way to remember. Easy way to remember. And questions are only and only from the sector. Which person, which transaction, what document? Which person, which transaction, what document? 3 parts. Believe me, this will run in your ICI material for about 10-15 pages to explain this simple thing. It will keep on explaining this, that, this, that. Final conclusion is this. Which person, which transactions, what document? Which person? We are split in 3. First is which person. Second is which transactions. Third is which documents. First is which person. Second is which transactions. Third is which document. Everything should be satisfied. Everything should be satisfied. That's it. You're done with your document chapter. Then there is a theoretical portion which is explained. When you talk about your e-invoice QR code, it is from e-invoice portal, which is called as invoice registration portal. And finally, it will give invoice registration number, IRN number, which is a 64 digits number, and that 64 digits is that number which is actually converted to QR code. Whereas e-payment QR code is not from government portal. It's not from. You have to design a software to make that QR code. E-invoice QR code is generated by the government portal. Whereas your e-payment QR code, government will not help you. You go to a software vendor, you ask him that for me it is applicable. For every transaction, I'll keep a system in front so that customer can scan and make the payment. You please help me design. Every invoice we should have separate QR code. Right. So it is by a private software vendor. That you have to generate your e-payment QR code. And you have to show that customer is not obliged to make digital payment. Customer may choose to make digital payment or customer may still give in cash. So you are forced to give an option. Customer is not forced to make digital payment. Both are different. You should give an option to make digital payment. Customer may make digital payment, customer may make cash payment. So that is about your e-invoice QR code, which is dynamic, e-payment QR code, which is also dynamic. But there are differences. Are you guys clear with this entire understanding? Now, when you talk about your place of supply, why is place of supply relevant first of all? To determine the type of supply, whether it is intrastate supply or interstate supply. How to determine whether it is intrastate or interstate? Location of supplier, place of supply, same state, intrastate supply. Different state, right? But it is not always true. Now, when you talk about your import of goods, it is always interstate, which means you need not know location of supply, you need not know place of supply. By default it is. And that is the reason you have what? Custom duty breakup is BCD, SWS plus IGST. You never have CGST, SGST. You always have IGST. Correct? Next, for import of services, it is interstate supply, but you cannot directly find it out. You have to find out place of supply. You should know that the location of supplier is outside India, location of recipient is in India, and place of supply is in India. So for this, you have to find place of supply. For the first point, you are not required to find place of supply. For the second point, you actually have to find out place of supply. Without place of supply, you cannot find out or conclude that it is import of services. Then, if supplier of goods or services is in India, which means supplier is in India and place of supply is outside India. Supplier India, place of supply. So it will be what transaction? Interstate supply, sure. But what type of transaction? So supplier in India, place of supply outside India. Are you finding out place of supply? Yes, you should find out place of supply. You should find out. It is interstate supply, which means it is IGST transaction. But please understand, it may or may not be export. Normally people feel that if supplier is in India, place of supply is outside India, it is always no. It may be export, it may not be export. It may be export. For export, there are extra conditions to be satisfied. Recipient should also be outside India. Consideration should be in convertible, foreign exchange, etc., etc. Got that? It may or may not be export. Now, supply to SEZ or supply by SEZ. When you're supplying to special economic zone and when you're supplying, supply is to SEZ or supply is by SEZ. Supplier is SEZ or customer is SEZ. Answer is. Now understand here, you need not find. For when you're supplying to SEZ or when you're purchasing from SEZ, you don't find place of supply. By default, it is interstate supply. Now understand that not all SEZ transactions are zero rated. If supply is to SEZ, then it may be zero rated. SEZ to you, it is the IGST transaction but no zero rating. U to SEZ, it is IGST transaction and zero rating will be there. Zero rating will be What is zero rating is discussed in detail in final. Zero rating means finally there will be no taxes in India. Got that? It is just like export. It's just like export. So when you talk about these cases, you find that in few cases you don't even find a place of supply. Let us go ahead. Supply of goods to foreign tourist, international tourist. Supply of goods to international tourist. Not services, only goods. By default it is so that he can go outside and get the refund while going outside. Whatever GST was there, he will not get the refund of amount, price. He will get the refund of GST. He will get the refund of, when he's going outside to back to his country, he can show the invoice, he can show the goods, and GST will come back to him. GST will come back to him. When he purchased from Indian shop charge 1 lakh plus 18,000 GST. When he's going outside, he'll show the invoice 1 lakh 18,000 plus the item, he'll get back 18,000. He'll get back supply of goods, not services. This is not for service. Supply of goods to international tourists. Without even finding out place of supply, it is always IGST. It is always IGST. Clear? Clear? It is always IGST. Then, these are all special cases. Whatever we have discussed are all, what are the 5 special cases we have? Import of goods, IGST, no need of place of supply. Import of services, IGST, place of supply you should find. Supplier in India, place of supply outside India, IGST, place of supply you should find. It may or may not be export. Supply by SEZ, supply to SEZ, IGST, place of supply is not required. And if it is supply to SEZ, then it is zero rating will be there. Supply of goods to international tourist, it is IGST. No need to find out place of supply. No need to find out place of supply. These are all special cases. General case. Now what you understand is only the general case. General case. If the supplier is if location of supplier is Tamil Nadu, place of supply is Maharashtra, IGST. If location of supplier is Tamil Nadu, place of supply is also Tamil Nadu. For the first time we are hearing something called as CGST. Rest all cases are all IGST. LOS, Tamil Nadu, POS, Maharashtra, IGST. LOS, Tamil Nadu, POS also Tamil Nadu. It is CGST. This is general case. And general case also has an exception which we have discussed yesterday. If you remember one of the RCM case, I said it is always RCM, it is always IGST. Priority sector lending certificate, it is always RCM, but not always IGST. Security lending scheme. Security lending, I said an example of myself and Praveen. And I said that I may lend my shares to Praveen. Right? But we both will not know each other. What is relevant for CGST, SGST or IGST? LOS and? By the way, security lending scheme, I am the lender, Praveen is the borrower. Who will pay GST? I am the lender, supplier, Praveen is the borrower, recipient. Who will pay GST? Security lending scheme is FCM or RCM? Louder! Louder! Who will pay GST? Praveen sir will pay GST? Right. For him to find out whether it is CGST, SGST, he requires 2 things. Place of supply he can find. What is the other thing? Location of? Does he know supplier? Does he knows that I am the supplier? When he doesn't know I am the supplier, will he know location of supplier? So what will be the answer for him? It is always, if you are not able to find out LOS or POS, if you are not able to find out LOS or POS, then by default it becomes. Rather, this a few minutes back, we discussed indirectly even in a concept called as receipt voucher. If you are not sure of type of tax, here also you are not sure of type of tax. Now Praveen is going to be under RCM. He might find out place of supply, but where is the location of supplier? He doesn't know who is the supplier. Forget about finding out location of supplier. So it will be IGST. So general case also has an exception. If you're not able to find out LOS, POS, forget about it. Go with IGST. Go with IGST. Clear? Clear? But if you look at things carefully, in special cases, there were 3 instances where you don't even find out LOS, don't even find out POS. Import of goods, SEZ transactions, supply of goods to foreign tourist. Import of goods, SEZ transactions, supply of goods to foreign or international tourists. You don't need LOS, you don't need POS. Directly the answer is IGST. Directly the answer is IGST. This is entirely given in your section 7 and section. Whatever we have discussed is summary of section 7 and section 8. Section 7 and section 8 of IGST Act. Section 9 is at the time pass, but it has been asked by ICA at the time pass. Section 9 talks about logic, basic common sense. If I tell your location of supplier is Tamil Nadu, but place of supply is in water. Place of supply is in water. Territorial waters of India. Now, what are the states where possible answers may be there? Tamil Nadu. We'll take only 2 states, Tamil Nadu and Andhra. So, Tamil Nadu to this point and Andhra to this point. Tamil Nadu to this point is say 8.6 nautical mile. Andhra to this point is say 9.6 nautical mile. So, where is the place of supply? Louder. So, what is the type of transaction? LOS, Tamil Nadu, POS. So, what is the type of transaction? Louder. Intrastate, CGST. But if I change this and I tell that no, Andhra it is 7 nautical miles. Then my place of supply is? My place of supply is? What is the type of transaction? IGST, so interstate supply. Common sense. Section 9 talks about your common sense. Clear? Clear? That's section 9 for you. Now, questions are generally not asked from whatever you discuss. Questions are asked from section 10, place of supply for goods, and section 12, place of supply for services. Domestic transactions. International transactions are not that for you. Domestic transactions. Section 10 and section 11. Now, when you talk about goods, you split into 2. General transactions, special transactions. General transactions, first 3 categories against registered customer and against unregistered customer. So, general transactions again into 2. Customer is registered, customer is unregistered. Customer is registered, customer is right. First, we'll see a very simple case. General transaction if the customer is unregistered. We have discussed this. We have actually discussed this while solving one of the test papers. So, if supply is to unregistered person, if you know his address, louder, location of recipient, and if you don't know his address, your own location. But when I say address, you need not know entire address, you can know only his, normally address means entire address, but here knowing state is sufficient. Knowing state is clear? Clear? So, a lot of mechanic shop owners from Kerala come to say Aditya Automobiles or Rameshwar Automobiles. Correct? Apply for them. They are regular visitors in all these shops. Correct? They are coming from Kerala, but they are purchasing from Tamil Nadu. It is B2C. They are all unregistered. If Aditya Automobiles knows their address, regular visitor, regular person, then answer is place of supply is Kerala. Place of supply is supplier Tamil Nadu, place of supply Kerala, IGST. If Aditya Automobiles does not know, a new mechanic is coming and purchasing goods from Aditya Automobiles and Aditya Automobiles is not having his data on their software, then answer is place of supply is Tamil Nadu. Supplier Tamil Nadu, place of supply Tamil Nadu, CGST, SGST. CGST, simple, over. So, general transaction B2C over. B2C. What about B2B? B2B is split into three parts. First, supply involves movement of goods. Supply involves movement of goods. If supply involves movement of goods, it is the location of goods at the time of termination of goods, where the movement terminates for delivery, where the movement terminates for. If I am in Tamil Nadu, my customer comes from Gujarat, or he gives an order from Gujarat, right? And he's telling that please send me the goods, and he's registered. Now all my customers are. Where is the place of supply? Where is the place of supply? Gujarat. But obvious. But I have to write these terms. Location of goods at the time when the movement terminates. At the time when the movement terminates. So I have to write these words. But answer is simple. If I am there in Tamil Nadu, my customer is there in Gujarat, what is my place of supply? But you have to write these terms. Location of goods where the movement terminates for delivery to the recipient. Clear? Now what if supply does not involve movement of goods? Location of goods at the time of delivery to the recipient. Indirectly, we have discussed this while discussing due date of invoice. This delivery means handing over the ownership. I'll repeat the same example for your convenience. I gave you machinery on lease. 5 years. Supply of goods or supply of services? Supply of goods or supply of services? Supply of services not answered here. It will be answered in section 12. It will be answered in section. After 5 years, I sell you the machinery. I am in Tamil Nadu and you are in Madhya Pradesh. So, first I gave you the machinery on lease for 5 years. That is supply of service, section 12. We'll discuss that. Now, I am selling you the machinery. Where is the machinery lying? Your place. Where are you located? So, what is the place of supply? But while writing, you have to tell location of such goods at the time of delivery means constructive delivery, handing over the ownership. So place of supply is Madhya Pradesh. Over. Place of supply is next. Where it is a chain transaction. What is a chain transaction? I'll explain this chain transaction. A to B, B to C. A to B, B to C. Where the goods are delivered by the supplier to the recipient or any other person on the direction of third person. A to B, B to C. A to B, B to C. A is there in Tamil Nadu, B is there in Maharashtra, and C is there in, say, we'll take state, say, Karnataka. But the movement happens directly from A to C. Movement happens directly from supply are 2. Supply 1, supply 2. How many supplies are there? Supply 1, but movement is 1. Movement is A will bill to B but ship to C. Bill to ship to. Bill to. Now understand that what is the answer for A to B. Just forget about technicality. What is the answer for A to B? What is the place of supply? Location of supplier is Tamil Nadu. Place of supply. Obviously, it should be Maharashtra. And this is what they are trying to tell. Place of supply is your principal place of business of third person. Principal place of business of, they call B as third person. Which is technically wrong, but forget about that technicality. They call B as third person. Principal place of business of third person. So what is the transaction? IGST. But place of supply is Maharashtra. The revenue will first go to Maharashtra. Now, what about second transaction? Location of supplier is Maharashtra. Where is the place of supply? Logically think, where is the place of supply? But in the second case, movement happens. Though it is not happening from B to C, but it is happening from. So here, you get place of supply because of principal place of business of third person. Here you get place of supply is Karnataka because it is location of goods where the movement terminates for. So you have to explain that. That is because of section 10(1)(b) and this is because of section 10(1)(a). And logically think, forget about the technicalities. If I would have asked you normally, you would have given me right answer. A is selling to B. and B is in Maharashtra. Where is the place of supply? Maharashtra. B is selling to C and C is in Karnataka. Where is the place of supply? Answer is same, but you have to write the reason. For A to B, movement is not happening. So it is principal place of business of third person. Third person is B. For B to C, finally movement is happening directly from A to C. Though it is not happening from B to C, but it is happening from A to C. It is location of goods where the movement terminates for delivery to the recipient. Over. Clear? So we have completed general transactions B to C, one scenario, B to B, three scenarios. B to B, three scenarios. And special transaction. What are the special transaction? Special transactions are where the goods are assembled or installed at site. Assembly or installation is there. Where is the place of supply? Where the installation happens or assembly happens. I am supplier in Tamil Nadu. You are my customer in Gujarat. But I am assembling your plant and machinery in Madhya Pradesh. Louder. Now it is not Gujarat. It is Madhya Pradesh. I repeat, I am supplier in Tamil Nadu. You are my customer in Gujarat. But you are asking me to install a machinery in Madhya Pradesh. Place of supply is, normally it would have been, but for installation assembly it is Madhya Pradesh. Simple. Right. And finally, second special transaction where goods are supplied on board a conveyance. So when you talk about this point, people confuse this most of the times with food services. No, food is service. It will not come here. Food, packed foods will come here. Lays, Pepsi will come here. T-shirts, when you're going by train, T-shirts, imitation jewelries, they'll all come here. So when you're traveling in train or airline or any other vessel, and the goods are sold there, and the goods are, so what is the place of supply? Location where the goods are taken on. I'll give a very simple example. You're traveling in a train which is, say, Lokmanya Tilak, starting from Kanyakumari, say to Mumbai. You are entering the train in Coimbatore. The T-shirt seller is entering the train in Tirupur. And you are purchasing the T-shirt when the train is in Bangalore. What is the place of supply? What is the place of supply? Tirupur, where the goods are taken on board. He took 100 T-shirts, but he sold you only one T-shirt. Place of supply is for 100 T-shirts or one T-shirt? One. He'll not pay GST on 100 T-shirts. He'll pay GST only on. Clear? Clear? Are you guys clear with this understanding? That is everything about your goods. So any question for place of supply for goods, you are prepared. You are prepared. That is everything about your section 10. How to split it? General, special. General 2, B2B, B2C, special 2. Installation and on board a conveyance. On board a general, when you talk about B2B, there are three subparts. Now when you talk about services, you are talking about certain lengthy points. Right? Now, services, you have a lot of services, you have to remember which type of service and then things will be simple. Very, very simple. First, general category, which means it is not covered in any of the specific categories. There are a lot of points which are special. If it is covered by special points, don't come and see general. General category has to be seen in the end. Now, if you are supplying to registered person, B2B, we'll call it as B2B. If you're supplying to, if it is B2B, answer is recipient's address, B2B. If it is B2C, if address is available, location of recipient. If address is not available, don't you think that this was the entire summary for goods only? Whatever we are discussing goods is one liner they have given. What was the answer for B2B, all the three categories? Recipient only. Though they use different languages, where the goods, where the location of goods or the movement terminates for delivery to the recipient, or principal place of business of third person, or location of the goods at the time of delivery to the recipient. Everything, nothing means it is recipient. Correct? Correct? So B2B is recipient place. B2B is B2C. If address is known, recipient. If address is not known, But for goods, address does not mean entire address. Only the state is sufficient. Only the state is. This is nothing but goods only. Customer is registered, his place. Not registered, you know his address, his place. Not registered, you don't know his address, your place. It is your place. Clear? That is general answer. That is general answer. Right? Now, all special scenarios. All special scenarios. Make sure that next for 20-25 minutes you keep your mind open. You find things very simple if at all you follow the sequence. If at all it is performance based services. And performance, which performance? We are talking about training and performance appraisal. Training and performance appraisal. If it is B2B, it is recipient's address. If it is B2C, where such performance happens. If at all, I am there in Tamil Nadu and you are there in Karnataka. If at all you are registered person, answer is always Karnataka. But if you are unregistered person, you are there in Karnataka, but you are unregistered person. If the training happens in Goa, answer is Goa. If the training happens in Madhya Pradesh, answer is Madhya Pradesh. If the training happens in Maldives, answer is Maldives. See, the training happens in 3 places: Goa, Madhya Pradesh, Maldives. If it is B2B, it is not relevant. Answer is Karnataka. But if it is B2C, if training happens in Goa, Goa. Training happens in Madhya Pradesh, Madhya Pradesh. Training happens in Maldives, it is Maldives. Keeps changing. It keeps changing. Don't worry, all the examples are actually given on the right hand side, but I want to just focus on the concept. Same thing is given there on your right hand side. Right? But performance is also having one more side of it. There are other performance based services like restaurant, outdoor catering, personal grooming, fitness, beauty treatment, health services, cosmetic plastic surgery. Similar kind of wordings you have also seen in block credit. Personal consumption. Correct. Restaurant, outdoor catering, personal grooming, fitness, beauty treatment, health services, cosmetic and plastic surgery. This answer is very simple. They tell that this is also performance based. You have to be there to give you the service. But for this, answer is very simple. Whether you are B2B or B2C, I will not differentiate. Answer is location of performance. Which means I am supplier. I will always be taking myself as the example. I will be the supplier in Tamil Nadu. Now, you guys supposing are the customers in Karnataka. Right? But there is a function in Delhi where I am going to give you beauty treatment services. What is the place of supply? Whether you are registered or unregistered, answer is Delhi. I am going to give you beauty treatment services for your wedding, say in London. Whether you are registered in Karnataka or unregistered, answer is London. Clear? So that is second performance based. One type, answer depends on B2B, B2C. Other type, answer doesn't depends on B2B, B2C. It is the same. Now, next, events. Next is events. Organization of an event, including ancillary services and sponsorship. So let us think of IPL event. Organization of event, including ancillary services and sponsorship to IPL event. So all the services related to IPL, organization event, including sponsorship. If it is B2B, B2B means customers, recipients, address, recipient's place. If it is B2C, then if the event is held in India, where the event is held, the event is not held in India. If the event is not, which means certain matches are say played in Dubai, then they don't want answers Dubai, they bring back to India, location of recipient. Supposing I am the supplier and you guys are the recipient registered in Karnataka. If you are registered in Karnataka, whether the event is happening in Goa or the event is happening in Madhya Pradesh or the event is happening in Maldives, Answer is Karnataka. But if you are not registered, if the event is happening in Goa, Goa. If the event is happening in Madhya Pradesh, but if the event is happening in Maldives, outside India, then it is location of recipient, Karnataka. Location of recipient, Karnataka. Clear? Clear? If the event is happening outside India, say Maldives or say Sri Lanka, then the answer is in the earlier point, in the earlier case, answer was Maldives or answer was Sri Lanka. But now answer is Karnataka. Answer is clear? Clear? For your events, there is one more category. For the entire IPL, organization of event, as ancillary services, including sponsorship, it's all one category. Other categories, admission to an event, tickets. And here they don't only talk about admission to event, they also talk about amusement park or any other place. Here they extend event to places also. So it is not only admission to event, but admission to any place. Say allowing you to go to Taj Mahal, or allowing you to go to Statue of Unity, or allowing you to go to Black Thunder. Any place including amusement parks. So it is not only event but also place. Tickets. Tickets can be for an event, tickets can be for a place. So here they are talking about tickets. Tickets for event, tickets for place. So what is the place of supply? If it is event, where the event is held. Where the event is held. If it is place, where the place is located. Now, I am the supplier in Tamil Nadu, you are the customer in Karnataka. You are the customer in whether you are registered or unregistered. Whether you are registered or unregistered. If the event happens in Goa, for tickets, answer is Goa. If the event happens in Madhya Pradesh, for tickets, answer is Madhya Pradesh. If the event happens in Sri Lanka, for tickets, answer is clear? Clear? So that is second part. Next. Transportation services. Transportation services. When you talk about your transportation services, one is transportation of goods and other is transportation of passengers. Transportation services. If it is transportation of goods, again B2B. B2B. If I am in Tamil Nadu, my customer is in Karnataka and it is registered, answer is always. But if I am in Tamil Nadu, my customer is in Karnataka and my customer is not registered, then it is the place where the goods are handed over, which means the starting point of goods. The starting point of, it is the location of the goods where they are handed over, where they are. So it is the starting point of goods. Starting point of, what will be the answer? Tamil Nadu. Because the goods are starting, the transportation of goods starts at, clear? I repeat, if my customer in Karnataka is registered, answer is, if it is not registered, then it is the location of the goods where they are handed over for transportation, which means origin of goods, when they are handed over for transportation, Tamil Nadu. Clear? Clear? Passenger, ditto same, ditto. If the customer is registered, if I am supplier in Tamil Nadu and my customer is there in Karnataka, registered. If the customer is registered, answer is Karnataka. If the customer is not registered, what was the answer for goods? It was the starting point of goods. Same is the answer for passengers. It is the starting point of passenger, where the passenger embarks the conveyance for continuous journey. Supposing train is going from Kanyakumari to Mumbai. I am entering the train at Coimbatore. What is the place of supply? Another person is entering the train in Tirupur. Another person is entering the train in Bangalore. Clear? Clear? That is the answer. Goods transportation and passenger transportation are in the same line. But for passenger transportation, there is one extra point which is not there in goods. Now, what is that extra point? Very logical point. And this extra point is only for B2C. If it is B2B, answer is always, so extra point is only for B2C. At times, you have the concept of pass, bus pass, train pass, right? So when you have the concept of pass, you'll be using it every now and then. You'll be paying yearly once, but you'll be using it every now and then. Now, whether they will know your place of embarkation for continuous journey? No. Because you will pay one time, but you will use multiple times. Multiple journeys. One pass, but multiple journeys. Normally, one ticket, one journey. But here it is one pass, multiple. One pass, multiple. In that case, they tell that we don't know. Supposing I'm flying in Indigo frequently. I may get a pass for Indigo where it may tell that throughout the year 100 times you can travel for this price. One time I may go from Coimbatore, other time I can enter from Mumbai, other time I may come from Kolkata. Correct. So, an answer is only, they have already taken the amount once. You have to find place of supply when they take the advance amount. You have to find place of supply when they take the advance amount. You're differentiating it. Supposing I'm taking a pass and I'm registered. My business is registered. What will be the answer? Location of registered. If it is not registered, then if they know your address, then it is location of recipient. If they don't know your address, location of supplier. So this is a special point which is not there, which cannot be there for goods. It is only there for passengers. Otherwise, transportation of goods, transportation of passengers is more or less the same. Clear? Now, related to this, you have something called as service on board conveyance. See, we are not talking about passenger transportation services. We are talking about services on board a conveyance. It is just like goods on board a conveyance. When you are purchasing t-shirts while traveling in train, it is supply of goods on board a conveyance, section 10. When you are having food while traveling in train, it is services on board a conveyance. When you are traveling, you are taking that service. What is the place of supply? It is not the point where you enter the train. It is the point where the train starts the journey. First schedule point of departure. I'll mix all the three. Train starts at Kanyakumari. Correct. Train starts at Kanyakumari. Ending at Mumbai. I am entering the train at Coimbatore. Ticket, passenger transportation service. Another person is entering the train at Tirupur. T-shirts. Who's selling the t-shirts? Another person enters the train at E-Road. Who's going to give restaurant services, food services. I am purchasing the t-shirt and having food at Bangalore. Now, tell me the place of supply for passenger transportation services, for t-shirt sale, for food sale. For passenger transportation, one by one, for passenger transportation service. If I am registered, and if I am registered, say in Gujarat, then place of supply is Gujarat. If I am not registered, then answer is Coimbatore, because I entered the train in Coimbatore. That is for passenger transportation. What about t-shirts? When the goods are taken on board, answer is always, whether I am registered or unregistered, answer is always, no, it doesn't depend. What about food? Whether I am registered or not registered, answer is always the same. Answer is Kanyakumari. Clear? Answer is not E-Road where he brought the food. Answer is Kanyakumari. First schedule point of departure of that conveyance. Now, last few services where you're talking about insurance services. Insurance services to registered person, his address. To unregistered person also, his address which is there on records. Because whenever you take insurance, obviously your address will be there. If you are registered, your GST registered address. If you're not registered, your address which is available on records. Always your address will be there with the insurance company. Now, what is related to insurance? Banking, financial services, including stockbroking. Banking, financial services, including for insurance company, B2B separate answer, B2C separate answer. For banking, financial services, including stockbroking, whether you are registered or unregistered, if your address is there, your address. If your address is not there, bank's address. If your address is not there, their address, supplier's address. At times, few banking services you take and they don't have your address. Supposing you take a demand draft, you can go and enter in, they take demand draft in any bank. That bank may not have your address. So it is location of supplier. It is location of supplier. Clear? Clear? And finally, coming to another important service, which is immobile property service. Immobile property service. Immobile property service. When you talk about immobile property services, it talks about not only immobile property but also boat and vessel. So services in relation to immobile property such as construction services, architect services, real estate agent services, also accommodation services. When you stay in hotel for 2 days or 3 days, accommodation services, also any other ancillary services. So it is immobile property related services, anything directly related to immobile property. Your architect service, interior decorator service, construction service, real estate agent service, stay in a hotel or any other ancillary services. Also stay in boat or vessel. If at all you are talking about that immobile property or boat or vessel is outside India. If it is outside India, they don't want answer outside India, then it is location of recipient. This we have already seen in one category. The same concept we have seen in events. If it is in India, if the immobile property or boat or vessel is in India, then location of immobile property or boat or vessel. I'll give a very simple example. I am the supplier in Tamil Nadu. I am designing your home. Your recipient in Karnataka. Your home is there in Delhi. Answer will be Delhi. It is in India. But your home is there in London. Your home is there in supplier in Tamil Nadu, recipient in Karnataka, but you have a house in London. What will be the answer? Location of recipient, Karnataka. Location of recipient, Karnataka. That is for your immobile property, boat or vessel. Clear? If you see entirely, technically speaking, we have covered everything except for 2 services and very simple services, though generally not asked. Telecommunication services and advertisement service to government. Telecommunication services divide into 2 categories, wire, wireless. Wire, if it is wire category of telecommunication services, place of supply is where the device is installed. When you get internet at ICI, it is it wire or wireless? It is not wireless. You get it by Wi-Fi or hotspot, but it is not wireless. Institute gets it by wire. So it is location where the device is installed. Wireless. Now what is the category of wireless? Basically example of your mobile phone or other telecommunication services which is wireless. Wireless also no issues if it is postpaid. Postpaid means billing address. Postpaid means simple. Whatever is your billing address, that will be there. Where the entire problem starts. The entire problem starts in wireless plus prepaid. I repeat, telecommunication service, wire. What is the answer? Device. Wireless. Postpaid. Billing address. Where is the entire problem? The entire problem is there in wireless plus prepaid. Wireless plus prepaid. Let us take the example of Jio, selling agent or distributor or reseller and customer. Right? Now, you may get your recharge generally done by your selling agent, reseller or distributor, or you may get it directly. When Jio is giving services to reseller, distributor or selling agent, place of supply is the address of the selling agent, distributor or reseller so that they can take the credit. So that they can take the credit. Correct? But when it is reseller to you or Jio directly to you, reseller to you or Jio directly to you, then basically two categories. If at all you're making the payment via internet banking, debit card or credit card, or otherwise cash payments, voucher sales or cash payments. If you are making the payment via internet banking, debit card or credit card, for sure your address will be there. So place of supply is your location of recipient. If it is say voucher sales or maybe normal cash payments, then place of supply is where the vouchers are sold or the prepayment is received, which means location of supply, which means location of supply. Clear? Generally it will not be asked, don't stress too much, but this is how it is drafted. Issue is not there in wire category. Wire category, device installed. Issue is also not there in wireless category, postpaid, because it is billing address. Issue is there in wireless plus prepaid. If it is Jio to a intermediary, reseller, distributor, selling agent, it is address of the reseller, distributor, selling agent. If it is reseller to you or Jio to you, if at all you're making the payment by way of internet banking, debit or credit card, it is your address because they'll have your address. If at all where voucher payment is done, you purchase the voucher and make the payment, it might happen still in northeastern states, or where cash payment is made, then location where the vouchers are sold, that is location of supplier, or where the prepayment is received, again that is location of supplier. So that is how it is, entire thing is being drafted, right? And finally advertisement services to government. We are not talking about normal advertisement services. Normal advertisement service will come in general category. If advertisement service is given to Reliance Limited registered, location of registered recipient. Reliance Limited is unregistered. If address is known, location of recipient. If address is not known, we are not talking about advertisement services normally. We are talking about advertisement service to. Why? Because when government is taking advertisement services, the reach is not only in that state, the reach is in multiple states. For example, if Tamil Nadu government is going for advertisement in Hindu newspaper, that Hindu newspaper is not only read at Tamil Nadu, few supplies will be at Kerala, few supplies will be at Karnataka, few supplies will be at even Andhra. How to find out place of supply? Based on number of copies of that Hindu newspaper sold in Tamil Nadu, given in Kerala, given in Karnataka, given in Andhra. These are different types, logical calculations there. I have not touched any of the rules because I am thinking rules will not be asked. So I have not touched any of these. Are actually given in rules. These are actually given in rules. I am only sticking to your provisions. So there is rule 3, rule 4, rule 5, rule 6. If at all you have time, if you have already gone through, you will easily understand. Very logical answers. Very logical answers are there. If you have already gone through, please go through it. If you have not gone through, ignore. Very less chance that rules will be asked. But if you have gone through, you will find very logical thing. Very logical bifurcation is there. Quite logical bifurcation is there. Clear? So one example of rule I have given you. One example of rule I have. Okay, I'll give you another example to make you understand it is very logical. Supposing Tamil Nadu government is giving an advertisement on a train. On a train which is traveling from Kanyakumari to Mumbai. Distance. What is the railway track distance within Tamil Nadu? What is the railway track distance in Karnataka? What is the railway track distance in Maharashtra proportionately? Because whenever the train is going to different places, based on the logically, the lengthier the track, the more will be the advertisement in that state. Correct? Correct. That is how it is calculated. Okay, I'll give you another instance where this makes sense. This is all rule 3. I'll give an example for rule 6. Your device. By that way, I will even complete the rules. Device. I've given you example for rule 3. I'll give you example for rule 6. Device. Supposing you're taking very high database internet connection for your firm, which is there in Coimbatore, Chennai and Bangalore. And you tell Jio, I want dedicated lines. I don't want normal internet lines which will go and come. I want dedicated lines which will connect my Coimbatore office, Chennai office and Bangalore office. I want uninterrupted internet supply and at a very high data speed. My device will be installed at Coimbatore, Chennai and Bangalore and dedicated line, special lines, which means normally when you get internet service, it is all along with different lines, and when the network is down, it is down for you. If it is dedicated line, it will be down for others, but not for you. Correct. What is the place of supply? What do you think? It cannot be on consumption. It is very difficult. Make it easier. Make it more logical, easier. Number of devices in Tamil Nadu. 2. Coimbatore, Chennai. Number of devices in Karnataka. 1. What you are telling is understandable. But when I am telling logical, it should be easier. Data consumption will be known at the end of the month. We cannot track it. So make it easier. Answer is? So if at all your billing is 1 lakh, place of supply for 2/3 of it is Tamil Nadu, for 1/3 of it is, okay, this is rule 3, rule 6. I'll give you an example for rule 4. I'll just have on this very logical calculation. Assume you're going for Hina Tours and Travels and you're staying in Taj Hotel. Forget about Hina Tours and Taj Hotel. Taj Hotel stay in Uttar Pradesh 2 nights. And in Jammu and Kashmir 1 night. You're paying combo. So what will be the ratio? 2:2. 2:2. This is given in your rule 4. This is given in your rule 4. Very logical calculation. Supposing you're going and staying in a property which is on the border of Tamil Nadu and Kerala, which is very possible for us, Anekati. Now, property is one. You're not staying in 2 Taj hotels. You're staying in that particular property. But it is partly there in Tamil Nadu, partly there in Kerala. Louder. Welcome to rooms. Area. You cannot tell which room I am staying. See, am I staying in Tamil Nadu side? Area. It is based on rule 4. Event. For events, there is a rule which is given in rule 5. Supposing you are paying for an event which is going to be there in 3 cities. Say Mumbai, Delhi and Chennai. Mumbai, Delhi and Chennai. For event, they cannot give a proper answer. They themselves have said that generally accepted accounting principle. So normally if it is 3 cities, please divide it equally. You don't go into too much details. Delhi, a big auditorium. Mumbai, a huge auditorium. Chennai, a small. Don't go into details. So what you do? Split it 1:1:1. 1 for Delhi, 1 for Maharashtra and 1 for Tamil Nadu. 1 for Tamil Nadu. Done with rules. Rather, see in all the rules. Rule 3, advertisement services to government. Rule 4 is a rule where you are talking about immovable property. Rule 5 is for your event and rule 6 is for your device. Rule 6 is for your logical bifurcation. Logical bifurcation is there. That completes our entire place of supply. Now you are prepared for any questions of place of supply. All that you know is how to break up. When we saw, okay, let us summarize services. General answer. Performance, 2 parts. Training, performance appraisal, B2B, B2C, restaurant, outdoor catering, etc. Same answer, whether B2B or B2C. Then events. Organization, sponsorship, separate answer for B2B, separate answer for B2C. Then admission, tickets. Same answer for B2B, same answer for B2C. Then Then we went for transportation. Transportation of goods, transportation of passengers, separate answer for B2C, separate answer for B2B, separate answer for B2C, but services given on board a conveyance. Whether B2B, B2C, same answer. Then insurance, separate answer for B2C, separate answer for B2C, but when it is banking and financial services including stockbroking, whether B2B or B2C, same answer. Then other services, immovable property, whether B2B, B2C, same answer. Telecommunication services, B2B, B2C, same answer, but different bifurcations. Different final advertisement services to government. Recipient is government. Whether B2B, B2C, same answer, but depends on the rule. I mean, logical bifurcation should be done as per rule 3. So that completes our entire understanding of your place of supply for goods, section 10, and for services, section 12. Section 12.